watching his moves full of cloud. Some call him evil, some call him foul, but I just smile and call him Daddy Powell. Will Jerome Powell nuke the market again? With a flick of his wrist, make fortunes disappear in the wind. Wall Street's a jungle, lions on the prowl, but the king of the jungle is old Daddy Powell. Oh, Daddy Powell. Oh, Daddy Powell. Every single time, it's like a fucking roller coaster ride. It's gonna be a crazy week, so hold on tight. Oh, Daddy Powell, don't bring me down. The numbers are flying, red ink and green. For some it's a nightmare, for others a dream. Degens are crying, theories disavow, all bending the knee to mighty Daddy Powell. Oh, Daddy Powell. Oh, Daddy Powell. Every single time, it's like a fucking roller coaster ride. It's gonna be a crazy week, so hold on tight. Oh, Daddy Powell, don't bring me down.
Oh, brother, oh, brother, oh, brother. Good morning, and happy Friday, TGIF, but it ain't no normal Friday. It is, in fact, a Jackson's Hole Symposium Day, so happy Friday to all of you who celebrate Jackson's Hole, because we're going to be doing it today, and it's all going down at 10 a.m., so we have about 55 minutes to get our minds right. And speaking of getting our minds right, I hope you guys don't mind if I spend a second or two sharing some recent thoughts that I've had, and I think it's important. Yeah, I think we should start off the show this way. So I ended up at some weird, it wasn't weird. It was weird that I was invited, but I went to it. I don't know. I'm a fancy fucking New Yorker. I get invited to shit. And this time I went to some sort of art installation that was also related to the premiere of a new anime show on Netflix. And I went there and I was there all night. And regardless to say, it was super fun. It was super cool. It was a culture that was completely new to me. And you know me, I'm a man of various cultures. Love to learn about a thing or two. Regardless, the night went late. I woke up this morning to get ready for Jackson Hole today, and I realized something. I ran into my first predicament, my first hurdle of the day when I was like, dude, you're out of coffee. So, you know what I do? I get the show ready, do everything I need to, slap on my flippy floppies, and I waddle on down to Whole Foods to get some iced coffee. And when I was there, I learned a very, very painful lesson. I am not the caliber of human meant to go to Whole Foods at 8 in the morning. I'm just not. I don't know how many of you in here have made that misstep. I don't know how many of you in here are that kind of a person. I don't know how many of you in here have never been to Whole Foods at 8 in the morning, but it's a special membership. Not that you have to show a card or something, but you can spot who's meant to be there and who's not meant to be there. So, for example, on one hand, you had a hungover dude in a buffalo shirt wearing flippy floppies screaming, "Where's the coffee?" Everyone else in the establishment, they were seemingly already done with the gym. It seems as if they already did their meditation. It seems as if they already did their journaling. It seems as if they already did their stretches. Folks, it was fucking 8 in the morning, and these people have already hit the pinnacle of health. I'm waddling around looking for the coffee, and these people, I at this point now, just out of like morbid curiosity, I want to know what's going on. I look in their carts. They have fucking chicken, asparagus, goddamn yams. These motherfuckers are buying yams at 8 in the morning to get their protein macros in, and I'm barely fucking hanging on. I don't know if I've ever been more depressed on a Friday morning than I am right now, because it was just so obvious that there's two classes of people in this world, and I am coming in clearly in the second class. Like, so evidently in the second class of people, while these people, they're still in their gym outfit, they're still like the sweat's drying. You could just tell they already crushed it. They hit the gym, they hit the stretches, motivation, dude, they're just better than me. Absolutely better than me. So remind me to never make that mistake again. Remind me that I should go when my kind of people are allowed to go, you know, like where I'm with like people like me, like, oh shit, I need like some coffee, like a midday thing. But Jesus, I am not a morning grocery store person. Those people are too good. They're too good. They have too much of their life figured out. And I'm just not there, and I honestly don't even know if I want to be there. In fact, I was tracking my Whoop shit, and it turns out my sleep recovery was 23%. And for those of you who don't know anything about Whoop recovery, that's horribly red. Like, I'm pretty sure there's people with terminal diseases that get better sleep recovery than I do. So not necessarily starting off the day exactly how I need to, but that's exactly why I'm currently wearing my luckiest of all shirts, and I'm ready to rip it, folks. Like, I think we could really turn this day around. Obviously, I purchased my coffee. I put on the lucky shirt. We listened to a little bit of Amy Kohrs, and we're going to get ready to rip it today. So that's the beautiful thing about being at rock bottom. You have nowhere to go but up. So let's get into the show. Let me do exactly what I'm being paid the big bucks to do and get you guys ready for this. Stock futures rise slightly ahead of Powell's Jackson's Hole speech. It's going down at 10 a.m. And man, oh man, is it going to be an interesting one. I've been pitching this to you guys for an entire week, and it's about to happen. I'm very, very excited. Bond market rate cut, bets face Powell reckoning at Jackson Hole. Oh, brother. Oh, brother, oh, brother, oh, brother. No one in the world knows what's about to go down. And this is actually a really good visual depiction of the entire stock market. Dare I say it, the global economy. And this is the little domino piece that we are all waiting on. Jerome Powell's Jackson Hole speech. Is he going to be dovish? Is he going to be hawkish? Because that's going to really be the deciding thing of, do we hold this trend line and break it? Or is he going to come in a bit more dovish and say, yeah, I could see some rate cuts and we pop? And I'm telling you this right now, the market has no idea if this is going to hold or if it's going to break. Right now, the betting market is all over the place of really a week and a half ago, we were confident of 25 bips, maybe even 50 bips. And now the market doesn't even know. It's almost a 50-50 shot that we don't even get a 25 bips rate cut in September. This is crazy. Fed Chair Powell set to deliver a big Jackson Hole speech today, Friday. Here's what Wall Street expects. You know what? They can say a lot of fancy schmancy things about the economic outlook and framework review, but at the end of the day, it's all going to come down to the market's interpretation, the trader's interpretation of, is he sounding dovish? Is he sounding hawkish? And man, oh man, actually, where was that? I had something really cool to show you. Let me show, I'll find it after this. Where was this one? Okay, let me play this video, and then I want to show you historically how some of these events have played out.
Oh, it's hanging over. It's the exact correct language. There's no question about it. You still have the normal cadence of Jackson Hole. For example, there's
Powell
6,
won't
7,
nod
8
to cut
papers that
in
come
speech.
out. Michael McKee prints them out perfectly, and he reads every page of the academic papers. Guess what? I don't do that. I'm talking to the reporters here gathered, and you're right. At the top of the pile of topics here is Lisa Cook.
So I spoke to Mike earlier. He said she's expected to arrive. She hasn't arrived yet. Does it take away from Fed Chair Powell's message tomorrow? Does it distract from what he says about this economy and what he indicates or not about September?
Dude, look at that backdrop.
It's a really fair question. I don't think so. I think Michael McKee, who's better at this than I am, would say exactly the same thing. What is different here, and our Simon Flint in Singapore absolutely nails it in an essay today.
Why is this
What's
bow tie
different
so
here
fucked
is the
up?
hard facts of the moment are catching up with the chairman. I don't know if they're rewriting the speech tonight with the stars out above the Tetons, or maybe they're writing it on the airplane. But what is very clear here is the hard facts, as Mr. Flint says, have caught up. You have the economic data today. You got concern about inflation. And Tim, the number one thing I'm watching off the Bloomberg here is the 30-year bond. Once again, we're making a dash up near 5%. That's a kind of inflation whispers that have to change the speech.
Tom, of course you mentioned the chairman will speak tomorrow at Jackson Hole. Can you just tell us a bit more about what attendees are really looking to hear from him?
It varies every year. There was one year here, I'm going to say 3 years ago, I can't remember, where we were prepared for a 15-minute, 20-minute speech, and I believe he spoke for 8 minutes. So every year is different. I think the pageantry will be here. There'll be an international audience here. Christine Lagarde here, Mr. Nagel of Germany is here, Bailey of the Bank of England scheduled as well. But what's interesting is within the pageantry, what do you expect from a speech? And the answer is they'll be looking for certain nuances and certain single sentences that will be different. What you're not going to get a lot of is what's he going to do in September. That would be rude. He's not going to do that here.
You mentioned a lot of those international voices. I mean, the ECB, we've got Bank of Japan, emerging markets. How are they playing a part of the conversation this year in particular?
Nora, you know my theme. You're already stealing my theme as we go to tomorrow with Lisa Abramowitz. To me, the international angle here is the importance point. William Rhodes, Bill Rhodes of Citigroup, iconic at Citibank, it was called Citibank back then, had this great phrase, central banker to the world. He took it from academics. This is a Jackson Hole where Jerome Powell is the central banker to the world, is he defends delicately the way we've done banking for years, pushing against President Trump. The theme internationally here of central bank independence will be key.
I think also the theme of
Very
labor,
much
Tom,
so.
and it's something that we've spent a lot of time talking about in recent weeks, especially since that shocking report came out earlier this month about those numbers for the month of July, and it's really shifted the conversation about
those glasses.
what
Are those
employment
meta
in
glasses?
the United States and what
Or is
healthy
he just blind as
employment
fuck?
numbers look like in the United States, where borders are closed, immigration, legal and illegal, is down, and growth among American families is not what it was a couple generations ago. What does that picture look like in terms of reshaping the American workforce?
Well, and reshaping the speech as well. It's a movable feast right now, Tim. The number one thing is we've seen a trend in the data. The conceit is labor data always lags. Okay, fine. And we've seen this trend, including continuing claims today. Bramo put out on Twitter, I was, stuck in an airport somewhere. Bramo put out on Twitter that great continuing claims chart, which shows this explosion up in the weekly data. That's the kind of tea leaves that gets a Fed to shift. President Trump wants them to shift quicker. And let's remember, we've got that jobs report early September before Mike McKee's in that press conference, September 17th.
Well, I want to just talk about the energy. I mean, you've been to so many of these symposiums. What's the energy like on the ground this year in particular?
Quiet. First thing I noticed when I walked in, there's a whole new quiet tone to it. Mike McKee and I remember August of '07, which was, I think, I'll say 7 days after LIBOR OIS went out 4 standard deviations. This place was chaos. My guess is a lot of people are coming in tomorrow morning, and tomorrow morning here at the Jackson Lake Lodge will not be quiet. There'll be a real turnout for the speech. With that said, it's one part academic, but it is one part about this attack on the central bank by President Trump.
All right, so on that note, it should also be, I guess, publicly stated that Trump, out of nowhere, did announce a kind of, not a surprise, but he's going to be doing an Oval Office press conference at noon. So it's going to be quite the crazy day. But anyway, as I said, it's one part academic, nerdy financial stuff. The other part is kind of just the narrative of what's going on with central banks and governments, especially the specific fight between Trump and Powell. So let's kick this off kind of with like the nerdy financial thing. Right now, we are at 4.25%. The next FOMC meeting is September 17th, a little bit less than a month out. Last week, a week and a half ago, there was like a 95% chance of a 25 bips rate cut and a 5% chance of a 50 bips rate cut. Ever since then, the PPI report on Thursday then kind of created this cascading effect where all these other Fed members have been speaking. In fact, actually another Fed member is speaking right now starting at 9 a.m. And all of a sudden, they're starting to say, well, maybe we're not actually going to do a rate cut, this, that, the other thing. And now we're seeing that the odds of no rate cut whatsoever actually starting to spike. Right now, there's a 31% chance according to this tool. But if you look at Polymarket, there is a 39% chance of no change. So it's a little bit higher there, but you can see this trend of no change, this red line, has just been increasing over the past week and a half. So once again, the FOMC decision is not made today, but obviously the market is going to be trying to use the information of what is in the speech today to telegraph forward. But with that, you also have to keep in mind that there's a whole amount of information coming out sometime in September. We're going to get the September inflation numbers, the September job numbers that are going to have a huge impact. I'm going to cover this when the time's closer, when it's a little bit more appropriate. But what you need to know is for the odds of a rate cut to increase, you're going to want to see the jobs numbers get worse, a softer labor market, and you're going to want to see inflation come down. That is going to be the 1-2 combo punch that would pretty much ensure some form of a rate cut. Once again, a softening, i.e. worse off labor market, and also that simultaneously happening with lower inflation, specifically the PCE. So that's what you would want to look for, especially in those early September reports. But obviously, we are a couple weeks out from that. Powell plans a U-turn on an economic strategy that has soured. So this is not so much the financial, like nerdy aspect. It's more of like the narrative of central banks and more specifically Trump's personal crusade against Powell right now. Obviously, we know for a while he's been calling him too late, stupid, a moron. We know that he was like kind of questioning these building renovations, thinking that they're suspect. And then most recently, what was it? Lisa Cook. They're trying to say that she had somehow committed like mortgage fraud. And then this is all coming out when the president, it was revealed that he has $104 million in bonds himself that he's gained since his second term. So it's going from like kind of a nerdy economic discussion where, yes, that still has some important aspects of this, but it's also very rapidly adding in like a lot of drama, a lot of drama. The Fed unveiled a strategy 5 years ago for worries that the economy outgrew. Now it will formally reset. So a lot of what we're still dealing with is because of how much money was printed in 2020, 2021, created an immense amount of inflation. That's what happens when you print a lot of money. It inherently devalues that money. And ever since then, we've been fighting that inflation, trying to bring it back down and down and down while trying to balance out the labor market. Remember, that's the dual mandate of the Fed. They care about two things and two things exclusively: what's going on with the labor market and what's going on with inflation. They don't, allegedly, it is not a mandate. Well, this is truly not a mandate. I'm saying they allegedly aren't supposed to care about the stock market, about loan repayments or anything like that. That is not part of their dual mandate. So it's going to be a big day. We're going to find out at 10 a.m. And then, like I said, we kind of got this surprise announcement late last night that President Trump will be speaking at noon. And it sounds like it's going to be somewhat of a pretty freaking big deal. But in all of that, we got some major news as it relates to tech. NVIDIA in talks with U.S. to sell a more advanced chip to China, according to the CEO. That is fine, but right here, NVIDIA looking to halt the H20 chip production after China cracks down on purchases. When that came out, this is some big news impacting the world's biggest stock, currently down 1.3% in pre-market trading. So some negative news on NVIDIA. So going into this, things are very, very frothy. We're going into, remember, like, if any individual equity said that, you might care, you might not care. It's very impactful when we're talking about the world's biggest stock. And also it's the stock that is kind of like the bellwether for the recent stock market pop, like kind of representing what's going on in the world of AI and semiconductors and all this processing. So this is very, very big. So going into today, we have a market that is basically pricing in a binary event. It could see us ripping all the way up here. It could see us dropping all the way down here. Today's expected move is like 0.8%. The market is very much positioned for this could be very bullish. This could be very bearish. Going into it, we got some interesting news related to the world's biggest stock. And now we have this unknown event of what is Trump going to be doing? Like, we don't know. Breaking, Trump schedules Friday noon Oval Office announcement, blocked out Friday at noon for televised address from the Oval Office. No hints on the topic. So we're kind of going into this one dark. We're going into Jackson's Hole dark. I mean, the whole thing is just a little nuts. So it's going to be a crazy day. Ideally, it's going to be a fun day. And most ideally, it's going to be a very, very profitable day. But for those of you who are maybe joining in and you're like, oh, what's going on? Is it more than a normal day? This is far beyond a normal day. So you might not want to even be doing anything early in the morning. Honestly, you might not want to trade today at all. But one thing I do want to bring to your attention, let me find this. Where was it? I think I liked it. I found someone who actually kind of computed the historic performance. Jackson Hole drawdowns from 2005 to 2024. So basically, it's from the date of the Jackson Hole meeting until the low, like the next low on the daily chart. So you can see here back in 2005, they spoke on August 26th. The low was made in mid-September. And you could see all of these have kind of sizable sell-offs. So like anywhere, there was a big one here at 12%. There's a 17%. And then the smallest one is still pretty sizable at 3%. And that was literally 2 decades ago, 2016, 3%. So once again, these are the drawdowns that we're seeing roughly to some point in September, some point into October. I took all these numbers to get you guys an average, and on average, the average max drawdown is around 7%, 7.5%, and it takes around 25 days. So if you're looking at the low date and you're looking at the max drawdown, I averaged all these out over the past 20 years, and that is the average. It's about 7%. It's about 25 days. So for those of you who are swing traders, maybe you're premium or something like that, I thought that might be a little bit helpful. This has nothing to really do with this might have to do with Jackson's Hole. I'm not really sure. OnlyFans paid owners $701 million dividend as it eyes a sale. The guy who is running OnlyFans, these are his personal payments. Like, this is how much he gets from his own company. $284 million, $338 million, $472 million, $497 million, and now he might be getting $701 million this year. So I guess it pays to be at Jackson's Hole, or it pays to be subscribed, or it pays to be the platform who is showing off Jackson's Hole, because he's gotten $1.8 billion personally. I'm not talking about the company. I'm talking about the dude running the company. Like, Jackson's Hole pays a lot. It pays a lot. Apparently, he is interested in just like getting more and more money selling it and then signing a giving pledge right here. One day be in the position to sign the giving pledge. So we'll see how that goes. Like OnlyFans is making $8 billion. Isn't that just nuts? I just don't know if people realize that you can get a lot of that content for free. But hey, who am I to judge? If you haven't already, sign up for the newsletter, mattkohrs.locals.com. It comes to your email inbox every single Sunday. I break down what's going on in the market, cheat sheet for their earnings. We are hearing from NVIDIA next week, all the major macroeconomic events. We actually have 2 things today. Obviously, Chair Powell press conference, Jackson Hole Symposium at 10 a.m. And then at noon, Trump will be speaking. And then also the seasonality for each trading day of the week. This week, technically nets out to being neutral. Some of it was bullish, some of it was flat, some of it was bearish, but the recent trend in the past couple of years has been to the downside. It has been a bit more bearish. So I put it as neutral because that's the 27 years worth of info. But if you're looking at the past 5, it's definitely going to favor the bears a little bit more. But once again, that seasonality is not the end all be all. If anything, I would argue that this is just going to be massively impacted by the market's interpretation of what Powell has to say. And then a little bit after that, it's going to be the market's interpretation of what in the world President Trump has to say. So basically buckle up for a crazy one because today's going to get nuts. If you haven't already, I would please ask you, thank you, please, good vibes to smash that like button. It really does help me out. Obviously, it's 100% free to you. If you enjoy these types of shows, if you enjoy this effort, if you enjoy all the songs that Chaos whips up for us, all that we ask of you is to smash that like button because that does help the algorithm promote this to other people. So if you could take one quick second, both on Rumble and on YouTube, let's get this party going today. Let's get the party going today. We'll make it that much more fun. All right, back to the market. We have about 2 minutes, 3 minutes. We've had 5 red days in a row on SPX. Same thing on NDX. NDX is on the verge of breaking down, and actually so is Bitcoin. So this might be that dip buy double bottom opportunity. It also might be a legit breakdown, and it's all going to be decided today. Folks, I said this in the Discord, but I want to reiterate it to all of you. No one in the world can confidently tell you today will be bullish or bearish. The market, all of the math of the market right now is basically pricing in either a big pop or a big drop to the tune of about 0.8%. That's a good size movement. And if anything, I think that might be underappreciating how far we can actually go today. But the point being is these bets are not all loaded up on one side or the other. If you're going in today confidently bullish or bearish, my question would be why? Are you just being biased because of your current positions, or do you actually have a mathematical, empirical based reason to be bullish or bearish? If anything, I think the best way to approach today is just to be like, hey, I don't know which way this is going to break. I'm expecting a large move. Ideally, I can identify the trend, get in with a low risk opportunity, and then ride the new trend, whether for whatever time frame you care about. But right now, there are no underlying metrics that suggest you should be crazy bullish or crazy bearish. When we see those things, I shout it to you from the mountaintops. But right now, it's pretty much balanced out, folks. I'm seeing some chatter, especially on Twitter, of like, oh, you got to be bullish, you got to be bearish. And I don't see why. If anything, this is the opportunity to kind of go into it, probably be flat, and then just be like, all right, let's wait and see how this plays out. So I just want to share that. Of course, as the market gets going, I'm going to be showing you the options flow. We can get into the book maps right here. We can track all of this, and obviously I'll show you what the big guys are doing. So as always, I'm going to show you the data throughout the day. But today, honestly, from 9:30 to 10 doesn't really matter. We're just waiting for Jerome Powell to really get rocking. On that particular note, here's all my accounts I've been traded. Yesterday, I was able to save these Apex accounts. I went from down 3K to up 1K. So all the Apex accounts are looking good. Unfortunately, in that effort to degen revenge trade on tilt, it also did mean that I lost my take profit account, so I'm restarting my take profit. So I have 1, 2, 3, 4, 5 brand new take profits, and then I still have all the same Apex accounts. It was just enough to blow me out on some of those, so that was unfortunate. As you can see, I turned off all the strategies but one today. I'm going to be doing my market opening trade, and that's probably going to be it until after the Jerome Powell Jackson Hole speech. So that's the plan, and I'm sticking to it, or hopefully I am. Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. All right, the opening is a wee bit bearish. It is a wee bit ooh. Whoa.
Order submitted.
What the fuck?
Order filled.
Well, the trade made money, and because of slippage, I lost it. Fucking riddle me that, Batman. Riddle me that. Son of a gun. Son of a gun. Well, that's frustrating. I wanted to do the market open trade. It worked. And now here I am. And now here I am, somehow losing money. Lead account makes $327. Following accounts lose 30, all the way up to 140. Fuck. Less than ideal. I'm going to be honest about that one, folks. A little bit less than ideal. Oh, Jesus Louises. How do I want to handle this? How do I want to handle this? Do I want to already get tilted? Because that's an option. I could choose to just get pissed off and tilted about the whole situation. That's always a solid opportunity, right? Get mad, like within 2 seconds. At least you won. Well, I won, but not really, because of fucking slippage here. So one way to avoid this is to apply the strategy individually to each account. I applied it to one, the lead account, and then just had the trade copied, and the trade copier was too slow. So even though this did well, the copier was too slow. I probably should have just run the code on them individually. But as I said, I was busy this morning getting embarrassed at getting very, very embarrassed at the grocery store. But anyway, he won a participation loss, pretty much. I don't know. That's a bummer. And now I'm kind of angry about it. I don't know. What do I want to do? Oh, do I want a revenge trade? Team, thoughts on a revenge trade here? Anyone? Yes, no, maybe so? Thoughts on revenge trading today? Good idea? Bad idea? Thumbs up, thumbs down. My financial health is in your future. I have 27 minutes to figure this out. 27 minutes. Oh, well, we're kind of pushing above the high yesterday on the SPY. The SPY's looking good. IWM's looking good. We might as well throw up NVIDIA just to see the market's reaction to that. All right. How is this going to be going today? Oh, do I want a revenge trade? Yes, no, maybe so. Yes, no, maybe so. Yes, no, maybe so. I know the right answer is no. Like, I'm obviously cognizant of that fact.
Order submitted.
Fuck it. I'm not stopping until I see green on all these accounts.
Order filled.
I'm not stopping until I see green on all of these accounts. Okay. Well, apparently I traded the wrong account. Fuck me. It's going to be one of those days, isn't it? Apparently I traded on the wrong account. That is not the lead account. What am I doing today? Maybe that was lucky. Maybe I just got absurdly lucky here because I accidentally traded and I thought it was going to be copied to all of these accounts, but it looks like it's about to blow out, and I think I might be getting lucky because I just did it on one. Oh, shit. Yeah, totally going to be one of those days, isn't it? It's totally going to be one of those days. What is the proper lead account here? Is it this one? Mom? Dad?
Order submitted.
Why is it getting...
Order
All right,
filled.
so it worked on those, but now I'm still babying this random ass account that I hope gets the fill. Where was it? It was right here. Oopsies. I made a mistake. This one's on me, Tonto. So I got the other ones to be green. But now we got to see if I'm going to blow out a random account here or not. Come on. This one's for America, buddy. This one's for Jackson's Hole. We all know Jackson's Hole. Don't do it. Don't do it. Don't go. Come here. Come here. Come here. Get him. Fuck. Uh-oh. Uh-oh. I'm not having the best vibes on this one. Actually, I literally bottom ticked that. That can't be good. That can't be a good sign. That can't be a good sign. Stop it. Stop it. Stop it, Dobby. Stop it. Come on, dude. I'm wearing the Lucky Buffalo shirt. It has to work, right? This can't not work. Right? Right? Get over here. Come here. What the fuck? Why did I do that? Why am I my own worst enemy? The loss just keeps growing. What do I do? Uh-oh, it's about to break out too. Fuck, I'm on the wrong side of this trade, folks. I'm deeply on the wrong side of this trade. Uh-oh. And the options flow is going up? Mom? Dad? What do we do here? This can't be. This doesn't seem like it's going to end too well for me. For old Mateo. Yeah, we're getting some higher highs and some higher lows. The Mag 7's going up. The SPY's going up. It's not looking good. Do I just like reverse it? Like, do I just get pissed off and reverse it? Do I just anger reverse? What's this looking like? Oh, dude, it's ripping it on me now. Fuck. I think I need to reverse it. I don't know. What a random ass trade.
Order submitted.
What? Reversing it blew out the account? What? Okay. Well, that was stupid. My fucked up trade, my fat finger mistake, lost that account, but I guess maybe the commissions push me over. That's the only thing I can think of, is that the commissions push me over. So that's a bummer. But I got the other ones to be green, so that's a win of sorts. Watch this. Dude, if this drops all the way back down, I'm gonna lose it today. Dude, if this drops all the way back down to VWAP as I got out right there, I'm gonna fucking lose my mind. Dude, I'm not gonna be a happy camper. If this comes all the way fucking back down, we're gonna have issues there. We're gonna have some real problems there, Tonto. We're gonna have some problems. Definitely problems will be had. Mag 7's popping a little bit. SPY took out the high from yesterday. Here's all the levels I'm watching. We're almost at 6,400 key technical level, key psychological level. We are in a very important zone here. Very important zone. All right. ES breaking out of that high from yesterday. Another target about 4 points higher. NQ is also looking pretty decent. Kind of looking up somewhere around 23,350-ish. That's about 75 points higher. Oh, Jackson's Hole. Oh, Jackson's Hole. All right, I want the 1 minute so I can see all this. Yeah, that was not my smartest idea. Dude, it's gonna... I'm telling you, folks, I could already feel it. I can feel it in the ether. This is going to be coming back down, and I would have been able to get my fill. Who knew that the commissions were going to fucking screw me over like that one? That's a tough beat. Hey, that's a brutal one. Well, at least it was on one account. Oh, there's the pippity pop. There's the pippity pop. Let's zoom in on this. A little bit of a flag breakout right there. If you took that trade, it's super degenerate, but hey, I like the cut of your jib. A little bit degen right here. It popped, made a fresh high, lower highs, took out that trend line, and you're probably in somewhere around 82. Easily ride that up to 300. That's not a bad deal. Some people are trying to sell here at 300, but it looks like it already took out that liquidity. Looks like the next upside target on NQ is 325. Quite a few people trying to sell there. Quite a few people trying to sell all the way up there. Here's a look at the flow. Mag 7 keeps going. SPY keeps going. Strong delta flow thus far. Thus far. Fuck. Should I do that? I probably... do I want to? Do I not want to? Do I want to? Do I not want to? Yes, no, maybe so. Yes, no, maybe so. Yes, no, maybe so. What do I want to do with that account? Do I want to get it now and try to degenerately trade it? I don't know. Torn. I'm torn. This is going, dude. That little consolidation breakout, that was a solid trade right here. If you took it at 941, you're sitting pretty right now. Seems like your next real test is 325, and now you have some support at 90. People are trying to unload at 325 and 330. Let's see if that sell side liquidity gets absorbed. People are trying to sell, aggressively buying up into it. Let's see if these get knocked. People are starting to scatter their sells, their sell orders. 325, 330, 334, 340, and the 350s just disappeared. But you do have some clear people attempting to buy at 290 down here, 290. But we are building right back up into this. If you don't know what this is called Bookmap. You can get a nice fat discount if you want it. It's in the description of the video. The heat map, you see the sitting passive sell orders above and the sitting passive buy orders below. That's what the heat map is. And then the dots are a measure of like aggressive buying versus aggressive selling, as in hitting the ask or hitting the bid. So aggressive buying all the way up. Now we're getting a little bit choppy. But overall, you can see where the target is. A lot of people are trying to sell right here. They might be selling to short, but most likely a majority of them are selling to take profits. This is probably more of they were riding it up. You could look into the details a little later, and you have to kind of do a little bit of, I don't know, open interest tracking of the contracts and whatnot. But probably more likely than not profit taking rather than actual shorting. But we will see. 25. We're going to see. Once again, sitting passive orders are what makes up the heat map, and then the bubbles are the actual trades hitting the tape. Struggling at 25 here. Struggling at 25. SPY is climbing. Higher highs, higher lows. By definition, a bullish trend. IWM decent. NVIDIA recovering like no other. Where is NVIDIA? It's still down 0.5% on the day. What's up the most is Tesla. Tesla's up 1.4%. Hood, we can move that down. What is up? Apple's up a good chunk as well. Microsoft up decently. We'll throw NVIDIA up there just so we can watch it. Palantir is kind of surprisingly down. Coin, don't really care much about that one today. Okay. All right. Here's what we're watching. Here's what we got going on. All right. The big guys, they're buying. The big guys started to buy early today. Like it just started. Obviously, we only have 14 minutes worth of data, but it is, in my opinion, worthwhile to note that they did start to purchase. Interesting. This is showing some real strength. Was it leaked or something? Is there news that I'm missing? Is the contents of his speech already out there? I mean, this is just a runaway train. Oddly enough, if it let me reverse, that other account would have been green. I guess it was just close enough to its blowout that it didn't let me go long. But you guys saw it. I tried to reverse to go long to ride this, and that account would have been phenomenal, absolutely phenomenal. But I guess my lucky shirt wasn't lucky enough. I think I was slightly off on commissions or some bullshit like that. SPY took out the high from yesterday and the high from 2 days ago. This is turning into a little bit of a runaway trade. Remember, the upper side, Captain Condor is in play today. Was in play. Yeah, right here. You can see quite a bit of positive gamma right between, 6,430, 6,440. This is a new position, actually, that was created during the market today. Earlier today, the big upper side of the call credit spread was at 6,430, but now there's an even larger one at 6,440, which means I'll just move this up to 35. I'll put it halfway in between. But this is the new level I would be watching. Early, as in before market open, the big call credit spread was at 30. Now there's an even larger one at 40. So the 30 is still there, and now the 40 is new. So that's why I just moved this up to 40 to see what the fuck's happening. All right, a little bit of profit taking, I would assume, right there. What time is it? 9:46. He's going to be starting somewhat soon. Let me actually make sure I have that link. Apparently, this one's going to be hosted by the Kansas City Fed, which I don't know why they get to stream the whole event, but I guess they do. Jackson Hole. All right, we have this. Okay. How do I get this up on the screen for you cool cats and kittens? Let me get this set up. Window capture, add source, new, add source. Okay, we did this. Let's clean this up a little bit so it doesn't look like shit. All right. So as you can see, when he gets going, we have the stream. We're not going to be missing it. I have the audio on and all that good stuff, so we're not going to be late. He should be speaking in about 12 minutes, 13 minutes. There we go. Okay, we're going to get rocking. The Jackson Hole Symposium, Federal Reserve Chair Jerome Powell's remarks. We have 12 minutes. Labor markets in transition, demographics, productivity, and macroeconomic policy. Jackson Hole Economic Policy Symposium, Federal Reserve Bank of Kansas City. So it's been going on. It started yesterday, ends tomorrow, but obviously this is the major event of the whole thing. This is the major event of the entire thing. So let's see how this plays out, folks. Any guesses? I know I'm one of the main people saying, hey, you shouldn't randomly be guessing, but sometimes it's fun. I don't think necessarily you should be betting money on it. But what's everyone's vibe? I'm not saying what do you want to happen. I'm saying just guess. What's your gut feel on how this is going to go? Do you think a rug pull is incoming, or do you think this rocket ship is about to take off? Dump, then a rip. Oh, you think they're going to do the old razzle-dazzle Kansas City shuffle on us? A dump, then a rip. Interesting. That's what your gut's telling you today. The old Kansas City shuffle. All right, let me zoom. Why am I on the wrong account all day today? In a weird way, I actually got really lucky I was on the wrong account, because I think I would have blown out everything then. I would have blown it all out. J-Pow going to destroy our fun? Red day. Well, to be fair, our fun, hasn't been that fun. We've had 5 red days in a row. Rug pull, nothing will happen. I think that's the most unlikely situation here, that nothing will happen, because that would be the first time it's happened, as in nothing's happened in over 2 decades. The market does strongly react to this particular event. So already priced in, I highly fucking doubt it. I highly doubt that. But I mean, hey, crazier things have happened for sure. But that is, out of all of this, that's the one bet I wouldn't take, that it's priced in and nothing's going to happen, especially with the fact that Trump is speaking at noon. I mean, I from a math standpoint, I'm not going to say something's impossible. There's in terms of like 0% chance, but it is very, very likely that we get a considerable move today and a spike in volatility, whether to the upside or to the downside. Up happy, down by more. I think that's a pretty healthy mindset, honestly. No change in Fed. Powell holds line until next meeting. Well, this is, to be clear, this is not a Jackson Hole meeting. This is a Jackson Hole thing, not an FOMC meeting. I want to be clear. I think a lot of people think that they're not making an interest rate decision here. This is not a Federal Open Market Committee meeting where they all vote and decide what to do with the Fed funds. Like, that's not this. This is a once a year speech. I don't know. I like just deep dive between all like high levels of central banks across the world. This is not an FOMC meeting. So there was no expectation at all of a rate cut, hike, or even an announcement today. That's not what this meeting is for. Last speech going to go out as the savior to the markets. Maybe. Powell starts crying and does a tell-all. Imagine if he just breaks down. Everyone is saying huge crash or pump. That means market's probably going to do nothing. There's going to be a move, and it might be whipsaw, but we're definitely going to see what I would argue like an expanse in range today. And we've already kind of seen that. We're taking out previous highs. Delta did pop, but for the second time, we're now giving it back here. Am I crazy for wanting to do, what time is it? 9:52. I probably am fucking crazy for wanting to do a long trade right now. Okay, I won't. I was going to do a manual trade even though I've been doing exclusively robotic trades. I won't. You know what I could do though is, what was that account that I blew out? 23. Do I remember my password here? All right, we're going to get rocking with all this pretty soon. What is it? About 7 minutes till the show really gets going. That's when we're going to get popping off. Pippity popping off. What's my authentication code? What passwords do you guys use for all your logins? Well, that's not going to work. Shit. Oh, shit. Oh, it did work. All right. Well, what was that account? That silly, dumb fucking account? 923. 923. All right. Let's get that bad mamma jamma. Let's get that bad mamma jamma. All right. I'm getting ready. I have on my lucky shirt. I am mentally poised. I probably should have had more coffee, but it is what it is. It is what it is. All right. Oh, I could see today going one of two ways. I could see myself being a massive degenerate and just ripping it all day, or I could see myself being super disciplined and say, you know what? I'm just going to wait and see how things play out. I don't know if I'm going to take my own advice or not. Like, I know the proper thing to do today, but that doesn't mean I necessarily want to do the proper thing, you know? I think that's a vibe that you guys all get. It's a vibe that you all understand. Okay, so basically the SPY ripped to the high from 2 days ago. The Qs ripped to the high from yesterday. And now that we're only a couple minutes out from the old J-hole speech, things are kind of calming down. We had some profit taking. People ripped it up, probably locking in a little bit of profits there. Yeah, some people are trying to buy at 300. So now we're kind of in that awkward wait and see. As we're waiting and seeing, Don't forget, you can buy an Apex account if you want to. You're actually allowed to have up to 20 PA accounts. So if you want to check that out, I actually just had to get mine because I blew one of them out. So now I'm back up to 20. 80% off with that code Goonie, pinned to the top of chat in the description of the video. This is what I use for futures trading when I'm doing sim-to-funded trading. And if you want to do sim-to-funded trading for options, that's where Vanquish comes in. And actually, if you use that code Goonie with them right now, today is a rarity. You can get 50% off. So 50% off on Vanquish. This is used for options sim to funded. And then if you want to use Apex, the same code Goonie will get you 80% off the evals. And that's for futures. If there's any questions on that stuff, the difference between the two, like I said, this is for options. This is what this platform looks like. Once again, options trading. And then obviously this is what I'm using for futures. So that's, happy to answer your questions. Vanquish is for options. Apex is for futures. The code Goonie will get you 80% off the evals on Apex. And on Vanquish, it will get you 50% off when you buy the account. With respect to that, we're kind of going flat there on flow. The big guys are still This is interesting right here. This right here, the fact that they are just... There's some aggressive buying early this morning, whether if you look in the options market, if you look at someone rolled up, it's even bigger now, this 6440. They're really confident we're not going to be breaking that level. This got bigger. At first, it was 12,000. The one we started off with today was 4,000. Then since market open, someone created this position, another call credit spread, not debit spread. They created that at first with 12,000, and now it's 5,000 larger. So someone out there is really hoping we do not exceed 6445. There would be a lot of people getting their asses handed to them if we close the day above my cursor, above 6445. And looks like we're taking a turn right here, maybe coming back to the top of the transition zone at 6,400. But holy guacamole, Batman, this one's going to get interesting. All right. Well, as we're waiting for it to get rocking, J-Pow going to be taking the stage in less than 3 minutes. Any final questions, comments, concerns? Do you have questions about Apex? Do you have questions about Vanquish? Do you have questions about Spot Gamma? Do you have questions about Bookmap? Do you have questions about Delta Gamma? Any of the generic Greeks? Do you have questions about why this event is so important? What's on everyone's mind? What's that question that you were, it's in the back of your mind, but you were unwilling to ask it for one reason? Oh, and now we're turning. What's on everyone's mind? Dump. A post-prequel sequel? Brilliant. Pretty much. Here comes the Vic. Super spicy. My palms are sweaty. Yeah. Hopefully you had a good bowl of your mom's spaghetti. And I guess what goes up must come down, because it looks like as we're heading into this meeting, we're going right back to where we started. Why are you asking? You don't even read chat. What? How would I know that you said that if I didn't read chat? Have you ever seen Jackson's Hole in real life? Many times. What is best in life? Hanging out with a kitten, for sure. Explain how positive or negative gamma is created. Remember, options markets are a single dealer market, as in you're not transacting with other traders, you're transacting with market makers. So if you are buying premium from a market maker perspective, that is creating negative gamma. As a trader, if you are selling premium to create a position from a market maker perspective, that is positive gamma. So it has to do, are you creating the position by selling premium or buying premium? Selling premium is positive gamma. Buying premium is negative gamma. Can you give us your analysis on LLY? Absolutely not, because we have far more important stuff going on than one individual company right now. We need an Idiocracy sequel. I 100% agree. Any advice for today? Yeah. Respect your risk, downsize, and wait until you see a trend established, and then only go after it with reasonable size with low risk. Explain why entire market dumps for a whole week for an upcoming speech. Because people are choosing to buy and sell at a lower price than earlier. Pretty easy. Pretty simple. All right. Why is this stream not on? It should be rocking. They having some technical issues out there because of the old Tetons. All right, I just reloaded it. They're not live yet. They're not live quite yet. The old Tetons. The old... Oops, did I just make it... Did I fuck up the size? My apologies. Oh, I'll resize it when they start. But I have the volume on. We're not going to be missing anything. Don't you worry. Don't you worry. Don't... Whoa! Well, someone got a little excited. What the fuck, dude? Wait, is this... Hello? Did they just not start it? All right, I have a couple other links just in case. Are they starting it? Like, that was a huge pop. Okay, this one isn't going either. All right, there is one more link I have. That one's not going either. All right, so here's the AP, here's CNBC, here is the actual Kansas City Fed. That was crazy. I guess the speech itself, the details of the speech, he must have released it, and obviously the market very much liking it. Very much liking it. What the fuck? Let's go. Let's see if we can find this. Oh, right here. Powell cautiously teased up a cut. The balance of risks appears to be shifting while labor markets remain in balance. It's a curious kind of balance that results from a marked slowing in both the supply and of demand. The unusual situation suggests that downside risks to employment are rising, and if those materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment. Okay, the balance of risks appears to be shifting. That statement is exactly why we just ripped. Interesting. Why is this not live? Is anyone seeing this live anywhere? I'm checking 3 different sources and it is not live. 3 different sources. Is anyone seeing it at all? I think what it is the way this works, they have to like release their speech like to the public. Interesting. Wow, what a pop. Holy shit. That was crazy. Did any of you
has come down a great deal from its post-pandemic highs. At the same time, the balance of risks appears to be shifting. In my remarks today, I will first address the current economic situation and the near-term outlook for monetary policy.
There we go.
I will then turn to the results of our second public review of our monetary policy framework as captured in the revised Statement on Longer-Run Goals and Monetary Policy Strategy that we released today. When I appeared at this podium 1 year ago, the economy was at an inflection point. Our policy rate had stood at 5.25% to 5.5% for more than a year. That restrictive policy stance was appropriate to help bring down inflation and to foster a sustainable balance between aggregate demand and supply. Inflation had moved much closer to our objective, and the labor market had cooled from its formerly overheated state. Upside risks to inflation had diminished, but the unemployment rate had increased by almost a full percentage point, a development that historically has not occurred outside of recessions. Over the subsequent 3 Federal Open Market Committee meetings, we recalibrated our policy stance, setting the stage for the labor market to remain in balance near maximum employment over the past year. This year, the economy has faced new challenges. Significantly higher tariffs across our trading partners are remaking the global trading system. Tighter immigration policy has led to an abrupt slowdown in labor force growth. Over the longer run, changes in tax, spending, and regulatory policies may also have important implications for economic growth and productivity. There is significant uncertainty about where all of these policies will eventually settle and what their lasting effects on the economy will be. Changes in trade and immigration policies are affecting both demand and supply. In this environment, distinguishing cyclical developments from trend or structural developments is difficult. This distinction is critical because monetary policy can work to stabilize cyclical fluctuations, but can do little to alter structural changes. The labor market is a case in point. The July employment report, released earlier this month, showed that payroll job growth slowed to an average pace of only 35,000 per month over the past 3 months, down from 168,000 per month during 2024. This slowdown is much larger than assessed just a month ago, as the earlier figures for May and June were revised down substantially. But it does not appear that the slowdown in job growth has opened up a large margin of slack in the labor market, an outcome we want to avoid. The unemployment rate, while edging up in July, stands at a historically low level of 4.2% and has been broadly stable over the past year. Other indicators of labor market conditions are also little changed or have softened only modestly, including quits, layoffs, the ratio of vacancies to unemployment, and nominal wage growth. Labor supply has softened in line with demand, sharply lowering the break-even rate of job creation needed to hold the unemployment rate constant. Indeed, labor force growth has slowed considerably this year with the sharp fall-off in immigration, and the labor force participation rate has edged down in recent months. Overall, while the labor market appears to be in balance, it is a curious kind of balance that results from a marked slowing in both the supply of and demand for workers. This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment. At the same time, GDP growth has slowed notably in the first half of this year to a pace of 1.2%, roughly half the 2.5% pace in 2024. The decline in growth has largely reflected a slowdown in consumer spending. As with the labor market, some of the slowing in GDP likely reflects slower growth of supply or potential output. Turning to inflation, higher tariffs have begun to push up prices in some categories of goods. Estimates based on the latest available data indicate that total PCE prices rose 2.6% over the 12 months ending in July. Excluding the volatile food and energy categories, core PCE prices rose 2.9%, above their level of a year ago. Within core, prices of goods increased 1.1% over the past 12 months, a notable shift from the modest decline seen over the course of 2024. In contrast, housing services inflation remains on a downward trend, and non-housing services inflation is still running at a level a bit above what has been historically consistent with a 2% inflation. The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months, with high uncertainty about both timing and amounts. The question that matters for monetary policy is whether these price increases are likely to materially raise the risk of an ongoing inflation problem. A reasonable base case is that the effects will be relatively short-lived, a one-time shift in the price level. Of course, one time does not mean all at once. It will continue to take time for tariff increases to work their way through supply chains and distribution networks. Moreover, tariff rates continue to evolve, potentially prolonging the adjustment process. It's also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic, and that is a risk to be assessed and managed. One possibility is that workers who see their real incomes decline because of higher prices demand and get higher wages from employers, setting off adverse wage price dynamics. Given that the labor market is not particularly tight and faces increasing downside risks, that outcome does not seem likely. Another possibility is that inflation expectations could move up, dragging actual inflation with them. Inflation has been above our target for more than 4 years and remains a prominent concern for households and businesses. Measures of longer-term inflation expectations, however, as reflected in market and survey-based measures, appear to remain well anchored and consistent with our longer-run inflation objective of 2%. Of course, we cannot take the stability of inflation expectations for granted. Come what may, we will not allow a one-time increase in the price level to become an ongoing inflation problem. So, putting the pieces together, what are the implications for monetary policy? In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago, and the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Monetary policy is not on a preset course. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks. We will never deviate from that approach. So, turning then to my second topic. Our monetary policy framework is built on the unchanging foundation of our mandate from Congress to foster maximum employment and stable prices for the American people. We remain fully committed to fulfilling our statutory mandate, and the revisions to our framework will support that mission across a broad range of economic conditions. Our revised statement on longer-run goals and monetary policy strategy, which we refer to as our consensus statement to save time, describes how we pursue our dual mandate goals. It is designed to give the public a clear sense of how we think about monetary policy, and that understanding is important both for transparency and accountability, and for making monetary policy more effective. The changes we made in this review are a natural progression grounded in our ever-evolving understanding of our economy. We continue to build upon the initial consensus statement adopted in 2012 under Chairman Ben Bernanke's leadership. Today's revised statement is the outcome of the second public review of our framework, which we conduct at 5-year intervals. This year's review included 3 elements: Fed Listens events at reserve banks around the country, a flagship research conference, and policymaker discussions and deliberations supported by staff analysis at a series of FOMC meetings. In approaching this year's review, a key objective has been to make sure that our framework is suitable across a broad range of economic conditions. At the same time, the framework needs to evolve with changes in the structure of the economy and our understanding of those changes. The Great Depression presented different challenges from those of the Great Inflation and the Great Moderation, which in turn are different from the ones we face today. At the time of the last review, we were living in a new normal, characterized by the proximity of interest rates to the effective lower bound, or ELB, along with low growth, low inflation, and a very flat Phillips curve, meaning that inflation was not very responsive to slack in the economy. To me, a statistic that captures that era is that our policy rate was stuck at the ELB for 7 long years following the onset of the global financial crisis in late 2008. Many here will recall the sluggish growth and painfully slow recovery of that era. It appeared highly likely that if the economy experienced even a mild downturn, our policy rate would be back at the ELB very quickly, probably for another extended period. Inflation and inflation expectations could then decline in a weak economy, raising real interest rates as nominal rates were pinned near zero. Higher real rates would further weigh on job growth and reinforce the downward pressure on inflation and inflation expectations, triggering an adverse dynamic. The economic conditions that brought the policy rate to the ELB and drove the 2020 framework changes were thought to be rooted in slow-moving global factors that would persist for an extended period. And they might well have done so, if not for the pandemic. The 2020 consensus statement included several features that addressed the ELB-related risks that had become increasingly prominent over the preceding 2 decades. We emphasized the importance of anchored inflation, longer-term inflation expectations to support both our price stability and maximum employment goals. Drawing on an extensive literature on strategies to mitigate risks associated with the ELB, we adopted flexible average inflation targeting, a make-up strategy to ensure that inflation expectations would remain well anchored even with the ELB constraint. In particular, we said that following periods when inflation had been running persistently above 2%, appropriate monetary policy would likely aim to achieve inflation moderately above 2% for some time. In the event, rather than low inflation in the ELB, the post-pandemic reopening brought the highest inflation in 40 years to economies around the world. Like most other central banks and private sector analysts, through year-end 2021, we thought that inflation would subside fairly quickly without a sharp tightening in our policy stance, as this slide will show.
Order submitted.
When it became clear this was not the case, we responded forcefully, raising our policy rate by 5.25 percentage points over 16 months. That action, combined with the unwinding of pandemic supply disruptions, contributed to inflation moving much closer to our target without the painful rise in unemployment that has accompanied previous efforts to counter high inflation. This year's review considered how economic conditions have evolved over the past 5 years. During this period, we saw that the inflation situation can change rapidly in the face of large shocks. In addition, interest rates are now substantially higher than was the case during the era between the global financial crisis and the pandemic. With inflation above target, our policy rate is restrictive, modestly so in my view. We cannot say for certain where rates will settle out over the longer run, but their neutral rate may now be higher than during the 2010s, reflecting changes in productivity, demographics, fiscal policy, and other factors that affect the balance between saving and investment. During the review, we discussed how the 2020 statement's focus on the ELB may have complicated communications about our response to high inflation. We concluded that the emphasis on an overly specific set of economic conditions may have led to some confusion, and as a result, we made several important changes to the consensus statement to reflect that insight. First, we removed language indicating that the ELB was a defining feature of the economic landscape. Instead, we noted that our monetary policy strategy is designed to promote maximum employment and stable prices across a broad range of economic conditions. The difficulty of operating near the ELB remains a potential concern, but it is not our primary focus. The revised statement reiterates that the committee is prepared to use its full range of tools to achieve its maximum employment and price stability goals, particularly if the federal funds rate is constrained by the ELB. Second, we returned to a framework of flexible inflation targeting and eliminated the makeup strategy. As it turned out, the idea of an intentional moderate inflation overshoot had proved irrelevant. There was nothing intentional or moderate about the inflation that arrived a few months after we announced our 2020 changes to the consensus statement, as I acknowledged publicly in 2021. Well-anchored inflation expectations were critical to our success in bringing down inflation without a sharp increase in unemployment. Anchored expectations promote the return of inflation to target when adverse shocks drive inflation higher and limit the risk of deflation when the economy weakens. Further, they allow monetary policy to support maximum employment in economic downturns without compromising price stability. Our revised statement emphasizes our commitment to act forcefully to ensure that longer-term inflation expectations remain well anchored to the benefit of both sides of our dual mandate. It also notes that price stability is essential for a sound and stable economy and supports the well-being of all Americans. This theme came through loud and clear at our Fed Listens events. The past 5 years have been a painful reminder of the hardship that high inflation imposes, especially on those least able to meet the higher costs of necessities. Third, our 2020 statement said that we would mitigate shortfalls rather than deviations from maximum employment. The use of shortfalls reflected the insight that our real-time assessments of the natural rate of unemployment, and hence of maximum employment, are highly uncertain. The later years of the post-global financial crisis recovery featured employment running for an extended period above mainstream estimates of its sustainable level, along with inflation running persistently below our 2% target. In the absence of inflationary pressures, it might not be necessary to tighten policy based solely on uncertain real-time estimates of the natural rate of unemployment. We still have that view, but our use of the term shortfalls was not always interpreted as intended, raising communications challenges. In particular, The use of shortfalls was not intended as a commitment to permanently forswear preemption or to ignore labor market tightness. Accordingly, we removed shortfalls from our statement. Instead, the revised document now states more precisely that the committee recognizes that employment may run at times above real-time assessments of maximum employment without necessarily creating risks to price stability. Of course, preemptive action would likely be warranted if tightness in the labor market or other factors pose risks to price stability. The revised statement also notes that maximum employment is the highest level of employment that can be achieved on a sustained basis in a context of price stability. This focus on promoting a strong labor market underscores the principle that durably achieving maximum employment fosters broad-based economic opportunities and benefits for all Americans. The feedback we received at Fed Listens events reinforced the value of a strong labor market for American households, employers, and communities. Fourth, consistent with the removal of shortfalls, we made changes to clarify our approach in periods where our employment and inflation objectives are not complementary. In those circumstances, we will follow a balanced approach in promoting them. The revised statement now more closely aligns with the original 2012 language. We take into account the extent of departures from our goals and the potentially different time horizons over which each is projected to return to a level consistent with our dual mandate. These principles guide our policy decisions today, as they did in the 2022 to 24 period, when the departure from our 2% inflation target was the overriding concern. In addition to these changes, there is a great deal of continuity with past statements. The document continues to explain how we interpret the mandate Congress has given us and describes the policy framework that we believe will best promote maximum employment and price stability. We continue to believe that monetary policy must be forward-looking and consider the lags in its effects on the economy. For this reason, our policy actions depend on the economic outlook and the balance of risks to that outlook. We continue to believe that setting a numerical goal for employment is unwise because the maximum level of employment is not directly measurable and changes over time for reasons unrelated to monetary policy. We also continue to view a longer-run inflation rate of 2% as most consistent with our dual mandate goals. We believe that our commitment to this target is a key factor helping keep longer-term inflation expectations well anchored. Experience has shown that 2% inflation is low enough to ensure that inflation is not a concern in household and business decision-making, while also providing a central bank with some policy flexibility to provide accommodation during economic downturns. Finally, the revised consensus statement retained our commitment to conduct a public review roughly every 5 years. There's nothing magic about the 5-year pace. That frequency allows policymakers to reassess structural features of the economy and to engage with the public, practitioners, and academics on the performance of our framework. It is also consistent with several global peers. To wrap up, I want to thank President Schmid and all of his great Kansas City staff who work so diligently to host this outstanding event annually, counting a couple of virtual appearances during the pandemic. This is the 8th time I've had the honor to speak from this podium. Each year, this symposium offers the opportunity for Fed leaders to hear ideas from leading economic thinkers and focus on the challenges we face. The Kansas City Fed was very wise to lure Chair Volcker here to this national park more than 40 years ago, and I am so proud to be part of that tradition. Thank you very much.
Is this going to keep going? Delta's now dropping pretty aggressively. Lots of calls being sold, puts are being bought.
Thank you very much. We'll move into the presentations. So I want to allow a minute for all of the members of the press to go.
All right, so they killed that. Interesting. So overall, obviously, the market is screaming that it liked this because there was a concern, a legit concern that he was going to come in and basically be like, nah, you're not getting rate cuts. But as we kind of missed his like opening line. It feels like the live stream was a little bit behind, if you ask me, because we saw the market reacted way more positively before the stream even started for us. So something was a little bit up there from a tech perspective, but really Nick Timoros had it right here. But well, actually he's still going. I wanted to go back to his very 16 hours ago, 13, right here. Powell cautiously tees up a cut. The balance of risks appears to be shifting. So because it's shifting from like, oh, we think the biggest concern is inflation, to now that it's shifting a little bit more to the labor market, that's why people took this to be a bit more dovish than hawkish. I haven't seen them yet, but I'm assuming the odds of a rate cut are now is now spiking. Let me go to this. We're going to check two different tools just to see. So when we started off today, what was it, like 73%, 70%? Now we're up to 89. So the odds of a cut in the September meeting obviously going up. And then we could probably even see it on Poly Market as well. Let's see how things... Nope, I didn't want that one. I wanted this one right here. Yeah, look at this. Just completely dove from 42 down to 11. So you're seeing it in real time, like the odds of it, like it just absolute dive. And that's all from really the oh, fuck. Did I miss my trade? I did.
Order filled. Order submitted.
I wanted to get in at 22. I'm definitely chasing this one.
Order submitted.
All right, we're going to see how it goes. Honestly, I don't need to make that much more to pass a lot of these. Remember, they pass at 9,000.
Order canceled. Order canceled.
This is the brand new account, and I'm trying to think, should I be a degenerate with it? Should I be a degenerate? I kind of want to be. I wanted to get in earlier on this. I wanted to get in earlier. But don't you worry, I have my risk set. Let me turn this one off. 32. Okay, I don't need this one anymore. I'm going to handle this account independently from the other ones. This is the brand new account that... Oh, fuck, why did I chase this? I should have been in way earlier, and now I just fucking top-ticked it. Are we going to get some follow-through? Please remember that Trump still has his Oval Office thing today, like where this is not a done deal by any means. Jesus, did we just perfectly double top there? Like we might be setting up for shoulder type of a situation. Fuck. Why did I chase that? That was really stupid. I was getting a little bit too into chatting with you guys. I'll be fine as long as 85 holds down here this low from 1007. I'm not going to be too worried. Structurally, we still have higher highs and higher lows. It's just how deep is this pull gap back going to be?
Order filled.
Right. So I just added a fuckload to this one individual position. I'm now long 10. And I'm praying that this is the low. I'm throwing up a Hail Mary, folks, on this, just on one account. I'm not being a degenerate with all the accounts. I just want to clarify this is like specific to just one singular account. The one that I blew out, so I'm already kind of in degen mode with it. I want to be very, very clear about my mindset. Very clear. I did not do this on the other accounts. Did not. I just did it with one of them. Just did it with one because why not? Why not? Maybe just a way to feel something. Maybe just a way to feel something. And then actually, what do I have to do? 52. I'm long 10 contracts. That's so stupid. 900. So 945, 45, that's 97. We'll sell these at 99.
Order submitted.
Let's see if this puppy's going to run. Do we have a fish? We're fishing, folks. We are, in fact, fishing. We're fishing, we're fishing, we're fishing. No stop. No stop whatsoever. We're either hitting it or we're not. We're either hitting it or we're quitting it. Come on, I just want to see it. If it takes out 85, I'll be fine. I just need it to take out 85. Come on, go. Push, push. Do it. Do it. Go, go. Go, go, go. Go, 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 go. Go, go. Go, 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 go. Go, 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 go. Let's pass this test in one day. One day. Fresh account. Well, technically, I blew it out and I restarted. We're already up 4K. Go, go, go. Go, go. Take out 85. Rip it to... Come on. This one's for America. This is for all the beans. This is for all the beans. This is for all the beans. Go, 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 go. Go, 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 go. Go, go for America. Fuck. No. What did we top it at? 90? I don't know if my heart can take this. I don't know if my poor heart can take this. The vol. As soon as I brought up America, the market's like, nah, dude. As soon as I brought up that this was, in fact, for America, the market's like, how about go fuck yourself, buddy? Trailing drawdown, probably going to get blown out because of the trailing drawdown. You're probably 100% correct. You can't, it doesn't like when you go up that much money and then give it back. So you are 100% correct that's this account this one account on the screen, not the others, just this singular one will probably be lost even though it's going to be in profit because of the trailing drawdown. Because not only do I need this move, I need it to be decisive. I need it to just go to it without a pullback. And that pullback actually got really, really dangerous. Really, really dangerous. Come on, fucker. Come on. You can do it, you son of a bitch. You can do it. Fuck. What is the flow looking like? Come on. Just someone get in there and start buying. You can do it. Just go. Go. Do it. Do it. Go, 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 go. Fucking go. Go, you bitch. You motherfucking bitch. Go, 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 you motherfucker. Just go. Do it. Ah, get it, you fucking loser. You're fucking nothing. Go. Fucking go. Ah! My blood pressure is definitely... Son of a bitch, dude. If this doesn't hit, stream's over. If this doesn't hit, stream is fucking over. You fuckers. You stupid, stupid son of a bitch. Dude, come on. Did this freeze? Why am I frozen out over here? Where's my data? Where's my data? The market events are too much for it? I don't fucking know. Come on, dude. Should we make our hearts really go crazy? The 100 tick? I think my computers are starting to really hum. Come on. Uh-oh. Not getting the best vibes of that double top. Not getting the best vibes. I'm going to be honest. Come on. Come on. I need to cut through right here. I'm trying to sell right before this red. Your boy has his order in. I just need to take out this one level of resistance, and then I'm going to get locked in right before this red. Come on. Come on. You could do it. You fucking losers. Come on. Like, there's a bunch of people are trying to sell right there, and I'm trying to get out right before. Right before. Up 7K. Come on. Come on. This is for all the marbles. This is for all the marbles.
Order filled.
Yes! Fuck you, market. Fuck you, market, you fucking loser. The market is such a fucking bitch-ass loser. Top-ticked it, locked it in. Fucking, where was it? 9.3K. 9.3K locked in. Fucking bitch-ass loser market. Fuck you, stock market. Fuck you. Dude, made it my bitch. That's right. The market's my bitch. Bitch-ass losers. Bitch-ass stock market. Bitch-ass stock. And I'm actually about to pass all these tests today. So the lead account's technically already passed. All right, you know what we're going to do is we're going to lower 1 to there just to start lock. Because there's no point in me trading past 9,000 in profit, because that's all you need to pass the test. So I'm going to lock in 1. I should probably move up this trailing stop loss. I'm going to wait for this to get locked in. What's that high? 13? All right, we're going to go to 12 then. Dude, we're making some money today. We're fucking making some money today. Come on. Take out 600. We're there. They just took it out. They smashed through that. Go. Go, 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 go. Go, 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 go. Clip that and post it. Hilarious. Good work. Thanks, KP. Thanks, KPT. Nothing like a little degen trading. What's the point of being systematic and reasonable when you could also sling fucking 10 contracts for no good reason? Sometimes you just have to get your lucky shirt on, folks. Sometimes you just have to man up and buy that lucky shirt. Sometimes.
Order filled.
Boom. How? Okay, some of these are now across, but some of them are also off by a bit. So now I have to kind of start like figuring out what the fuck's going on. All right, let me change
Order
this.
canceled.
Oh, do I just want to put in the stop? I'm in at 83. We're so close, though. 84, 65, whatever, fuck it.
Order submitted.
I put my stop in at break even, and I'm going to wait. So some of these are good, but I'm afraid. So that one's technically good. Do I want to start closing these out individually? Because then some of them are already off by $500. So 500. So it needs to get up to 35. Okay, so I should be good on all of these.
Order submitted.
Right there. If that one's hit, I believe the worst account should still be fine if it gets all the way up here. And obviously I put the stop for break even, and then at that point we'll see how some of the dust settles. But like the lead account's technically already good. I'm afraid to close it out because it's going to close out all the accounts. Actually, no. I can... What's the worst account? The worst account is account 12. Account 12. So 31 is good, right? 31 is good. So 31.
Order filled.
All right, so 31 is good. This is the worst account, 12. What other ones are good? Okay, so 919 is good. 919. We're going to close
Order
that one
filled.
out. So that one's good. 927 is also good. 927.
Order
All
filled.
right, that one's... Oh, fuck. 927 needs how much? 40 more bucks.
Order filled. Order submitted.
All right, so that's for 927. All right, what about...
Order filled.
Fuck. Well, now we're in a predicament. The stop just got hit, and I was trying to manage individual accounts. So that one's good. This one's now awkwardly. Am I going to accidentally blow out a fucking another one? How close are these? So the worst one is off by $1,000. I could leave this one 927. All right, I don't need to fuck with that one. 927. I'm just trying to do some housekeeping. So 31 is good and 32 is good. 31, 32, 19 is also good. So I don't need to trade that one anymore. 19 is fine. And that's it. So only 3 are definitively good. 31, 32, and 19, just because of slippage, this shit, that shit, and the other shit. So the lead account is right here. This one's off by $1,000 still. The lead account. If you're tuning in and you're like, what the fuck is this guy doing? To pass these tests, you only need $9,000 of profit. So there's no point in trading past that. So for example,
Order filled.
that one just hit. So I don't need to worry about it anymore because it's past $9,000 of profit. So now 4 are officially good. All right, so I need to go to 12.
Order canceled. Order filled.
17. 20, 45, 44.
Order submitted. Order canceled. Order canceled.
Shit, they
Order
all have
canceled.
a rogue order. This isn't good.
Order canceled.
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 This is what happens when you start
Order
to deal with all
canceled.
these individually. It becomes a huge
Order
pain
canceled.
in the ass. A fucking massive
Order
pain in the
canceled.
ass.
Order canceled. Order canceled. Order canceled.
Jesus Christ, how many of these
Order
are there?
canceled.
Dude,
Order canceled.
I know you're losing your mind. Trust me, I'm also losing my mind. All right, do I have the right lead account right now? 12. And all these fucking
Order
orders.
canceled.
Jesus.
Order canceled.
Dude,
Order
I'm
canceled.
losing it, folks. My final tethers to
Order
reality
canceled.
are being snapped
Order
as we
canceled.
speak. I think I got everything properly cleaned up. We're going to find out. Maybe shit's going to fire off. I don't know. All I can tell you is I've successfully managed 4 of these and got their profits locked in and just don't need to touch those accounts anymore. So that's cool. That's neat. And then for these other ones, I'm currently getting my ass handed to me. That's not that bad of a misfill. All right, so if it hits this, I should be good even on the worst account. So for me today, there's no point in playing past 644 because literally that's passing the test on all of these. And definitely could keep going. Like if you're a trend following trader, I'm not saying there's anything special about that. It's just in my world, I need to stop there because like what's the point of taking on additional risk when there's no return whatsoever? So if you're looking at that and you're like, what's weird about that level? Nothing beyond the fact that mathematically that's when all my accounts are at 159,000. So if you're trend following and you're trying to do it, by no means am I saying like, hey, this is the definitive top and you should be copying me, because I'm not in any way saying that it's the definitive top. No way, Jose. No way, Jose. All-time high incoming. Honestly, we're not that far off. All-time high on the S&P 500 is right there at 81. We're trading at 65. That could be a very real possibility today. 6481 is the all-time high. I'll set an alert. We are a bit farther away on NDX, but also not necessarily like massively far away. The all-time high is 23,969. I'm more so looking for it to take out 23,750. So adding an alert there. And I'll also add this breakout alert as well, just because why not? Why not? Why not? Why not? Bitcoin also looking decent, got a big pop on that. It's battling at a technical high here at 116. I care about it taking out 117. This is the technical breakout I want to see, 117 and a little bit of change. With respect to float, the Mag 7 is long and strong. The SPY popped, dropped, and now just flat, while the NASDAQ is grinding to the upside. Did we make this yet? Oh, no, just back to break even, unfortunately. I should probably set my risk at this recent low just to not completely blow shit up. All right, I'm putting in risk just in case I'm wrong, just in case there's like a rejection here, a random vomit, or a double rejection up there. So this is just protection to not give back all the money that I made. But ideally, should I start closing out accounts again? 916 is the closest. $916. 25. 20. All right, I'm lowering the price targets on some of these just because I'm looking at where they're going to pass. 915. And the more that pass, the less I have to worry about. 14.
Order filled.
21. 29. A little bit of, once again, individual management. 30. All right, couple got locked in on that push. 1, 2, 3, 4, 5, 6, 7, 8, 9 are good. So we're almost at the halfway point. 30. 18. 18. 28. All right. I think I'm doing some quick math, and you guys are either going to find out I'm either good or bad at math, but just making the profit target a little bit more reasonable on some of these.
Order filled.
Oh, hit it anyway.
Order canceled.
All of them got filled. Orders. Wait, cancel all orders. Orders, cancel. Cancel all orders. Boom. Bada bing, bada boom. 159, 159, 159. Do I hear 159 across the entire board past every single Apex account? All 20, $9,000 in profit, 180 grand locked in, test passed. Didn't even sweat it. Didn't even question it for a second. If you guys thought it looked like I was questioning it, I wasn't. That was all for the show. At no point was I like, nah, I'm not going to be able to pull this one off. Locked it all in. 9K, 9K, 9K. Well, actually, does this count commissions? Does anyone know? Before I get like too cocky about this, is this with commissions included? Or do I need a little bit more? Because obviously I've traded a lot. So with commissions, like I've traded more than 19. Does anyone off the top of their head know which one I need to see it like with commissions in there? Pretty sure it's included. Is it in net liquidation or I'm a little unsure on that one. I'm a little unsure. No. On Trade of 8, yes. I kind of wish I traded. I mean, some of these are really close, like $19. It's not with commission. Are you fucking with me? Oh, check. I'm not using Rhythmic. Someone said check. Maybe check via Trade of 8 site. Yeah, maybe I just log into Trade of 8. Trade. Trade of 8 login. Login. Don't know my information, honestly, so that's a little awkward. I just want to know if I need to buffer it by just like a little bit more. All right, we have this going there. I am not sure. I wish it just did include it, because that would make my life way easier. All right, copy, paste. Let's see. Let's log in. Let's see. Dude, what a top tick there. That got lucky. I guess there was something special about that level. All right, so the one I'm most worried about is 14. So let's just go to that account and see. So here's, oh, wait, sorry. I think you guys should be able to see this. So this is my worst account, or the one that's like closest. And it says 159,019 over here. So does that mean I'm good? Reports, community indicators, help, achievements, application settings. I've never really been in here. Does anyone know if this means I'm good or not? This is saying equity. You would think that then accounts for commissions, right? Order tickets, crypto financial. Does anyone know how to fucking use this? Order ticket, positions, orders. Good till cancel. Yes, you're good. 100% good. Okay, so this is counting commissions. I think I'm good then. I think I passed every single one. Obviously, it was super, super degenerate, but it was also super, super fun. So that's cool. And then obviously the take profits were brand new as of today. So making basically 3,000 on each account, and then I'm making 9,000 on the one account that I blew out early, and then revenge traded with 10 contracts and ended up getting my profits anyway. So there you go. There's no point in me trading this anymore because they're all done. In fact, I should probably kill the copier. Positions, there are no positions, and orders, there are no orders. So that's donezo. Well, that's a fun day. Thank you, pal. My buddy pal, J-Pow and I, the best of buddies. If you're in the Discord, I made a shitload of trades on the swing account, so you might want to check that one out. You might want to. The NASDAQ still grinding up with the delta. The S&P 500, very erratic. It was just popping now until 1047, now getting hit. Remember, someone's getting blown out right now. This 6.4, like they do not want this above 6,440. Then there's another one at 75, and then there's some at 6,500. So this smaller play blown out. This good size play is actually right now getting blown out, but who knows? It's not the end of the day. Next one up is 75. It's like the Grim Reaper is just coming from them. Axe them. So we're gonna see how that goes. Interesting SPY flow. Mag 7 coming off a little bit right here. Hopefully it just, I want to see a new all-time high today. I want to see that beautiful follow through. I want to have a good reason to be celebrating on this Friday. SPX. Nope, that is not right. Why is this not? What the fuck? What is going on here? What the fuck? Stop. Okay, there we go. Yeah, all-time high, 6481. We are not far away. We're just kind of chilling. I'm looking for that. And then from there, the natural level would be 6,500, very obviously. So let's see if we could take this out. What time is it? It's almost 11. Trump is speaking in an hour. Interesting. I'm jealous of, I know some of you, raise your hand in chat Put your hand up if you degenerately had a position before 10 a.m. Who in here, which one of you absolute degenerates had a position before 10 a.m.? Someone in here did it. I know you did. It's not a good decision, but damn, did that play out. Damn, was it worth it. Tom Lee's on CNBC. Let's see what that guy has to say. Where's the video? There we go.
Fed Governor Lisa Cook is here in Jackson Hole, is actually in the room. And we had said earlier, you asked me if she was there. I said I didn't see her last night, but I didn't know that she was actually in the room here. Obviously, FHFA Director Bill Pulte upping the ante this morning, doing something that you had pointed out yesterday, Sarah, which was that the apparent violations that are being talked about were not committed during the time that she was at the Fed. But now the idea that Bill Pulte is saying today, well, she filled out a Fed form. Well, that creates the possibility that maybe there was some of that issue with the allegations that does actually relate directly to that work. And the president this morning obviously saying he would fire her if she did not resign. My understanding is she's in the room in the conference here at Jackson Hole, Sarah.
I guess the question now from her is, what kind of response do we get? And it seems like it has to come sooner rather than later, because the president is making it very clear of his intentions. If she wants to defend herself and explain the paperwork and produce, more evidence, that she should do that.
The problem becomes, Sarah, I think you're absolutely right.
This guy's
from a
getting
political
tested
standpoint,
right now.
from a
The
Federal Reserve
75 is
reputational
getting blown
standpoint.
out.
However, she is now in legal jeopardy, and I believe, I'm not obviously an attorney, but I've covered enough of these things. The attorney would say, don't say anything until you're charged, right? So there is this balancing of the reputation of the Fed, her own reputation, against the legal jeopardy she faces, maybe a little hamstrung. As you know, she did put out a statement saying she would not be bullied to leave office by a tweet, and she was going to be gathering up to check the documents, which she did not have handy. They're about 4 or 5 years old. So, we wait, obviously, for a response and very strong comments from the president, from the FA director about the need for her to resign, and obviously Ed Martin yesterday from the Washington Attorney General's office. So there's a lot of pressure on her, but also she faces this legal jeopardy, Sarah.
But Steve, no reports or information about how she's been received at the symposium by participants.
No, I've not had a chance to see that yet. My guess is she will be received well.
Yeah, although some questions maybe from journalists, I would think, as well, trying to track her down and figure out what's going on there. Thank you, Steve. We'll continue to obviously follow this saga on Lisa Cook and these new allegations from FHFA.
In the meantime, we'll talk to Cleveland Fed President Hammack in a moment, who says she would not cut if the policy meeting was tomorrow. We'll get her reaction to the Fed chair's speech when Money Movers begins in just a few minutes.
Oh, I want this so bad. How much exposure do I have now? I put quite a bit. I really punted long in my swing account. How much money? 20,000, 15, that's 35, 55, 75. I punted 75 grand long in just bullish exposure to the market. I need this to go. 75 fucking grand on the line, dude. I need to get my head examined. I need to get my goddamn head examined. Oh God, I need this one to hit. I need it to hit so bad. SoFi ripping, yeah, that makes sense. Fed cutting rates, SoFi, yeah, that one should be going. This one's going to be very Fed rate, I guess, sensitive, for lack of a better word. SoFi is already up 6.7. Let's go through them all. All right, Bitcoin, double bottom, looking for the break of 117, and this trend line, double bottom there at 112. Tesla, actually a nice reversal, a higher low. Fuck, dude, that's actually looking kind of nice. Do I want to throw another tenner? Another 10K there on Tesla? That's looking good. MicroStrategy trying to reverse. I'm not dip buying that one. Coin, same thing. Meta's waking up. I think it's downside gap fill. Apple is looking good. This one has shown relative strength when the rest of the market was getting hit, so that's not a crazy play at all. You could be long at 228, targeting at 235 in a breakout, and your risk is 223. This is probably one of the best risk-reward setups right now. I personally do not have a live position with options on Apple. It is in my long-term account, but for option swing trade, this is probably one of the best opportunities you can see. You have minimal risk, you have decent reward, you could scale out some there, ride the rest, and it has relative strength. Microsoft bouncing off that 50 EMA. NVIDIA has earnings, so I'm not going to play it earnings next week, but also looking pretty decent. Netflix actually red. Palantir. A little dip buy action going on there. Hood. Also Broadcom. BITX trying to save itself. What are the most traded ones? So the most action is SPX, SPY, Tesla, NVIDIA, Qualcomm, IWM, Palantir, MicroStrategy, NDR. Tesla up there. Holy fuck.
Good Friday morning. Welcome to Money Movers. I'm Carl Quintanilla with Sarah Eisen, live at Post 9 of the New York Stock Exchange. Today, the Fed chair signaling he is open to a cut in September, citing the shifting balance of risks. We have live reaction to the speech from Jackson Hole with Cleveland Fed President Hammack in just a few minutes. This week, she said she would not cut rates if the policy meeting was tomorrow.
I think today was a score for the Doves, not the Hawks. Right now in the markets, celebration of what we just heard from Chair Powell, the S&P up 1.6%. Near record high. The NASDAQ up almost 2%. Remember, the NASDAQ was the loser so far this week as we had seen the deterioration in the AI trade. Well, it's coming back today. All those big cap names like Palantir, Alphabet, Meta, Microsoft, Amazon, NVIDIA, all turning higher after Chair Powell. The Dow at a record high of its own. It's up 2%. Some real strength in the small caps. The Russell 2000 now powering ahead almost 4%. On the prospect of lower interest rates. Yield sinking, the 10-year yield 4.26. It was above 4.3 ahead of the speech. The dollar weakening. The odds of a September cut go to 100%, and also 100% that will get a second cut before the end of the year.
We just heard from the Fed chair a moment ago in the last hour where he said the Fed may shift its policy stance after more than 6 months of holding rates steady. Take a listen.
In the near term, risks to inflation are tilted to the upside, and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago, and the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
Joining us this morning with his reaction, former Boston Fed President Eric Rosengren. Eric, it's great to have you. Thanks so much for your time today.
Good to be with you.
I think you were looking for a little clarity out of the speech, but was this more than you expected?
I think it's a mildly dovish speech. I mean, the phrase that you just highlighted with policy in restrictive territory, it may warrant adjusting our policy stance. Certainly gave a tilt towards easing, which is a little bit more strong in the language than I was expecting.
The other elements that we've been discussing all morning have been his view of whether tariffs would create a broader hunt for, say, wage hikes among workers. He didn't think that was likely given some of the downside risks that are now present in the labor market. Is that something you go along with?
Personally, I think the risks may be a little more elevated than that language indicated, but certainly we haven't seen as much of a pass-through to consumers to date, though we have seen some pass-through. And I think most economists still expect that. So if you look at the survey of professional forecasters, for the next 2 quarters, they expect measures of inflation to start with a 3, not with a 2. So I think it was a fairly balanced speech. He meant it to have a slightly dovish tilt. The markets may be reacting more strongly than he intended with the language he picked. So I think it does reflect the challenges that the Fed has right now, that while it is slightly restrictive in terms of its stance, there's still inflation that could be in the threes over the next 6 months, and yet the labor market is definitely a little bit slower than it was a while ago, and he has to be concerned that he doesn't want to have the unemployment rate go up too quickly.
We're pushing.
Do you think there's
We're
a big
definitely
risk
pushing.
with overweighting
Almost at the new all-time
unemployment
high.
risks now instead of the inflation risks?
So I think his speech was actually pretty balanced, but I think what he said
Remember,
is the balance of
Vanquish
risks
50% off
certainly
SIM
make
defunded
it-
with the code Goonie
it
on
may
options.
warrant-
Apex
I
same
mean, I
code
would highlight
Goonie
that there's
80%
still
off
two-
for
there's
futures.
a CPI report,
That's what I was
a
trading
PCE
here.
report,
And
and
then
an unemployment
obviously
report
just to
that we're
show
going to
you
get
this
before
account
the
as well.
September meeting. If those were dramatically
Here's my
different,
Vanquish
he's
account.
left the door
Crushed that
open
trade
that he
at
doesn't
2.2K.
necessarily have to do it.
So
So I don't think it was a
options,
promise. It was
futures,
a promise if the data continues in the direction that it
options,
currently is.
Futures.
He had a line in there about the Fed mission remaining intact, that it would rely on the data, respond to the data. Didn't explicitly sort of say we reject
Apple's looking good,
outside
folks.
influence, or any kind of jab to the president. How do you think he handled that sensitivity?
Well, he basically didn't discuss it. I would have been hopeful, actually, that he would have spoken a little bit about central bank independence and the role it has in keeping inflation expectations under control. But I think he chose, given the political environment, not to use any language that might be viewed antagonistically.
Well, speaking of, as Chair Powell was speaking, President Trump was taking questions from reporters, and he was asked about Fed Governor Lisa Cook. Listen to what he said.
You're going to fire Lisa Cook, the Fed governor, over her mortgage fraud?
If she doesn't resign, yeah. What she did was bad, so I'll fire her if she doesn't resign.
I'll fire her if she doesn't resign. I mean, kind of a sensitive question. As you resigned from the Federal Reserve before your term was over, I know you had some health issues, but it was all around that sort of like trading scandal. I just wonder what you think is going to happen here and what your advice to her would be.
Trump is speaking in 50 minutes.
I don't know what Lisa Cook is going to choose to do. It is a difficult situation for her, but to date, we have allegations, but no facts. So until there's some facts out, I don't think people should draw any conclusion.
No, but I mean, Bill Pulte has put out a number of publicly available records when it comes to houses and mortgage applications that she put out. I mean, you're right, there have been no charges. They're just allegations at this point, but there are some documents. Do you expect the Fed makeup to look very different this time next year?
Well, I think the Fed will look different next year, particularly because there's going to be a new chair. And it's clear that the administration's likely to pick someone who strongly endorses lowering interest rates. And while that might be an appropriate policy, it remains to be seen where the economy is going to be next year. So in terms of Fed independence, I think it's a little bit of a challenge for the successor, whoever that successor may be.
Are you going to stream
they're
Trump?
viewed
Yeah.
as hoeing too close to an administration's view
Why
that
not?
may or may not be consistent with the dual mandate.
Meantime, we're watching, obviously, market reaction, as you said. And I have a question about housing and whether or not it is so notably weak that the Dove case really gets bolstered right now by just how
This
much
guy's
damage,
sweating.
some argue, is being done to the sector,
Sweating.
which we always say sort of punches above its weight on the economy.
Battling out
Yeah,
right
the
at
housing
75.
sector has been weak. It's a relatively small proportion of the entire economy. So when you look at its weighting in GDP, it's roughly 4%. That's not a huge weighting, but it obviously affects many individuals, particularly those individuals looking to purchase a home now. But if you let inflation go up too high, that won't help with the interest rate. In fact, it'll do the opposite. So if the Fed eases too much, the long rates may go up, actually exacerbating the situation. So it's a little unclear, even though you may be concerned that housing has been weak. Prices have gone up quite dramatically. They haven't come down nationally very quickly. So in some respects, that is more of a challenge than probably the interest rate for many potential home buyers.
Right. We always point out that mortgage rates bottomed last fall right before the Fed began to cut. And lots happened since then in the way of tariffs and fiscal behavior. But I guess my question would be, when the administration trots out officials and argues that the Fed should cut because we need mortgage rates down, how much of a guarantee is that?
Well, the mandate given by Congress doesn't say we should overemphasize housing. It says we should balance kind of unemployment and inflation. So the administration has been cherry picking things that they think have been hurt by the slightly restrictive policy. But I think it remains to be seen whether it's actually interest in the home buyers that you have an interest rate that at the short end goes down, but potentially have the long end go up.
So where do you think rates are this time next year?
I think the short-term rates will be lower. I think it's a little less clear on the long rates. And the reason is it gets back to the Fed independence. If you're not sure that the Fed is going to focus on a 2% inflation target and that it's going to be unduly sensitive to things like the interest rate on the debt, that can potentially create an inflationary bias that's going to concern market participants. So you want the Fed to ease when it's appropriate to ease. You don't want the Fed to ease when markets may think otherwise.
Yeah, Times has a big piece out today talking about sort of long-time U.S. safe haven status and possibly getting chipped away as we see some assaults, some argue on the Fed or on BLS or other elements of NIH, you name it. We'll see what the coming months bring, Eric. Really appreciate your time on the heels of the speech. Thank you. Eric Rosenberg.
Let's dig deeper into how the markets are processing all these headlines from Chair Powell's speech. Joining us with his takeaways is Rosenberg Research founder and president David Rosenberg. Were you surprised to hear Powell much more open today to the policy pivot and the September cut?
Well, if you would have asked me a few days ago, I would have been surprised. But then I gave a good second look at the FOMC minutes that had come out from the last meeting. And what was really important, I think, was the Fed staff economics forecast, that the Fed staffers actually reduced their inflation projection. They had commented that the impact of tariffs are looking to be more muted than what they had thought previously. But the real kicker for me was their view that the unemployment rate is going to rise above the natural rate of unemployment. In other words, by the end of the year, we're going to start building some significant slack in the labor market. And they said that's going to persist not just through next year, but into 2027. And that was a really important message for me because, when you read the minutes, right, the FOMC participants, they just pontificate. But the only ones that actually give a projection are the Fed staffers. So as I put in my note this morning, I had said that my hope is that Powell is going to pay some lip service to what the Fed staffers had to say at the July meeting.
And maybe that's what ultimately tilted him toward this policy stance. So what do you think happens from here? How do the forecasts for monetary policy change?
Well, I think this was more than just mildly dovish. I wouldn't say it was super dovish. There were enough caveats, but when you read between the lines and you assess the tone, this was not just tipping his hat for a September 17th rate cut. I think this was actually a move towards suggesting that we're going to be in for a sequence.
The odds dropped from 42% down to 14%.
I think that's
Look
what
at that.
I came out of it, that this is not just going to be September and then we're going to pause.
Crap.
I think there's going to be a sequence of cuts coming after that.
And do you think he did a good job in relaying that message without making it seem like he gave in to political influence?
Absolutely. Look, I think that, he might be a lawyer.
90% chance
but he
now.
sounded a lot like an economist. And I think that what was really important
chance,
was, he
45.
didn't dismiss inflation risks outright. He did acknowledge that this is a drip. It's not necessarily a one-off.
40% chance of 75
what he said importantly, and this comes
year.
down to what the Fed staffers had to say about the labor market, is that we are likely going to build up enough slack that whatever near-term inflation, statistical inflation that we get from the tariffs is not going to feed into wages. So you got to think about that. If the tariff effect on prices does not feed into wages,
Delta's diving though,
then the
while
tariff
the Mag
effect
7's
hits the
picking
wall
up.
in the labor market, and there is no sustainable inflation coming
Get
out
all
of
those
this. This is
calls
not
getting
2021, 2022, 2023, when the unemployment rate was going down, labor market was tightening, and we had burgeoning demand. This is something totally different. So that's really one of the key takeaways was the line when he had mentioned about the fact that his base case is that this will not trigger a response on the wage side. Ergo, what we're left with the tariffs is negative real incomes, not future inflation. That's my take on it.
Yeah, and it's a big. I think it's a big change in tone from the Fed chair and a change in position when he was warning that tariffs could be ultimately inflationary. So, David, the market is up sharply. S&P's a few points away from a record high. Dow's at a record high. Nasdaq surging. Small cap surging. Bonds are rallying. Do you stick with this on this idea that we're entering a cutting cycle here with an economy that's doing relatively okay?
Well, you know what's interesting? That is exactly a year that we had the last Jackson Hole Symposium, and Powell gave a speech then where he tipped his hat towards an easing, which we started to see in September. And that particular day, the stock market and the bond market were responding exactly as they are today. I think the big difference for the stock market is that the
right there on the SPY
egregious level of multiples and evaluations I think are going to limit what future gains will get in the stock market. I'm not surprised. The knee-jerk reaction is going to be positive, and it's an outsized reaction, in my opinion. I think when you read through the lines, look at what the chairman said near the beginning of his speech. He mentioned he didn't have to do this, that the historical record shows that when the unemployment rate is up a 0.5 percentage point from the cycle lows, you invariably move into recession. It's the only time he mentioned the word recession, and somehow people have forgotten
Bitcoin,
that.
do it.
But that was, I think, a very important reference. So I am, I can understand why the stock market is responding, how it's responding. I'm a little, I guess if you're going to ask me if I'm surprised, it is surprising that the stock market would respond so much vigorously than the bond market would, especially moving out the curve. But my sense is that the stock market right now sees no recession risk whatsoever.
Bitcoin taking out a recent high Tuesday the 19th, heading for this downsloping trend line
an asset bubble that we're in.
Just above 117.
And could it continue? Well, it's continued for the past year. We've been in a bubble, and we saw in the late 90s you can be in a bubble for a couple of years. But that's the environment we're in. And the enthusiasm and exuberance could continue, absolutely.
Meantime, David, actually stocks got an additional boost today by some headlines out of Reuters about Canada, which you know well. Source to Reuters, removing retaliatory tariffs on many U.S. goods designed to be a gesture of goodwill to help talks with U.S. progress. I think Carney and the president might have spoken earlier in the week, according to some reports. We know what's happened to employment up north. Do you think Canada's kind of on the ropes?
Well, I think that in some sense it was a bit of a ruse because
holy fuck! Look at the
when you're
Russell.
taking a look at the situation, 90% of what Canada exports to the U.S. Covered by the USMCA, they were not affected by the tariffs. So we could talk about all the trade uncertainty.
Small
Canada
caps
actually
are
so far
loving
got
this.
let off pretty lightly. Anything that removes any
Technical
tension, residual
resistance
tension,
239
is good news. I'm writing a report on Canada right now. The problem in Canada is the tax gap against the United States is just far too high. And that, to me, is a bigger problem than the front page headlines on tariffs. So it's just not that much of a big deal. I think the bigger deal on the trade side is going to be next year when negotiations over making changes to the USMCA come to the fore, and just how much in the way of concessions the president's going to squeeze out of Prime Minister Carney. That's going to be the real test, is not what's happening right now. The real test is going to be how the free trade agreement, if you want to call it that, is going to be altered over the course of the next year or two.
I do think it speaks to something, Carl, the fact that if they're backing down over retaliatory tariffs, you know, one of the big fears with tariffs economically, David, correct me if I'm wrong, was the retaliation. That if we announced all these tariffs, everybody would retaliate, and that would really hurt our economy, and it would really drive prices through the roof. And I think one of the big surprises that doesn't get talked about as much and is overlooked is that there hasn't been much retaliation. I mean, most of the world has not retaliated against us for it. They've come to the table to make deals. And perhaps that's why we haven't seen such a sharp impact from tariffs so far.
Yeah, well, that's, you know, the trade relationship, that the trade deficit ipso facto is a benefit to exporters around the world. And nobody wants to lose that access. I would say 100% that was my big concern, is that we were tipping our way into a 1930s type global trade war. That hasn't happened. However, the elephant in the room is China, and everybody else is basically tied for a distant second. So we're going to have to see how all that plays out. But you're 100% right. I think that the president's done a terrific job in basically intimidating the rest of the world, and maybe the rest of the world realizing that we desperately need the U.S. consumer base, so we will acquiesce. And that definitely is what happened. It doesn't stop the fact that the effective tariff rate in the United States is going from 2.5% to something close to 17%. You see, that hasn't gone away, and that is a de facto tax hike. It's a matter of how it gets distributed across the supply chain and then to the consumer. But remember that it's the domestic importer on record that pays the tariff. So good news, no retaliation, no global trade war. But this is still early stages in terms of what the pinch is going to see. And this, again, is not what the stock market's looking at. What is the pinch going to be? I mean, if the president is right that this is not going to make its way to the consumer, then it's going to make its way through the supply chain and squeeze corporate profit margins. And what I can tell you, notwithstanding the huge rally today in the wake of Powell's speech, is that the implications of tariffs on costs and profit margins are not well appreciated right now.
That's exactly what we're going to talk about with Hammack in a few moments, who yesterday said that we're just at the beginning of this, something that a couple of her colleagues have reiterated. There's the ongoing, too, David, discussion about, I mean, Modi's in Beijing right now with Xi and holding phone calls with Lula, and whether or not the BRICS can put together some kind of sort of coalescing of a response to this, you know, to the United States, which would feed this notion that globalization continues just without U.S. participation.
At the margin, that's 100% true. And look, you know, one of the things that you brought up, Mark Carney, and he's busy trying to forge relationships in other parts of the world too. Tougher for Canada, you know, given the extremely close ties that we have with the U.S. And the border. But I think that makes perfect sense, that you're going to find at the margin splintering and regional relationships. I mean, that was one of the first things that Xi Jinping did after Reciprocal Day or Liberation Day, was to fly out to Southeastern Asia to tighten up China's trade ties with the rest of the continent. So I think that is clearly a theme on how global supply chains are going to be shifting in the future. And this will play well to the president, because, you know, when you carry through isolationist policies, which is what the tariff policy is, ipso facto, you rely less on your foreign trading partners.
So how do we get a 50 basis point cut? That's the next question, David. In September, a jump in the unemployment rate maybe for the August jobs report?
Yeah, I think you'd have to see, you know, look, we're at 4.2. We're almost at 4.3. Maybe if you got to 4.5, coupled with a contraction, not just a slowing, but a contraction in payrolls, that could do it. Or if you got a reversal in the stock market, but as we're seeing in real time, you know, all of a sudden, you know, declines of 5 days in a row are now a distant memory. I think it would take two things, three things really: a big drawdown in the stock market, a dramatic widening in credit spreads, or a real unexpected weakness. And I'm talking about not just a slowing in payrolls, we've seen that already, but an actual contraction to get 50 basis points. It'll take that would take a lot.
There's also the September 9th big preliminary revision to the establishment survey that's going to be released. A lot of people looking at that as well, because revisions have showed that have shown lately, especially last month, that the job growth has been overstated.
Well, and a lot of us have been talking about that for some time because, what a lot of people don't know is that, you get the non-farm payroll report. Part of it is the actual survey of the establishments. The other part is what they call the birth-death model, which is guesswork trying to assess, how much new employment is coming from net new business creation. And when you cross-reference the QCW numbers, from the census to the payroll numbers, you get those revisions. It's basically because there's been dramatic overestimation of what the net new business creation has done in terms of generating new employment. Like, I'll just tell you right now that when we got that July number, if it wasn't for the birth-death model, like if the BLS really wanted to fudge the data, they would have fudged the birth-death model. Like it's like a Fugazi. But if it wasn't for the birth-death addition, payrolls would have shown a negative sign. It would have shown, never mind whatever, plus 74,000. It would have been negative without the benefit of the birth-death model. And that's the big risk, is that that's been the overestimation. And if you start to see the birth-death model, and I talk about people about birth-death model, they think I'm talking about obstetricians and babies.
Yeah, can you just explain what you're talking about?
Yeah, what the fuck is
it's called, well, you know what I'm talking about, but it's the birth-death model that's been the factor that has created the overestimation in payrolls. And if that flips, then we're going to start to talk about negative non-farm payroll readings. Then you and I will talk about 50 basis points. And then all of a sudden, the recession nobody sees coming is going to start to make the front page news. It's interesting that I would say recession risk
profit taking
is higher now than it was in 2022 and 2023. But in 2022, 2023, everybody was talking about recession. And recession risks are actually higher now. The labor market is far weaker now than it was then. And yet, you talk about recession today, you're like the pariah at the party.
No, yes.
But I think that is going to be the big surprise. It comes down to your question. It's hard to pinpoint 1 month, but I think that there's a significant chance in the next 2 to 3 months, non-farm payrolls prints negative.
Yeah.
And it'll be interesting then to see what the market reaction is going to be.
Yeah, that's an echo of what Zandy told us the other day on this hour.
And now we're back to vintage Rosenberg.
Yes.
Underestimating.
Yes, it's like old times.
And birth-death model, which is really about birth and death of businesses, right? And accounting for the net new jobs and those jobs lost from that. David, it's great to have you for an extended chat here on this very large market reaction to this very big statement from Fed Chair Powell and Jackson Hole. Thank you, David Rosenberg.
You too. Thank you.
Speaking of which, Dow's up almost 900, 2% gains for the NASDAQ and the Dow. S&P's working on an all-time high, but I think it might have an all-time close here. Mike Santoli's with us at Post 9 to look at what is working, everything.
Yeah, pretty much everything. Actually, on the New York Stock Exchange, it's 90% plus upside volume day. That's pretty comprehensive. That's usually the kind of a move you don't want to say is a fluke or something that you immediately fade. A week ago, writing up the kind of current field position of the market.
Crazy.
I said the market wants a rate cut, but it doesn't want to need it. And that's where we are, basically. And the market's conclusion was we got a little bit of a scare, and there's nothing better for stocks than to put a little fright in people and then have the threat not be realized. And that's what we did. We kind of pulled the rubber band back a little bit, and we're able to shoot higher on this. How far it carries, obviously, we don't know. We do know that it's benefiting the parts of the market that are most levered, lowest quality, et cetera, all the financials and things like that. And so that's usually a pretty good sign for a potential reacceleration of economic growth. You want it to last more than a day, and you want it not to just be about cheaper money in a market that doesn't have a great use for it.
Well, there are some parts of the economy that does have a great use for rate cuts, and that would be housing. I mean, look at some of these housing stocks right now. The builders, for instance, they're soaring. Anything adjacent, the Home Depots and the RHs.
All right, that's getting a little bit boring. I thought the last guy was interesting. I think he had some good inputs, but now that they're talking about housing builders, lame as fuck. Folks, we have an awkward amount of time to kill. We have about 30 minutes until it is at least scheduled for Trump to be doing something from the Oval Office. Now, shit. Hang on.
Order filled. Order
put
submitted.
In my stop. What am I? 22. All right, we're gonna sell one of these at 50.
Order submitted.
Literally just risking this recent low and then trying to lock in roughly a 1-to-1 risk to reward. And then on that lock in, I just want to move my stop to break even. And then if I have a runner, I have a runner. I'm not trading on the Apex accounts because I already hit the profit target that I need. I'm trading on the new take profit accounts because technically I can get them up to 4,500 today. So that's kind of, hey, if there's an opportunity, why not take advantage of it? But just 2 contracts. The idea is locking one in at a 1-to-1 risk to reward, and then on that getting locked in, moving the stop on the runner contract to break even. And then if it runs, it runs. If it gets stopped out for break even, it gets stopped out for break even. I don't know. But I was waiting for a little bit of a dip. I thought this was in here, so I took a stab at it. It hit, so just trying to keep the losses small and manageable. Took another stab at it. I wish I was a little bit quicker to react, or I suppose even a little bit slower. I guess regardless, I was either a little too quick or a little too slow, but I'm literally just risking this recent low. And if it goes, it goes. If it doesn't, it doesn't. Market's pretty much 50-50. It's equally distributed, and it's all about your risk to reward management, obviously, also with your accuracy. If you can jack up your reward and minimize your risk while getting higher and higher accuracy, well, guess what, folks? That's how you make some money. That's how you make some money. So obviously, my risk is the recent low. My reward is the recent high. Like I said, roughly 1-to-1. When that hits, I'll be moving my stop on the runner up to break even. And obviously, at that point, I will have realized the first trade, and then the second one is a lotto ticket play. It's not big brain stuff, and really what I'm doing is I'm attempting to get these accounts to get just over 4,000, maybe 4,200, 300, something like that. And then at that point, I'll stop on these for the day because there is a 50% consistency rule or some shit like that on Take Profit Trader. So there's a little bit more room in here, but it's not often you get opportunities like this one. All right, so what is the Trump one actually called? Oval Office, President Trump's Oval Office speech. Makes me live. All right, let me go back to this so you guys can see it. Hang on, we're updating the title really quick. Trump makes major announcement. What the fuck? Why is my keyboard not working here? President Trump makes major announcement from Oval Office. All right, there we go. All right, cool. That's happening in less than 30 minutes. How's this trade? This is, in terms of day trades, this is what I'm in. Do I want to move my stop up a little bit? I could move it up to this recent wick, or I could just be patient and literally wait here. Dude, what? This is a fucking score. I don't know if I've had a day like this in a hot minute. That's a lot of dinero. That's a lot of dinero. If you want to trade with Apex yourself, like I said, pinned to the top of chat in the description of the video, code Goonie will get you 80% off. This is what I use for when I'm trading futures, and then when I'm trading options, I use Vanquish. Same thing, code Goonie will get you 50% off there. If you are interested, Bitcoin's looking good, Tesla's holding, Palantir's holding, Meta's holding, Hood might be pushing again, Apple's holding, Microsoft gave a little back, Nvidia might be pushing again. All right, I'm just looking for a little push up there to 50, where there's a lot of people selling. With 20 contracts, at what percentage do you usually cut your losses? I don't know, because I don't base it off of percentages. And also it's dynamic. I think if you use a set thing like that, like X% or X move, that's not good at all, because that means it's not going to be dynamic with the increase or decrease in volatility. I find that when traders have like hard-coded risk of like, I risk whatever, $100, I risk 1%, that's not good, because in a higher volatility environment, you need more room and you should be going for more reward. In a lower volatility environment, you probably are over betting. So I have found that having like hard coded things such as that of like whatever, I don't think that's good. And also with 20 contracts out, I don't have 20. I didn't trade 20 contracts. I was trading 2 contracts. Code for Vanquish doesn't seem to be working. I might be doing it wrong. Just click on the product and hang on. I guess, let me see. Maybe it's for the advanced. You just have to hit the apply. I mean, I bought some the other day. I know it does work. It might just be for advanced options. Wait, I think it was on my own portfolio. Where was it? Stocks, basic, and advanced options, 50% off. No, Goonie should work. You just have to hit that apply button. It should work. If there's issues, maybe email them. That's like, Goonie should definitely get you 50% off. Definitely. And then same thing on Apex. It should get you 80% off those evals. Come on. Let's go for it. Let's go for it. Go, 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 go. Come on. Bring it home. Bring it home. You can do it. You can do it, Tanto. You can do it. You can do it. Go. Almost got there. We got up to 45. I'm looking at 50, which is right where there's a lot of selling. A lot of selling. Right there, the 50s. Good chunk of people are thinking the way I am thinking. Good place to take some money. Come on, let's just blow through this wall. Let's grab some popcorn, shrimp, and blow out. Come on, just get through it. There we go. We're picking up a little bit. We're picking up what it's laying down. We're picking up what it's laying down. Point of control is at 23630, and VWAP is like all the way down south. I don't even know if I can scroll far enough to show where the fuck VWAP is. It's at 425, and we're trading at 642. That's crazy. All right. Anyway, once again, this is the next interesting level. Will it break through this resistance? There's quite a few people. These are sitting passive sell orders. That's what this red block above means. A lot of people are trying to dump their NQs at 650. And let's hope that there's follow through. And for some reason, it just got smacked. What the fuck? Oh, do I want to put them both to break even right now? And just admit I'm stupid and wrong? Oh, it feels like it's going to get tapped. But do I think that this... I mean, honestly, that's some good distance. Like, I kind of want to keep my risk here because that's what my risk is meant to be. And then if it pops here... I'm just going to... The trade's the trade. It's out of my hands now, folks. It's out of my hands now. Mag 7, Delta's at the high of the day. NASDAQ did take a little bit of a hit from 1104 to 1127, picking up a bit now. The SPY has looked crazy all day. Massive pumps and dumps and pumps and dumps. This just reeks of big players repositioning. Speaking of big players, this is one of the most aggressive buy days I've ever seen. They are just... This is why IWM is up so much. This is them just buying the entire New York Stock Exchange, which is like 3,000 stocks or something like that. They're just ripping it, ripping it. Big boys are buying heavy today. Now, just because they're buying heavy, that doesn't mean they're right. I mean, who knows what Trump's going to say or not say. Like, there's obviously unknowns, but based on the information we got from Powell, it is enough for the large players to be buying pretty aggressively. Pretty aggressively, once again, across the entire New York Stock Exchange, which is about, I believe, roughly 3,000 different equities, I think. I believe it's in that realm. Oh, we're kind of range bound. Speaking of, come on, dude. Oh, maybe I should have put my stop at break even there after it got that freaking close. Is he just going to tap me out right here as like people are getting a little nervous as we are getting closer to Trump? He is going to fucking tap me out for no reason. Going to cost me $800. Fuckers. Come on. Save me. Just bounce. Save me. That got really close to hitting my risk. Like crazy close. Get away. Bounce back up. Bounce back up. You could do it. Get away. Get away. Yeah, we're just kind of coasting at the high. I think the market, not only do we have lunch, like we're kind of getting into that lunch choppy period, but big pump, little bit of a follow through, and then since then we're holding. So a little bit of a bummer that we're not still going, but also it's bullish by the fact that like we're not giving it back. Like the market is accepting these levels. So yeah, we're also a little bit in lunch, or we're about to be in lunch. Bitcoin's looking good. But we're also just waiting for Trump, who is speaking. The president makes an announcement, Oval Office 12. No one seems to really know what it's about, like even in a larger context. So we're just waiting. Hopefully Trump doesn't reverse all of this. That would be very, very nice. I'm going to be uniquely pissed off and poor if Trump somehow is stupid enough to reverse all of this. God, when people post stuff like this, they're so fucking stupid. Short ratio. Dude, they don't even know what short ratio is. They think short volume is short interest, and they're so fucking dumb. They're so dumb. All right, yeah, we're just waiting for Trump. What in the world? All right. I'm just looking to see if we're gold popping. Interesting. The Cracker Barrel redesign is getting dunked on the internet. Dunked on. All right. Okay, there's one more thing we should probably check. Financial juice. Let's see if we're missing any major news. Fed's hammock. Private credit is a place we should continue to watch. Leverage in the treasury market bears watching. The broad picture of financial stability looks good. The job market must be evaluated for a wide range of data. We need to judge the magnitude and the persistence of mandate misses. A large weakening in the job market could drive the Fed to cut rates. Okay, so Hammock kind of somewhat reiterating what we heard from Powell this morning. I think there's only a small distance from neutral rate. The Fed needs to be cautious about any move to cut rates. We need to be in place where inflation is moving back to the 2% target. Okay. Canada to remove retaliatory tariffs on many U.S. products. So that's another piece of good news going on. So it's not just the idea that the Fed might cut rates, which was unsure going into today, but also 53 minutes ago, Canada is to remove retaliatory tariffs on many U.S. products. That's kind of a big deal, folks. Like, I mean, obviously in the short term, there could be some noise here, there, and everywhere. But in terms of like the next couple of weeks, we might be seeing a continuation to the upside. We might be seeing the old continuation of the overall party here, where we're just saying, hey, we went to the bottom side of the channel. Now let's talk about the top side of the channel. I mean, if this just keeps going, we might be talking about 6,600 just. Like the question here is every single time you get to the bottom of the channel, you're saying, are we going to break or are we going to bounce? And then we bounce, we get a rotation up. We bounce, we get a rotation up. We bounce. This might be that rotation up to 6,600. Obviously, I'm talking on a multi-day, potentially a multi-week time frame. I'm not necessarily talking today. If it happens today, I'd be fucking stoked. But we're just building it out. And then also speaking of things that seem to save itself, the NASDAQ right here, channel. We were here. Is it breaking down? Is it breaking down? Nope. And same thing. We might be talking about 24,500 if we just get another cycle to the upside. Remember, historically, September's a rough month. So, like, I wish it were a bit of a stronger month. That would make me a little bit more confident in this. just from a seasonality perspective for the month of September. It dips at first, then it pops until about 2/3 of the way from the month, and then it gives it back at the end of the month. So maybe we'll take it, maybe we can buck the trend of the start of September and then catch this normal seasonal push to, like I said, about 2/3 of the way through the month. That would be a nice way to, I don't know, build out. Like I said, 24, like maybe give us a little target up here, a little bit, kind of like a drunken guy just stumbling home, but maybe in this zone, and then it pulls back for another test. Maybe. Oh, it's just dancing around where it wants to blow me out on this trade. I'm probably not giving it enough room for risk based on the ATR and the vol right now. I probably should be putting my risk around 93 or something like that from a structural standpoint. I just don't want to risk that much money because I'm already up quite a bit. So, like, whatever. It sucks that it didn't go up to 50. Retest and undershot it by about 5 points. And sometimes that's a little bit of the randomness of the market. Sometimes you're going to be a couple points off. Sometimes it could really help you. Sometimes it could really hurt you. It's the nature of the beast. The nature of the beast. The tariff rollback isn't just a noise. It reinforces bullish momentum across consumer and trade sectors occupied with Powell's dovish tilt earlier. It solidifies the fundamentals of strong intraday rally ahead into the afternoon. Those two things are distinct. You can't be talking about fundamentals and then talking about intraday rallies. Those, like, fundamentals are something that you're like witnessing and measuring over weeks, if not months, if not quarters. Remember, super small time frames have a lot of noise. You could be fundamentally very strong and have a pretty red day. You could be fundamentally very weak and have a pretty green day. So I agree with what you're saying, but to try to connect that to intraday movement of like a guarantee of what's going on, that's a large leap, a large leap. Remember, the smaller the time frame, especially when you're talking about intraday movement, it's like mathematically indistinguishable from noise. It's a lot of randomness. Bitcoin testing that trend line. That's what we just tagged the trend line. I'm loving it. Let's see. Imagine how fucking sick it would be if we could take out 118.6. Dude, come on. Obviously, I'm going to be very stoked. Even the fact that we hit that, a close above it, it's a win. But now I'm starting to get those visions of grandeur of like, what if we can push another 1.5K and take out this technical high and switch the trend? I'm getting those visions of grandeur, folks. I'm losing it. I used to shit on Green Day. Now I like their music. Weird. That's a very insightful look, Chip. I think that's a very, very insightful look. All right, it is time for me to sit down. I've been standing for far too long. I believe Matt once said that they upgrade your eval to a funded account at the end of the day. Yeah. You have to wait for the futures market to close for them to like process it and whatnot. So I can't like update mine intraday right now. I have to wait for the market to close, and obviously since it's a Friday, it means I can't trade on the funded accounts until Monday, obviously. So I'm just kind of waiting. Fuck. It almost got back to break. Just don't break down, dude. Not the biggest fan right now. It looks pretty freaking range bound, and my risk is right at the bottom of the range. So it could easily tap that and then bounce off of it and fuck me. Do I want to move my risk down to 80? I'm kind of looking at this low because by the time it hits that, it means like it legitimately broke down. So part of me is thinking about this risk point, just because for that to get hit, it means it took out this low, this low, this low, this low. Well, if I'm using just this recent one, it could accidentally kiss it for no good reason. Oh, and then how close are we? And then there might be jitters just related to Trump. Knowing my luck, it's going to just kiss this one, tap me out at the worst loss, and then rip all the way up here. If I really had to guess how this one's going to go today. Oh, come on. Is it going to bounce? All right, we're diving a bit here. at 600. So there were some sitting buy orders right there. It took those out pretty rapid. Wow. They're running her down now. Come on. Take them back out. Let's get back. I was hoping that 600 right here was going to hold as like major support. And I guess the bull camp was asleep at the wheels because they took that level out with relative ease. They sold into it pretty hard, cracked it. I want to see a quick recapture of 600 to feel a little bit better about this position. And then whatever this low is, I could base my risk off of that, I suppose. Nope. 85. Come on. All right, so some support being built at 85 right here. 585, that is, to be specific. 23,585. 85 support. Let's take out this resistance. Okay, come on. Take out 95. Oh, interesting. They're not building up sell orders at 600. They're building it up at 605. Interesting. They chose to, these sitting sell orders, they decided to straddle 600. They're at 95 and 6. Oh, fuck. Someone just sold. Now someone's really trying to get out here. At what the fuck is going on? Are this many people getting amped up for Trump? Okay. These orders got dropped to 75. I wonder if I should use that because mine's here in no man's land right now. It looks like these are at... Oh, fuck. How do I want to do this? Where was that? I'm trying to place my orders where I still have protection. So there's a right here, this deep red. That's at 575. 70. I don't want to get like wicked out on some bullshit just for it to bounce off of one of these support levels. Come on. All right. Lot of orders sitting here at 75. Lot of orders sitting here at 75. Come on. Let's bounce off of it. Let's get back up to 95. Let's get back up to 600. Come on. Come on, Tonto. If it daggers through 575 and doesn't recover, my position might be a little fucked on this trade. But they're not pulling their orders. If anything, more orders are getting built up at 75. A lot of buy orders right there. Come on, hold the line. Hold. Dude, they're really trying to press it, though. They're really trying to press 75. Hold the line. Hold the line. Hold the door. Hold the door. The Trump dump, dude. If this fucker dumps it, I'm going to be pissed. I really, really, really... Are they not streaming it from the White House account? They do stream quite a bit, but I'm not seeing a pending live from the White House account, but I'm seeing the AP. They're waiting. All right, so no matter what, we have this going. We have this going. All right, 75 is still holding. 90 and then 600. So they pulled those orders from 605 down to 600. The orders at 75 are still holding. So let's take out this. Come on. Lots of support at 75. There we go. All right, we took out 9. Let's see if we could take out. I like that. We are getting a bounce off of that liquidity zone. Take out 600. Okay. Now we have a little bit of support was there. Quickly disappeared. All right. Battle here is at 600 now. A lot. Okay. More and more. See how it's getting a darker color. They're really trying to sell there. So a lot of people trying to buy at 75. Not as much, but it's still a decent size. It's trying to sell at 600. And now at 95. Dude, this is getting all jumpy as we're a couple minutes out. Come on. Let's take this out. It's going to be the battle of what snaps first, 600 or 75, and we're pretty much right in the middle. Which one snaps first, 600 or all the way down here at 75? A lot of sell-side liquidity, a lot of buy-side liquidity. Let's see which way the market participants want to take it. All right, I have this up, so we're not going to be missing anything. I also have up the White House, their own YouTube account, and I'm not seeing a pending live, but who knows? I don't think any of those guys are really too into the world of higher-end tech performance. All right, the NASDAQ Delta is flat. The Mag 7 Delta is flat. And then the S&P 500 Delta trending down, but it just got a flow alert. And this is completely detached today. Momentum-wise, 5-minute, 10-minute, 30-minute, 4-hour, all bullish. Momentum-wise, 5-minute, 10-minute, 30-minute, 4-hour, all bullish. When I see technical breakouts with momentum, price momentum being this bullish, it makes me only want to take bullish trades in all time frames. And like, this is nothing that I look at. I'm like, oh, I want to fade that. Especially pairing it together with what we heard from Powell today. So putting together price structure, price momentum on the short time frame and on the medium time frame with the context and also what's happening in options. Ooh, what the fuck was that? Something just broke on my computer. Have no clue what that was. I do admit that this could look better. I don't like the look of the SPY flow. The Delta really dropped. A lot of calls being sold. Now, when I say being sold, that could be sold to lock in profits or it could be sold to create a position. It could be either sell to open or sell to close, STO or STC. So this call stuff, it could be new positions with all this positive gamma above. That is possible. Right here. I mean, a lot of people, they sold these, the 40s, they sold the 75s, they sold the 5,000s, they sold the 5,010s. That's a lot of selling. So that could be part of it. It could all be selling to close, as in locking in profits. So sell to open, sell to close, those are both possible. Regardless, it is call selling, dropping the delta. So I fully admit that could look better. I kind of wish it looked like the Mag 7. Even the NASDAQ, I'd take this. At least it's like somewhat trending up. The SPY is getting hit. So that could be a bit better. Let's take a look at this. All right. So as of today, there is more call open interest live than put open interest. Monday, Tuesday, Wednesday, Thursday, Friday, all the calls dominate more than the puts. This is a big shift from this morning. This morning, it was actually kind of put dominated, kind of neutral put dominated. So big shift from market open till now. Monday, Tuesday, Wednesday, Thursday, Friday, there are all more calls in play than puts. And it looks like 6,500 is the major node that people are paying attention to, with seemingly a reach target at 6,550. So those on the call side, the yellow side, the right side, the bullish side, 6,500, 6,550. That seems to be the strike for this day and the next 5 trading days, getting quite a bit of an action. Tesla's getting action, Nvidia's getting action, Q's, IDM, and Palantir and MicroStrategy. Those are the individual equities getting a lot of attention right now. Tesla, Nvidia, Palantir, MicroStrategy, and Meta is out here as well. So maybe worthwhile to throw it on your watch list. Checking in on the big guys. Fuck. Oh, they ditched. The sitting buy orders at 75 are kind of gone now. They left. Shit, that's not good. They pulled their orders. Not all of them, but they definitely pulled orders. And then also the selling orders, 610 all the way up here. They moved theirs up. That's strange. So they pulled their buy orders. We're getting that bounce. And oh, did they turn it into market buys? We got close, and then out of nowhere, someone started. They might have pulled their sitting buy orders and actually turned them to market orders right there. That's interesting if that's how they decided to play it out. But anyway, a lot of sitting. Oh, and they just disappeared. Literally just now, those orders got pulled. What the fuck is going on today, team? Team. What just happened? What in tarnation? The SPY Delta just keeps getting fucking hit. Oh, but the last interesting thing is the big guys have not stopped buying today. So putting all this somewhat correlated and somewhat uncorrelated information together tells me the bulls are back in control. We have the large players buying. We have bullish price structure and momentum, and the options flow is more bullish than it is bearish. It is the options flow that is like the one thing keeping me away from being like, oh, I'm like fully bullish right now. That's the, what is that 1020 low? I'm just going to use that and then watch this Trump speech on my trades. What is the 1020 low? 1020 low, 1020, 1008, 1020. All right. There we go. Okay. Whatever. Is that the high? Yeah, I just want to lock in one at the intraday high because I do think that the SPY wants to push a brand new high today, and then I want to have a runner. So that's like the basis, I suppose, of my trade, but we're going to see how it plays out. That one, like I said, I'm just kind of targeting whatever low we saw here, and then in reality, I'm just waiting for this speech to get going. Just waiting to see what he says, what he doesn't say. Probably shouldn't have made that trade. I guess it was somewhat out of boredom, but whatever. It's just on a couple accounts. It's not on my whole. Like, I'm already done with the Apex stuff. Trying to just give it a little bit of room to breathe. If anything, I should have been patient and waited for the pullback and then the pump. Actually, I could probably add into it. If we start to see a pump, ooh, I wanted Bitcoin to hold 117. Hag 7's fine. But the SPY delta just keeps getting hit right here. Dude, look at it. It just keeps dropping. Fuck. Put delta's going negative. Call delta's going negative. This is the old twofer. It is obviously more dramatically related to calls than it is puts, but definitely dropping. Fuck, man. Just, I mean, this is the lowest delta reading of the day. Lowest delta reading of the day as we're at all-time highs, so definitely might be some profit taking. Hopefully, dude, is Trump gonna fucking dump this on us? Everyone's sitting around thinking that J-Pow's the bad guy and he's gonna fuck us over, and he did his job. He pumped the market. Is it gonna be Trump now who like fucks us all up? Who we thought was the villain actually it turned out to be the market hero. And now the guy who everyone's saying is the market hero, well, to be fair, he hasn't started yet, so I can't really comment on what he's going to do or not going to do. All I can tell you is I am interested in a recapture of 600. Dude, come on. Dude, if this is one of those things where he's late by like half hour, 45 minutes, an hour, I'm going to be pretty fucking pissed. It's like a pet peeve of mine. I understand I get irrationally angry about it. Like, I fully understand that. But I do get irrationally angry with all these politicians and their scheduled speeches, and then they're massively late. It makes me so fucking angry. And I don't even really know why. I guess in a certain sense, I think it's just like disrespectful. And it happens time and time again. It's just like, I think that's almost like a test to be a politician of like, are you rudely late with all of your shit? I honestly do. Hang on. Your boy's coming up with a potentially crazy idea.
Order filled.
Yeah, fuck it. I added one.
Order submitted.
All right, locking in, and then I just want a runner. I just want to lock in a couple base hits and then just have a runner, set the stop to break even, and move on with my life. Let the man poop. You know, maybe I should. Come on, dude. Let's get this rocking. What are they saying about it on CNBC?
Price hike from the tariff strike.
So, Steve, one thing I kind of latched on to, the markets clearly or not, is the word may in there. May warrant adjusting our policy stance. We got to keep in mind we have a jobs report, we have a PPI report, and remember, PPI came in hot last time. We also have a CPI report before that Fed meeting. We also have a retail sales report. Not sure if that's going to really matter. When we're talking about some of these different reports, do you think that the Fed chair, he gave himself some wiggle room to later say we're not going to cut because the jobs report may be better than expected or CPI may be much higher than expected?
All that's correct, Frank. There were a bunch of caveats in there. The biggest caveat you didn't mention, though, that I would say is the one about inflation expectations. He basically said we are not going to allow tariff price increases to become broader inflation. That's on his watch. He believes that's in his control, and that would mean remaining relatively tight. So you're right, and I think what happened here, Frank, is he didn't really talk the market down, but he did tell them, listen, the data coming in September could be consequential. The market knows that. And so what will happen, I think, Frank, is the Fed chair doesn't need to say it. But if the data come out as you described it and lean against that rate cut, then the market will adjust over time. But right now, I think that they see a go-ahead for, and let me just make one other comment here, which is that if there are price increases, they need to remain linked to the tariffs. When you start to see them bleed over into other areas, Austin Goolsbee, in an interview we did on Friday, a week ago, expressed concern that you had service inflation out there. If that becomes a problem, that's going to move the Fed further away from a rate cut. But right now, he's got, I don't know, a green light, sort of, but a dim green light, I'd say, on the way. Maybe the market was a little over its skis in terms of its exuberance, but it's hard to tell how worried they were going into it, Frank.
You know, Steve, that last word you said, kind of a dim green light, is very interesting. By the way, your ears must have been burning. I was talking about you earlier today on MSNBC, just talking about the fact that you said that J-Pow, he may take a wait-and-see approach, something I described as owlish. So I'm going to give you that. You can use that going forward. J-Pow had the chance to stop by you when he was walking by with some of the other central bankers and really clarify what he meant, but he didn't really do that. It was kind of short and sweet today. As we look forward, and we're going to talk to the traders about this, what's the next economic report that really matters to the Fed? Is it just the jobs report? Well, is it PPI? Is it CPI? Which one do you think is the most important one coming up?
Can I say it's not as much the report as the way the Fed, Frank, is thinking about reports. And we're all going to have a conversation, the traders and you and me and the Fed. Everybody's going to have the conversation about what the right level of payroll growth is here now that immigration has really come down to almost nothing. We're deporting people out of the country. The labor force is shrinking. You can do the math, Frank. You can find 30,000, 20,000 payroll growth and an unchanged unemployment rate. So I would say, to answer your question directly, that the answer is payroll growth, the September 9th payroll revisions for the prior year, as well as the inflation reports. But it's also a discussion and listening to the Fed about how they're rethinking what they call the break-even rate is. How much payroll growth do you need to keep the unemployment rate steady, which is a measure of how tight the job market is, which is a measure of the risk that a tight job market or not would lead to broader inflation. That's the discussion you have to have, not just the number.
All right, Steve, we got to leave the conversation there. We're going to get to the traders, but, you know, I could talk to you all day, Steve. Senior economics reporter Steve Leisman, live at Jackson Hole. Thank you, as always. Jim Lebenthal, you're champing at the bit. I know you're ready to get at this. You started nodding on the last thing he said.
Yeah.
What's the proper payroll growth considering some of the enforcement of immigration with this administration?
Right, because the chairman was very specific on this. And what he said was that labor demand has clearly softened, but there's this curious kind of balance. That was the key word, probably second to the, policy adjustment may be warranted line. This curious kind of balance between demand has softened, but labor supply has also softened. So that break-even rate of unemployment, he's not willing to say what it is. It's too moving of a target and it's too unmeasurable. But what he did say, and I caught this right after the curious comment, is that downside risks may increase quickly. And for me, that was a moment where, looking at the markets, I saw the markets accelerate to the upside. It seemed to me that his verbiage, while measured, while balanced, definitely gave indication that the Fed is aware of the potential for the labor market to soften and for their focus to shift accordingly. Frankly, I saw this speech as very dovish, not very dovish, but much more dovish than I expected. I expected him to be a little stern based on where market assumptions were for a rate cut, and I'm not surprised that the odds of a September cut are now at 89% as I look at my screen right now.
Yeah, you know, the word may in there, even Steve saying it was kind of a dim green light. I think a lot of people are trying to parse this. Investors aren't. We see the markets moving higher, but other people who are market participants are really trying to figure this one out. Jason, I want to bounce this off you. From Ellen Zentner, the chief economic strategist for Morgan Stanley, says in part, labor market weakness appears to have outweighed inflation risk for the Fed, and the market's initial response speaks for itself. Longer term, the debate about how far and how fast the Fed will cut rates is just beginning. Do you agree with that? Today we feel like we got everything under control, but there's a pretty good way to go, like 3 weeks left to go before that September meeting. And again, 3 very influential economic reports coming as well.
There's no doubt about it. Obviously, jobs are going to be a big number on the 5th of September, and then revisions after that. And then we'll obviously get PPI and CPI, which I think will be important. I think Leisman summed it up great with adjusting for policy stances. Obviously, the phrase that the market kind of anchored themselves to. But the other piece for me is what Powell mentioned is in terms of inflation. He said that inflation remains well anchored. So that is definitely, he's putting that aside. And I think even from a tariff perspective, he is mentioning that as almost a moment in time that we will move through, right? So I think that the market is, and we know that the jobs are lagging indicators. We know that we will see a lot of jobs data going forward, but I think that was a major point for me. The other thing I will say quickly, concern for me going forward, it relates to gross margins. I think we have heard from earnings reports, although earnings are really strong this quarter, that there are companies that are starting to talk about increasing prices, like the Home Depots, the Pepsis of the world. Walmart, so I think that is Walmart as well. So I think that is something to pay attention to as we move forward.
All right. Kev, what do you pay attention to? We're going to get to your moves later, but is this a green light? Is it a dim green light, a full green light in your mind to put money to work, to put money in the market in places where it may be higher beta, higher valuation? Do you feel confident making moves like that?
Clearly, the stock market's giving it a 100% chance of a Fed rate cut in September.
Look at the Dow hitting a record high following Fed Chair J-Powell's remarks this hour, signaling a policy adjustment. Joining us here to unpack what we just heard, Tom Lee, head of research at Fundstrat, chief investment officer of Fundstrat Capital. Good day to be a bull like yourself, Tom.
Yes, it is.
How do you process what we just heard?
Yes, well, I think that it's the Fed acknowledging that the risks now are tilted for the labor market to be softening, and they want to head that off, especially because they don't think that tight labor markets are going to necessarily create inflation. That's a very good sign, and I think it means we have a dovish Fed again, and that's kind of a green light for small caps.
Small caps
and for equities.
They are working. Last I looked, small caps were up 3%. So is this what we need to really confirm the sort of broadening that comes and goes in the market?
Yeah, because I think that one of the things we should watch for is what happens to mortgage rates. But mortgage spreads are right now 360 basis points higher than the 10-year. Historically, it's 1.6 percentage points. So you could see a huge drop in mortgage rates. That's going to help housing, helps the financial small caps. And I think already the ISM, which has been below 50 for almost 30 months now, could finally go back above 50, and that's a good sign for industrials.
Although we had a discussion right on the heels of the speech about a little steepening in the curve. Is there a sense that the vigilantes are at least present, if not being necessarily vocal?
Yeah, but we could also be steepening because growth expectations are improving as well. So this could be like what I'd call a bull steepening. I'm not really sure what the fixed income terms are, but I think it's actually a positive sign for growth.
The only real losers today are going to be some of the yielders and some staples. Would you be cautious on those?
That's right. I think that markets have been holding their breath. They've been getting defensive. That's why we've been bleeding for 5 days. And so now I think there's a relief and some capital gets put to work, and it's good for equities and risk assets.
So, all right, we need to make some news here, Tom. Everyone listens to you. We're at record highs now for the S&P and the Dow. How much more can these stocks rally?
I think there's a lot of upside, especially because, once you get an ISM back above 50, it really does argue for a broadening of markets. And I think one of the leaders probably comes from the financial sector. So I think, towards the end of the year, 6,800, 7,000 is possible.
Holy fuck.
Led by tech still?
Yeah, so I think you still want to play
this week.
Yeah, you want to be long AI and the crypto trade because those have been the market leaders, so the Mag 7, Bitcoin, Ethereum. But the broadening is really the financials, industrials, and small caps.
So you like them all?
Yeah, it's kind of cyclicals, AI and crypto, but not the defensives.
Your crypto calls have been getting a lot of attention lately, especially on Ether.
Yes.
Where we were talking earlier, we were debating whether it's the future of the financial system. A lot of people are thinking, people like you have said that.
Yeah, I mean, I think it's a really important moment happening this year with, the Genius Act, really greenlighting stable coins, and then Project Crypto, which is Wall Street moving on to the blockchain. I think it's a lot like 1971 when the U.S. dollar went off the gold standard. That created the innovation of Wall Street because they had to sort of essentially create this synthetic dollar. Wall Street moving on to the blockchain is a bigger moment, and I think that's why Ethereum is essentially having its 1971 moment equivalent.
But a lot of people just see it as wild speculation and froth.
I'd say anytime something goes up, people tend to call it froth. I think they called AI a frothy trade now, but we know it has a lot of legs, and it's been taking place for a couple years. Keep in mind, Ethereum is also the place where when agentic AI comes together, when you have robots and you want proof of human, you want to make sure those commands come from, a verified source. That's all taking place on a smart contract. A lot of it will be Ethereum.
Tom, thank you. We just scratched the surface on that one, but we'll have you back very soon, no doubt. Tom Lee.
Tom Lee. So he's pretty fucking stoked about this. Dude, where is this? And this is kind of why I hate streaming like political talks, because like we just have to piss away so much time waiting. Like the amount of work that I should be doing. This is fucking insane. Like just start the goddamn talk, dude. 14 minutes late and counting. Where is it? Well, Tom Lee throwing out some big numbers. What was this one? ETH. He thinks ETH is going to flip Bitcoin? No, dude.
So keep in mind that the Genius Act and then SEC's Project Crypto is the recognition that using blockchain makes Wall Street faster and more efficient. I've seen it at Bitmine because like when we get the cash, the minute it touches the blockchain, it moves we have much better visibility, and it's much easier to move, to actually track the money. The wallets are all tracked. And this is like 1971, because in 1971, the dollar went off the gold standard.
Yeah.
And everyone said, I'll buy gold instead. But remember, the dollar suddenly became a fiat.
Yeah.
And Wall Street innovated because they said, now we have a dollar. Let's make sure we can move the dollars efficiently.
You don't need to move bars of gold to match the movement of the dollars.
Correct. So it created Wall Street, came out of that single act in 1971. So now, 2025, Project Crypto from the SEC and Genius Act is saying, Wall Street, take advantage of this new technology to make Wall Street a tech industry. But they're all choosing to do it, or the majority are choosing to do it on Ethereum. Ethereum is a smart contract platform and has what they call EVMs, Ethereum virtual machines. So you can do basically a lot of smart programs and contracts. That's where Robinhood is doing their stable coins, the tokenized products
More
on top of
trades
Ethereum.
are starting to
How
hit
big
the
could
market
ETH
here.
get? I hate the term market cap because it's not applicable. Your company has a market cap. ETH doesn't have a market cap. Has a market size.
It has a network value.
What is the current value of all the ETH in the world? How big do you think it could get? Because working backwards, that's what the 5% stake in ETH, right?
Mm-hmm.
Okay,
Yeah.
so what do you
it's
think?
about $480 billion right now of fully diluted network value.
Okay.
But
is the supply contracting or not yet?
It's actually growing about 1%.
Growing
which is
1%.
It's slower than Bitcoin's inflation rate.
Okay.
It's actually a third of Bitcoin's inflation rate.
Okay. How big do you think that could be?
Well, I think that there is a very high probability, I'm going to say maybe even 50%, that Ethereum's network value will flip Bitcoin's.
Wow.
Like when?
The flippening.
Fucking why though? Tom Lee literally said yesterday that Powell would be dovish. The entire mainstream media said the opposite. He was right again. W. I was just escorted out of the Fed's Jackson Hole conference for asking Governor Lisa Cook, a taxpayer-funded public official, about her alleged mortgage fraud. In America, you should never be punished for asking a government official a basic question. I kind of agree with that. I don't really understand I guess I don't know enough details of the Lisa Cook situation to be like, yeah, we should be hounding her or not. But in general, the concept of you should be able to ask him basic questions, I agree.
Fuck your fucking options. Fuck your fucking zero DTE calls. Fuck the economy. Fuck inflation. Fuck your soft landing. I am sick of this shit. Fuck Wall Street. Fuck you all. I'm fucking out. Fuck.
Very insightful input from the chair. Very insightful. Got to skip over the half-dressed lady so we don't lose our show today, as we're just waiting for Trump to get going. Waiting for Trump to get going, dude.
So we're going to see the president at noon today for an announcement. The basis of that, we don't have full information yet, but we also just got a notice from the pool that they've been loaded into the vans for a movement this morning that was not on the schedule. No clear details yet on where the president is going, but it sounds like they might be on the move here very soon. Dana.
I love off the records. Okay, we'll stand by and let us know what you hear. Thanks.
Thanks. So we're going to see the president at noon
Bro,
today for an announcement.
what in the world is going on? How they're moving now? They're in vans? A little bit of we're giving back a bit here. We're giving a little bit back into that initial God candle explosion. But let's see. It's now officially in the lunchtime doldrums, as the world was awkwardly awaiting Powell. Now the world is awkwardly awaiting Trump, and I am getting bored to tears. How long should we wait before we call it and say this is a fucking waste of time? Dude, I get so angry about this. So angry. Hey, in the meantime, use that code Goonie when you're signing up for Apex. Use that code Goonie.
Connection lost.
Connection lost? How dare they? How dare they? Connection lost. Oh, brother. Oh, brother, oh, brother, oh, brother. Trading is better than literally any other job.
I had one of my biggest trades I've ever had this year, a $50,000 trade in platinum. One singular trade, 50 grand. That's so cool. Oh, it's so cool. I'm trying not to let social media invalidate it or make me feel like it wasn't a big deal or it's actually a poor blah, 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 whatever. I closed it at 50 and it was exciting. It's such a cool thing. And I can't believe I have learned a skill that allows me to enter a position in the market and exit on my phone for $50,000. So cool. What an insane skill set. I had one of my biggest trades I've ever had this year, a $50,000.
Is that like a weird humble bragging video? What the fuck was that? I'm sick, dude. I'm sick. I fucking made 50 grand. Turns out Powell was just tired from preparing a banger speech. Then after Powell's speech, all the charts started ripping. It was crazy, bro. Society if Powell hints at a cut. Society if hints at literally anything else. Oh, jeez. Dude, this investor turf, they're fucking retarded. Fuck your puts, Jerome Powell. Fuck your puts. Who is Hannah Palmer at this point? If I saw her at a bar, I'd get drunk and not talk to her at record speed. Ditto, brother. Not talk to her at record speed. All right, dude. We're stretching now. All right. Apparently, we're getting disconnected. Hey, some green. We got disconnected from Apex. Not that it matters. I had no positions. Fuck. That would have been a good long at 44. Would have been a good long. Oh, I wish I were an Oscar Mayer wiener. What are they talking about?
Sell into strength.
You look great, Gordon. Gordon, Mr. Gecko, you look great.
All right, maybe we should find some lo-fi music and wait till Trump gets fucking rocking here. Maybe we should. Do you guys want to watch the biggest poker game in history just happened? Traders found another big short. What video should we watch?
An 8-figure poker match has taken the poker world by storm, where Jungle Man went up against casino owner Monarch in a high-stakes heads-up no-limit game, some of the highest stakes we've ever seen happen on any live stream over at the new Onyx Club. This is the second high-stakes match for Monarch, whose last $2 million match against Tornado ended with him losing $2 million and calling him out to continue to play. At that point, Tornado realized he had somewhere he had to go.
That is indeed. Call your true friends. Let's do 5 mil.
Call my true friends?
Yes, let's do 5 mil.
Me and you?
Yeah.
5 mil?
When?
Like,
how rich are these dudes?
Like, I have to leave here 7 a.m. and I don't want to go in the middle of the match. And I have to.
We have 4.5 hours.
You sure you don't want to play another guy?
Like who? They're all pussies.
Oh, I totally would. I got the thing with the stuff.
They're all
Got,
pussies.
all 4 million. I'm not playing you for this. But the stakes rose with a second match for even more money against none other than the Jungle Man. Daniel Cates enters the arena for a $12 million match posted over 2 streams. It didn't start at $12 million though. These guys started off with $1 million each, and the swing started coming hot. The first couple of matches were small, $1 million each winner take all. I love when you start off the video saying the stakes were small. It was for $2 million.
Dude, who are these guys?
You want to run it once? Is that reasonable?
No help, he's an ace. No good. Dispatching Monarch, just 19 hands. Very unlucky.
Jungle took down match 1, Monarch took down match 2, and then before you know it, we took a commercial pause, and the stakes were upped. It was now a $3 million match. Each person had to put $3 million, winner take all, and the stakes would only continue to rise. Our
This just shows that there's levels to this game,
Jungle Man has the
folks.
lead here, up 4.6 million to about 1.4, and Monarch decides to make a big pre-flop open to $100,000. The blinds here are 15K, 30K. This is over a 3x, which is an uncharacteristic.
Makes me feel less good about the
Ace 10,
60K I made
in
today.
fact, I'm sure that the equilibrium strategy does on the both here. Jungle does decide
Their
to make the call.
blinds are going to be above 60K.
What? He just knew. He just knew. What is that? 666. But how do you know this one? He just makes it 100 out of nowhere.
That seems like a totally reasonable flop. And if you love websites with reasonable flops, I'll put a link in my description below for some free coins. Back to the hand here. We have 4 of a kind for Aussie Katola, who now has to decide what he wants to do here with his quads. Usually you want to bet on these flops. Typically you want to be aggressive as the other player does not have many pairs pre-flop because they did not 3-bet. He does decide to go ahead and bet here on the flop. And now over to Jungle Man. It might not seem like it, but Jungle actually has a very strong hand here. You're going to mainly be unpaired on these boards because you don't have that many pairs pre-flop, as I already mentioned. So Ace 10 is a very strong hand. You're going to call at least a couple streets and maybe even all 3. Aussie goes for a small bet of a premium SUV, and now over to Jungle with Ace 10. You have a very clear check call, which he makes, and we take
Premium SUV.
Oh, sick. That is a very sick turn card. How does Jungle get away from
Quads
this?
versus a full house.
This is a crazy hand. Just randomly makes 100K pre for the first time ever. And for Jungle Man, this is pretty brutal.
150K to call. They are betting houses, folks.
Oh, he raises. Oh, my word.
I mean, what a feeling. I don't blame him.
But what a spot for Monarch.
Well, and then him not wanting to get checked back on the river, right? He's kind of like, let's just build this up now.
Yeah.
The turn comes at 10, sealing Jungle Man's fate with his top full house. He checks once again, and now Aussie sizes down, betting under half the pot. I actually would prefer to see a bigger bet here to set for a river jam, but this can be okay as well.
Doug
And unfortunately
Poke.
for Jungle
I think
Man,
he's like
gonna
a
fall right
famous
into the trap.
poker
With
guy.
his freshly made full house, he opts to check
Cool
raise,
that he does
and now he's just
commentary
countdown
videos.
to losing all his money.
Ace on the river.
I mean, it's one
That's
of the same board.
disgusting.
6, 6, 6, 10 ace, or king 6 and ace 10. From his point of view, when he does jam and gets a call, he might think this is over.
Yeah, yeah.
No.
He's going to jam, and he's going to lose it all. But well, it's only gonna be
Like he's
800K though.
25, losing 5K.
Why hasn't he snapped?
I think he's just working out if he has more than the bet. You know, he's like just trying to see if it's a raise or not.
Oh, okay.
How much is it total?
830.
Then it's 5K more.
Yes.
Okay,
Correct.
I'm gonna call. This is so dumb.
Stupid as fuck.
This double up puts Aussie Monarch Katola back in the driver's seat here, now in the lead in this $3 million winner take all. Our next significant hand in match 3 was a triple barrel from Monarch, where he bets the flop.
Dude, I can't imagine having this level of money. The big guys are still buying, by the way, even though the market's taking a little bit of a turn here.
With his top pair, good kicker.
Oh my god.
Did you say all in?
Yes.
Oh my god. Wow. Did not see this coming at all. An incredible bluff from Monarch. This is out of absolutely nowhere.
This is a very difficult situation for Jungle Man. He does have some 5s when he goes check call on the flop, so certainly a spot where it is difficult to know what to do. I'm pretty sure at equilibrium you are supposed to call some top pairs here, and it seems like Aussie is the kind of guy that's pretty aggressive. So I would like to see Jungle call mostly in a situation like this.
Wait,
but of
he
course,
has
it's also
dog
fine to
shit,
do some
right?
folding when your
Yeah.
opponent bets so big into a smaller pot. So can kind of go either way. Let's see what Jungle Man
Dude,
does.
imagine bluffing $1.1 million.
This is so
like
sweaty.
actually, you're like, how is he sitting so calmly?
I don't know. Maybe it's a bluff.
I don't get it.
Wow.
Gets it through. Oh my god.
He has
what a
too
play
much
from
money.
Monarch.
Wait,
Gets
where
the
did he
6-side
get his
through.
money
Any of the
from?
bet sides
Do you
double
know?
calling. I believe him.
Aussie gets the giant bluff through, and this brings us to our final
Yeah,
hand in
a
match 3 with
million
Monarch with the
dollar
pocket
bluff?
kings up against Jungle Man's queen
Where did
jack.
this guy
is a
get his
pre-flop
money?
action
Does
and a
anyone
queen at
know?
9 at 6 board.
Both of
Guys,
them?
when you
Either
flop
of
top
them?
pair versus an overpair and heads up in a 3-bet pot, it's not going to be fun times.
Queen at 9 at 6. Monarch even having the spades covered.
Oh man, at this stack depth, it's going to be very difficult to get away from Queen Jack here.
Just a really small.
Just a $100,000 call.
Inviter. Jungle going to attack the small bet, 400K.
Okay, 400K, reasonable.
Makes sense to just go for it here. Doesn't want a scare card to come that might stop Monarch betting. Doesn't want to give him a free shot of the draw. Might as well go for it all now. Again, all that in mind, I would love to see Monarch just jam here. Again, it's another thing we've seen yesterday, maybe a little too trappy, but trap is sprung. And yeah, I like this. This is definitely much better from him here. The jam is
A
gonna get called by
million
Jungle.
all
We'll see he is
in
behind.
from-
He's hoping to get some sort of draw. $2.6 million
What the
pot.
fuck?
We'll go a long way
Rule me again.
to getting Jungle back in this.
For a huge pot.
Certainly has been cooled. And the 10 seals his fate. Jungle, 3 million in the red.
Jungle Man is now stuck 3 million euros in this match. But luckily for the Jungle Man, it'll all turn starting right now. Once again, these players take a brief break and they come back. This time, we're going to play a $5
He's a
million
pro player
each
for over 10
winner
years.
take all heads up match. At this point, it sounds like we're just making up numbers, which is why I'm excited to announce my next
Oh,
heads up match.
man.
$100 million for realsies versus
Monarch
I don't know,
owns
whoever
a
comes.
casino.
See you at Lodge Card Club. This next hand isn't
Jungle
the largest
is
pot
playing
that
with
happened.
a
That's
pool
coming
of
up at the end of the
people's
video,
money.
But this one is one of the most interesting ones for sure, where Jungle Man opens 5-3 suited and faces a 3-bet from Monarch with ace-8 of clubs. Back over to Jungle, he makes the call. This is actually pretty normal for both of these players. Jungle could 4-bet every once in a while, but these are definitely hands that like putting in a decent amount of money pre-flop because of their playability. The flop comes ace, queen, 10, 2 diamonds, both players getting a piece. These are the kinds of boards that can build for crazy action. Monarch with his top pair has a pretty good hand, but obviously has to be concerned about a plethora of other stronger hands, and the Jungle Man has just 5 high, one of the worst possible hands in showdown value, but of course he has a flush draw to go along with it. Monarch decides to check with his top pair, which is a very reasonable play, and now Jungle Man bets $400,000 into a $900,000 pot. This is a smart bet from Jungle Man. Usually when you get checked 2 and 3-bet pots, you like to go very small, but on boards like this, you're setting down something pretty good in order to be able to bet. So sizing up a little bit is a very smart play. Over to Monarch now with top pair middle kicker. You're going nowhere on the flop. You got to check call and see how this develops, which he does do, and let's take a turn in what is already a 1.7 million euro pot.
As they head to the 9 of clubs on the turn. And here is the second show.
Order
Look at
submitted.
this. We've got a $3.1 million pot on our hands, with Monarch having just $1.8 million behind.
This is getting me amped up to be more of a degenerate, so I just bought more NQ contracts.
No improvement for Jungle Man. Monarch checks once again, and Jungle Man has to decide what to do. He ultimately decides to fire the turn for $700,000 on just 5 high. He does have the flush draw to go along with it. So over to Monarch now, top pair. I think you simply put half the call here. Obviously, your bad gut shot isn't anything to write home about, but it does give you some more equity when your
Folks,
opponent
we're
does happen to have a
honestly
strong
just
hand or
waiting for Trump to
somewhere
get
else where
going, and in the
Also,
meantime,
you
we're
check call,
watching this
check
pretty
fold,
cool
top pair.
video
You're
by
probably gonna
Doug
check call, check fold,
Poker
hands. So I
talking
do
about
like his
the
decision to call
biggest
turn,
poker
and our
game in
pocket over
history.
3 million euros
I think
as
they
it's
bet
the river.
18 mil.
And a brick on the river. Do we fly turn to check back river?
We do not.
Dude, Monarch
Go for
is
it.
just
He's going for it.
destroying
Oh
this
my
Jungle
goodness.
Man
Here we
guy.
go. $1.8 million bet.
That
And
guy
I
looks
mean,
like
this
he's getting
is now
like
a
real
grim
tilted.
spot.
The river comes and offsuit 7. Jungle Man now has almost the nut low. He's playing the board, guys. Monarch checks once again and has to be praying that Jungle Man checks back. But that's not what happens. And he gets the bad news where Jungle Man goes all in for what must be at this point the largest bluff of his entire life. All Monarch has to do here is make the call to win a gigantic pot. Can he dig deep and find this with his top pair?
Wow.
Whoa, for 1.5 mil?
We'll just show it as well.
What?
Show one.
You're gonna see it.
I mean, the grid tells us everything we need to know.
Don't worry, you're going to see it.
Jungle Man rides that hand all the way to closing out match number 4, which brings us to our 5th match. Once again, these guys enter the arena with a $5 million winner-take-all heads-up match. Despite the high stakes of $25,000 and $50,000 blinds, match number 5 actually went by relatively quickly, with Monarch slowly getting grinded down and ending up all in with 9-7 offsuit jamming into Queen Jack, where Jungle makes what would seem to be like
once a
possibly pretty loose
scammer?
all in pre. Jungle wins that all in, and we enter the largest match of the entire event, a $6 million each match, winner take all between Jungle and Monarch. Pretty early on in match number 6, we saw a gigantic pot happen where Jungle Man decides to make a
winner
pre-flop
takes
maneuver
all.
with ace 8
Holy
offsuit,
shit.
4-betting this hand up against ace jack suited. After 4-betting pre-flop, Monarch calls. We take a flop of queen 7-5 2 spades. Monarch checks here with the backdoor nut flush draw, and Jungle Man now with just ace high decides it's time to give up, checking back here on the flop, hoping to improve. The turn comes the jack of spades. Now Monarch has second pair top kicker, a fairly decent hand, although he has to be scared of a variety of holdings like traps or spades, or even ace king has a bunch of equity. So he has to decide whether he wants to check or wants to bet small to try and get value from lots of hands that might
Monarch has 100%. So Monarch is like a
the
G.
Jungle Man, who now has nothing here with ace 8 and decides
about
it's time to
Jungle
start
Man?
bluffing. Jungle bets $1.2 million on the turn, representing something like pocket jacks, maybe trapped pocket queens or aces, maybe a hand like queen jack. There are several different hands here that might want to value bet, including some flush draws that turn
20
flushes.
mil.
He is fairly polarized with such a big bet on the turn. His $1.2 million bet, almost half pot, brings this pot up to $4 million. Now Monarch with second pair top kicker has a pretty clear check call. Certainly in normal poker land, you would want to call here. Now, once it's for this much money, maybe people start doing different things. I don't know. But Monarch thinks it over and does make the correct call with the best hand heading into the river. The river comes an offsuit ace. Monarch improves to 2 pair, and he decides to go all in as a lead. A bit of a non-conventional play here, rivering 2 pair, particularly when the ace tends to help the player that 4-bet a bit more than the 3-better. Now over to Jungle Man, a very, very, very weird spot, having to call $2.5 million into a $7.7 million pot, getting almost 3-1 here.
Dude, what the
But he has to ask himself, what hands could make sense to bluff with here? It'd have to be something like Jack 10, or maybe pocket 9s with a spade. Perhaps a few hands you could think of, but it's hard
I like
to see
the
all too many.
explanation.
Can Jungle Man get away here with his top pair middle?
It does really help for non-serious poker players to better get this of like what's statistically the right play. This is pretty cool.
Not a breadstick. No. Is that a churro? What is that?
A mini churro?
This man's facing down a river jam in the biggest pot in televised poker
For
history.
2.5 mil?
On a breadstick and then makes the fold correctly.
He just needed the breadstick in his life. That was
Oh
so
my
ridiculous.
god, dude.
Our next hand isn't interesting, except the Jungle Man has a royal flush. There you have it, guys. I know how much you like your royal flushes.
This looks extremely rigged, like the hands today.
We have another gigantic pot that goes down with Jungle Man opening to 150,000 and
The
Monarch 3
blinds are
600,000 with
30K,
king, queen suited. These
60K.
stakes are wild.
The blinds
Now
are what
ace jack,
people
Jungle Man
make
could
in an
decide to forego the call.
entire
He decides just
year.
to play it slow and call pre-flop, and we take a flop. King, queen, jack, 2 clubs, a giant flop for Monarch, flopping top 2 up against Jungle Man's 3rd pair and top kicker, as well as the backdoor nut flush draw and a gut shot. With 1.2 million out there and about 4.6 behind, Monarch bets 1/3 pot here with his top 2. You can once in a while check here, but betting is the preferred play. I like this play from Monarch. Now for Jungle with bottom pair top kicker, I definitely like calling. I don't hate the idea of maybe once in a blue moon putting in a raise with some blockers here, but generally speaking, call is certainly the best line. The turn is the ace of spades. Now Jungle Man improves to a better 2 pair than Monarch, but both players have to be extremely scared. Any 10 makes a straight, and while they both have good hands, either one of them loses to a single 10. Check on the turn, and we take an irrelevant offsuit 7 river. At this point now, it's fairly clear neither player has a 10, although Monarch should trap some 10s on the turn, and Jungle Man should actually occasionally check back a 10 as well. In spots like this, when you're in softer games, these checks will mean they
I
can't
really
have a 10.
do
I would
like
not
this
view that as the case in
explanation.
this particular game. Monarch now decides his 2 pair is good enough to go for some value, as Jungle Man did not 4-bet pre-flop, so he's unlikely to have queens, kings, jacks, aces, and then he's also not likely to have ace, king, ace, queen. Because he checks back the turn, he thinks Jungle doesn't have a 10. So all in all, I don't actually hate the idea of going for a value bet on the river. He also only bets 1.4 million, which is 2/3 pot. I would actually prefer to go for more of a 1/3 pot bet size here. This feels like slightly too big given the scenario. Anyway, over to Jungle Man with top and 4th pair. A very easy call here. Obviously, once you can beat value bets, you should almost never be
These
folding hands.
numbers
And he
are
sniffs this one out,
blowing
makes
my
the call,
fucking
and wins a
mind.
gigantic almost 5 million pot.
Dude, these
Down to just
swings.
his last 700,000 euros, something you don't say often. We see an all-in pre-flop here with queen 3 suited for Monarch up against
Wait, so for those of you in here, who's the better player? It sounds like some of you in here like legitimately know not just poker, but also the people in poker. Because it seems like Jungle Man is winning more and more and more. Is this a fluke, or is he actually the better player?
ace 8 for Jungle Man. And it makes me think, I used to play heads-up matches. Whatever happened to those days?
It's been a long day without you, my friend, and I'll tell you all about it when I see
Oh, I got a notification of something.
I'll tell you what, Monarch, if you're listening, I don't really know much about
trend
you,
line
but if you ever
breakout.
come down to the great state of Texas, you got some action at Large Card Club. I think we could probably make whatever stakes you want work. We'll figure it out. Once again, we have another heads-up match challenge, huh? I guess it's true what they say. Can't teach an old Doug new tricks. Thank you for joining me today. If you like this video, hit the subscribe button and join the team. Appreciate everyone. Thank
Well,
you.
shout out to Doug Poker. Feel free to subscribe to that channel. Pretty cool explanations. I liked it. I liked it. Oh, Wall Street bets. WSB. Nope. Let's find other forms of degenerate bets. Of wet season?
The last few months have been some of the wildest the market has to offer, and nowhere do traders go more bonkers than the gambling den we call Wall Street Bets. With no ado whatsoever, let's toss this salad. Boys and girls, it is my honor to present the hottest trades of wet season. Our first contender is a serial masturbator from the San Francisco Bay Area by the name of Solid Sock 1794, who earns his living flipping and managing real estate. He appears jaded about many of San Francisco's policies, such as when his car was towed at a cost of about $720 7 minutes after parking, despite paying the meter. Nevertheless, the real estate market in the Bay Area is hot. Since the average house in San Francisco costs about $1.5 million, the Sock Man was no stranger to big numbers and leverage. But Sock Bro's mother was on the verge of retiring with about $2.1 million in her IRA. That sounds like a shitload. You can buy an entire neighborhood for that much money in Croatia. But San Francisco is another beast. Life is extremely expensive with no indication of abating. According to recent research, to live an average life in San Francisco, one needs about $2.3 million in savings to retire for 20 years. The Sock mother, being just shy of that figure, means her retirement would be average at best. Mama Sock deserves better. A life of just getting by in Frisco is simply no way to spend the back nine in life, and moving to cheaper pastures wasn't on the menu. Solid Sock needed to step in. If his mother was going to enjoy her golden years in luxury, she'd need her son to take the reins. But make no mistake, know it. Should her child come up short,
is it going to be a dumb fucking penny stock?
Ribbons, forcing her to move out of the city, or worse, become a financial burden to her son. For both Socks, this was an extremely high-risk situation. Failure was not an option. After consulting Sock Mama on the situation, the young man seized operational control of his mother's IRA. As there was no capital gains tax, Solid Sock quickly closed out all the bitch-ass conservative life cycle funds ruminating in the portfolio. It was time to go ham. On May 7th, 2025, the market was making a solid recovery off the Liberation Day meltdown in April. But Alphabet Class A, ticker GOOGL, was struggling to keep up. It was priced at $151 per share, underperforming the market severely, likely due to bearishness that AI was going to crush Google search. Solid Sock found this petulance absurd. Alphabet is much more than Google search, and more so, there is no way Alphabet would throw in the towel and bow down to ChatGPT, especially with its own AI tool called Gemini. Alphabet was already postured to tap back into the AI boom. Being down 20% year to date made no sense. It was time to shoot his mother's shot. Betting that Apple would get its act together in the next 3 months specifically, the Sockmaster full ported $2 million into Google calls at the 155 and 150 strike prices with expiration in mid-August. His plan was simple. These at-the-money calls would be sensitive to price movements. Thus, when Google shows up to dunk on the bears, the call prices will rise rapidly, leading to gains right out of the gate. Commenters mocked him with images of Down syndrome and McDonald's. This move was reckless, especially since it wasn't even his own money. Redditors even offered to take care of Sock Mama when OP loses her savings. But despite the sharp criticism, doubters started eating their socks by the following day when Alphabet announced that despite AI's influence, people were Googling more than ever. Reports of Google search's death were greatly exaggerated. Coupled with reports that Trump and the UK were about to ink a deal in which the UK would buy more American stakes, stocks went zooming. Just 24 hours after the reckless gambit, Sock Daddy cashed out a 13% gain of $268,000. Momentum was on his side, but there was more to be done. Mama needed more cheddar. And more cheddar arrived on May 14th. After lagging for a month, Alphabet finally started making a move to catch up with the broader market, and the stock rose to $165 in a sharp rally. Lil Sock's position was now up $284,000 in unrealized gains, plus his $268,000 in realized gains, putting him up well over $500,000. By market close, he cashed out some more as Google continued marching the post-liberation rally.
Please tell me he doesn't give it back.
He was completely out of his $155 strike calls and continued riding the 150s like a boss. $860K was his. The comments went wild in his honor. For these gains were the work of a calculated master, and the trade's success meant an old woman could rest easy. But still, the job was not done. Several days ticked by. People continued to search Google as much as ever, as the Google AI overview thing finally started to catch on. People even started using Google to fact-check ChatGPT. It was all becoming clear. Google would indeed thrive in the age of AI. As Alphabet rode higher, Solid Stock finally punched the meal ticket when SPY hit $172.
Total gains
a full $22
in
in money versus his strike. His gains crossed the $1 million mark. And now, armed with $3.1 million, Big Mama Saka would live luxuriously, secure in her own San Francisco Bay home, relieved of her pending modest lifestyle. In 2 weeks, they had printed $1 million. That's $100,000 per trading day. As the sun set over the Pacific, Mama and her boy clinked glasses and finally bought themselves some softer socks. Congratulations on the extra beer money. And now, let's do the sponsored segment so I can get paid. Have you ever wanted to be a landlord and earn money by doing nothing, but you don't have enough money to buy a rental yourself?
What is this?
And I've been a shareholder of a house. But Mikey, why not just buy? Offer as much as a 10% bonus. As an
if you want to I don't know. Apparently, if you want equity ownership in real estate, you could check that out. I don't want to skip the dude's ads. So if you like it, go to it, check it out. And also, by the way, subscribe to Kamikaze Cash. They do these recaps of the Wall Street Bets ones. We've watched them before. They're pretty cool.
To join in on the action. Everybody get that bread. Now, let's check out dank trade number 2. Next round in the chamber is a 25-year-old Amazon seller or dropshipper who is extremely interested in the Ukraine-Russia war and appears to believe everything is Russian propaganda. With username PleasantSwim9921, he prefers to be known as Libertarians for Ukraine. In fact, he appears to have joined Reddit in April 2024 just to talk about Russia and Ukraine. Aside from his war hobbies, since approximately age 19, the swimmer appears to have been running some unspecified e-commerce business that may have included flipping collectibles and wisely invested in diversified stock positions, amassing approximately $120,000 in investments over this time frame. This is a solid amount of money at 24, especially for one who presumably carries no debt. Later posts would show that our man's portfolio volatility was moderately high, indicating he likely held both boomer ETFs and more aggressive share positions suitable for younger folk. His goal was to invest consistently until he receives $100,000 per year in dividends, which would generally require at least $2 million. Despite his solid saving and investing, his pace of gains left many years ahead in the workforce, hoping that e-commerce doesn't get punked by AI, 3D printing, tariffs, or consumers just buying less junk online. In between incessant arguments about Ukraine and Russia, Swimmer appears to have begun discussing stocks and option trading in March 2025 as the bear market started kicking in full force. Over the course of the month, stocks took the kind of beating that had parents texting their kids for investment advice. But where the average trader saw nothing but unrelenting devastation, our man saw opportunity. Just as things looked hopeless for Ukraine, creative means of warfare allowed them to hold the line and even counterattack against a much more powerful opponent. Pleasant Swim now sought to summon the same strategy, and likewise turned the overwhelming red tide in the market to his favor. On April 2nd, speculation about Trump's Liberation Day speech scheduled later that day had everyone on edge. Importers were scared, exporters were scared, J-Pow was scared. The potential for disruption sent stocks tumbling. Blood was inundating the streets, and according to Papa Warren Buffett, the buffet, blood in the streets means time to buy. Our man Swimmer dove deep into market analysis in an hours-long binge fueled by pork rinds and Bang energy drinks, and quickly determined that the all-American Chinese sweatshop hybrid company Nike, ticker NKE, had been adequately shafted already. Tariffs threatened to spank the company heavy-handedly, driving prices of shoes higher, which would cost either profit margins or consumer demand, possibly both. And to top it all off, Facebook people started talking about child labor again. It couldn't get much worse, and therefore, bad news was already priced in. The prospects for Air Jordans were grim, and the stock was down 20% from its high just weeks prior. All this before there was any actual action against the company. Further, Swimmer claims to have been persuaded by unspecified DD, which claimed that Nike had already been making plans to circumvent tariffs by returning production to the US. A 20% dip based on fear. Pending plans to circumvent tariffs. The writing was on the wall. It was time to go all in on Nike before the pendulum swung back. In one fell swoop, Pleasant Swim closed out all of his old-school diversified positions and put his dividend plans on hold. For if he could mint a fat stack on Nike, he'd massively accelerate his portfolio growth. In the moments leading up to the Liberation Day presentation, the contrarian investor dumped his entire $120,000 balance on deep out-of-the-money Nike calls expiring that Friday. He anticipated that Liberation Day would be a nothing burger, and Nike would take off to the skies once again when investors realized their fears were overblown. Initially, as the speech began, it appeared he'd get his wish. Mango's initial statements about general trade fairness reassured markets that this would all be political theater. Swimmer's Nike calls shot up in value. He does not share the exact amount of gain, but it appears that for at least a few minutes, he was up at least a few tens of thousands, potentially much more, as volatility spiked the prices of out-of-the-money options. But all that went to shit moments later when Big Don whipped out the board. With Nike making most of its shoes in sweatshops in China and Vietnam, the company was about to get donkey punched by 67% and 90% tariffs respectively. That was Nike's profit, straight from the company's coffers into the US Treasury, and shareholders would get railed. Bulls fought back hard, but out-of-the-money call premium melted down with prejudice. The longer Donnie talked, the more bearish investors became, as they realized Liberation Day tariffs would be no joke. Money that took the Swimmer 5 years to save and invest was gone in the span of an hour. His deep out-of-the-money calls quickly became worthless. $120,000 of his own earnings, plus whatever gains he had earlier in the trade, were dissolved into nothing but gravel and mud worth $12,000. A 90% loss in less time than it takes to cook crab rangoon. Our man took the L, devastated, humiliated, and reportedly bankrupt, although this is almost assuredly hyperbole. In keeping with his Russophobia, he also now believes that the DD regarding Nike production in the US was in fact Russian disinformation designed to deceive American stock traders. Wall Street Bets commenters were gobsmacked by his befuddling trade. What fool would buy Nike calls on the exact day when Mango was due to fist global trade? Conversely, some mocked him for his cowardice in selling, calling him a paper-handed bitch when he still had $12,000 left to lose and 2 days before expiration. But any prospect of recovery before expiration was shattered when the stock gapped down $10 the following day. By then, Swimmer had already exited, preserving that remaining 10%, mashallah. Over the following days, things got worse for the market, however briefly, until the tariffs were paused.
Yo, where the fuck is Trump?
Swimmer was long out of volatile stocks. With nothing but the corpse of his former portfolio, he resolved to revert to his old plan of cautious, long-term investing. After losing 90%, he turned to VOO and SCHD, looking for 1,000 shares of the latter by the year's end, which would cost him about $26,000, about a fifth of what he had before he lit it all on fire. Today, the demolished trader is a broken man, seeking to piece himself back together.
Oh, this one ended poorly.
But he is still young. This lesson could still be worth its price. I retain hope, however fragile, that this is a $120,000 lesson well received, and that Swimmer will one day get his portfolio back in order. Welcome to the casino, comrade, and now it is my honor to present the dankest trader of wet season. Taking the crown as a big fan of bodybuilding and drone photography by the uncomfortable name of MoistAd9060, aka Average Redditor. Joining Reddit about a year ago in May 2024, the young chap tuned in immediately to the Jay Cutler subreddit to pay homage to one of the early bodybuilding goats. But despite any efforts he made in the gym, Moist Ad never achieved those bodybuilding pipes in his forearms. His body remained modestly frail, unable to compete with proper bodybuilders. His hobby of living in his van to film nature conflicted with his desire to hit the gym consistently, resulting in no gains. But as Antonio Banderas says, "Cuando la vida es difícil, se abre una nueva tortilla." Or in English, when life has you down, make lemonade. It was time to flip his game. Moist Ad put down the barbell between sets of deep form squats and downloaded the one app that could turn any man into a monster with just the tap of his finger, Robinhood. If he wouldn't get big in the gym, at least his portfolio could get big on his behalf. Although he had a soy portfolio of about $15,000 in assorted index ETFs, it was time to make a change to his boomer investment strategy. Assessing market conditions in early January 2025, our man determined that quantum computing stocks were overblown. Every stock with a Q in its name was up hundreds of % in barely a month. Investors were thinking that AI and quantum computers together would join forces to dominate the tech industry. But our gym bro was not convinced. All these devices did was enable advanced physics experiments. The average person simply does not need to calculate the probability of an electron being in a particular cloud with femtosecond precision. In 30 years, this might change, but retail investors certainly were not going to wait around for someone to figure out what to do with this technology. The hype would surely die, and Moist Ad decided to make bank on the hype decay. With the less than $600 cash he could muster on January 6th, our man full ported into deep out-of-the-money puts on Ionic, ticker IONQ, expiring in 5 weeks. With a strike at $35 versus a stock price over $50, Ionic wouldn't need to just drop, but completely shit itself for our homie to make a profit. With the Quantum Initiative Conference kicking off in France that day, industry geeks were tuned in, but it very quickly became apparent that proper quantum computing was a long way away, and the nerds in the industry used math equations with no numbers, making this unpalatable to the common investor. It's not clear if the conference had a real effect on quantum computing trading numbers, but it's perhaps not a coincidence that quantum stocks started melting down as soon as the conference began. Within just 2 days, our man was up over 500%, and his $600 position ballooned to $3,440, a fine start. Proof of concept was complete. It was time to liquidate that $15,000 of boomer investments and kick off a new chapter. Over many months, his Reddit activity shifted from fitness and outdoorsmanship toward degenerate stock trading on Wall Street Bets specifically, with fewer and fewer non-Wall Street Bets posts. He traded exploration of the world for exploration of stunk. The underground welcomed him to our degenerate sub with open arms, and his dive into the abyss bore fruit. In a series of bearish plays between February and April, Moist Ad printed band after band as the 2025 bear market took root. By Wednesday, April 2nd, our man was fully gay bear, with an $82,500 portfolio fully invested in SPY puts expiring that Friday. Everything was on the line. But with President Mango Salsa poised to present so-called Liberation Day tariffs that afternoon, our man knew there was no way to lose. As the afternoon kicked off, Papa Cheeto hopped up on stage with the now infamous table that introduced a salvo of massive tariffs against every country on Earth, even those with no human population. The US was dropping bombs across the globe. No country was spared, and the lowest possible tariff was 10%. The market was horrified, and stocks started tanking. Overnight, it got worse, as journalist James Kalashnikov accused Trump's staff of using ChatGPT to create a silly formula that had no basis in reality. White House press homeboy Kush Desai tried to muddy the waters by presenting jargon that essentially reiterated everything Kalashnikov said, but with added gibberish. The market was devastated. Such an important task of determining tariff rates boiled down to things like 4 times 1/4 equals 1. Liberation Day was a disaster. Moist Ad's puts started printing. Over the next several days, the market dropped harder than Daquan's next mixtape. Our homie's portfolio skyrocketed to $353,000. With his van living lifestyle, this was truly life-changing money. He could sustain his journey indefinitely, taking drone photos from Indochina to the cliffs of Moher and enjoying the open road across the US of A, unburdened by the tribulations of finance. But Moist Ad was
There we go.
Did you repeat anything?
They're feeding now.
We're getting nice ceiling shot. All right, we're moving it around a little bit. Check. Yeah, so just a fucking hour late. That's cool. I'm not pissed. I'm not pissed, you're pissed. I'm not pissed, you're pissed. It's a nice camera. Do they know they're live? All right, this is how things are looking before the speech. We had a pop, a little follow through, a slight give back, and that's where we're at. Mom? I don't know what the fuck they're doing here. Sitcom view, here we go. Feels it. Dude, they don't know it. No one knows what this is about. You know, he'll make it all worth it if he doubles down and then rips it. Come on, come on, come on, come on, come on, come on.
1, 2, 1, 2.
1, 2, 1, 2. 1, 2, 1, 2. Firing Powell, I doubt it. I don't think he could fire Powell. If he could, it would take a while. It would be like really, really bogged down in the legal process.
Connection lost.
Nice. Nice, 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 nice. That's what I like. I like when it loses connection. Why are we getting a view of the backside of the camera? All right, well, I'm going to chill with the volume on this. This volume's up for the official one, so we can go back here.
No quitter. He set his eyes on $1 million. It was game on. Our men doubled down, taking on more bearish positions, ready to see even further meltdown. And then, Trump said never mind. Flanked by an entourage of simps, the Big Cheeto said that Liberation Day tariffs were paused for 90 days to facilitate trade negotiation. Liberation Day was reverse liberated. Stocks shot up in the biggest day of gains in over 20 years. The trade war was over just days after it started. The bulls rejoiced in the streets with their capitalist concubines, while the bears skulked back into the shadows. Moist Homie's position was shafted, spanked down more than 57% from 353K to 150K.
Ooh.
But he used a cool trick of zooming out to make it look like he was still printing. If only his psychological trick.
A cool
worked on
trick
himself,
of zooming
flipping his
out.
game to a more pragmatic approach. Our man went from purely bearish to trading calls and puts on both TQQQ and SQQQ, opening a barrage of long strangles on triple leveraged tech ETFs at various strikes. This is one of the least efficient strategies ever, as he now needed the market to move an order of magnitude more than volatility would imply, enough to compensate for the losses on the losing side. In simpler terms, this trade was regarded. Redditors mocked him for making such a foolish trade, but those who dunked on him thinking he'd be discouraged from trading poorly wasted their breath. Moist ad was nowhere near finished. By April 15th, our man's long strangles on triple leveraged tech ETFs took their toll, and 150,000 was now 79,000. Clearly, the more complex options were a joke, and it was time to go bear mode once again. Announcing that his road to $1 million had merely hit a speed bump and that he'd 15x his portfolio in short order, Moist ad revealed a flurry of spy puts at various out-of-the-money strikes, with some weirdly placed out-of-the-money calls as a hedge. Soon after, he was trading specifically $10,000 of zero-day to expiration puts every single day with all gas, no brakes, and almost every day, the bulls trampled him. At one point, as the market dipped mildly, he regained some of the lost ground, reaching a respectable 123,000 once again. He could cash out and salvage something, but there would be no such trade. As the days ticked by, the market continued to take vengeance against him. The ex-Liberation Day rally was unrelenting, and by May 9th, he was demolished. His portfolio suffered a horrifying wrecking ball, knocking him down to below 15K. His ego had cost him his bags. He had the ticket, but the desire to become a legend outweighed his desire to actually make
this
money.
is so
Ego,
painful.
Old killer of many a degen, had claimed its next victim. In a wholehearted message, Moist ad recounted his journey and admitted his self-deception. He revealed that he was so confident in his trading after a few months of gains that he planned to start a
I
hedge
turned
fund. But in
15K into 353, then lit it all on fire in 2 weeks. I'm reborn, I'm broken, I'm back. Jesus. Wow. I've lost all connections to my data now. Fuck, dude. Do you think it's good that I've lost? Why did my data disconnect? All right. I don't know what's going on today, folks. That's sad. Jesus. All right, they cut their audio. For your patience. Dude, it's being tested today. I appreciate that, though. That's very kind. 1 minute's getting beat up pretty fucking good. Dude, what is going on? How can he be this late? Like, what the fuck, dude? No one seems to have any info on what the fuck's going on. Damn. It's a good trade. A trade down to the 50% retracement. Not bad.
Yeah, no, I'll make sure y'all just kind of for sure. We just don't want to be like next to us because this is right in the shot. What do you mean was a beautiful day? Oh, okay. That makes more sense.
I'm not seeing anything. Not seeing any news on it. Maybe a little bit of a pop here, though. Matt, when your president will allow you to be late, I expect you guys to yell at me if I'm late like this. This is just fucking dumb.
From one user going from broke to millions and back down to broke in a month, to another user YOLOing his dad's money, we're going to go over the maddest Wall Street bets trades of the meltdown. RobBoost330 is a user who decided that he was going to YOLO his portfolio every day and became so attached that he couldn't stop. Disregarding Rob's first ever post on the Rise of Kingdom subreddit, he made his first post to Wall Street Bets on May 14th. With SPY and QQQ, his portfolio grew 178% in the past week alone. But don't get too excited just yet because he was still down over 7K all time. For some reason, Helipad668 thought that this post was some sort of CIA government conspiracy and said, if any of you believe these game posts here, "You are a low IQ idiot." Rob got back saying, "This ain't fake, boy." His $50,000 portfolio was now worth $25,000 a day later. Despite Rob's 50% fall in a day, Helipad668 still for some reason couldn't believe someone could make lucky or unlucky trades. Over the next few days, he luckily worked his way back up to $56,000. After finally breaking even on Robinhood, some would say that taking a break from trading would be wise. Rob woke up that morning and got ready for his day at work like usual. Work was starting soon, but Rob wasn't really worried about that just yet. He instead was getting ready to YOLO his entire portfolio on 0 DTE QQQ calls. He threw $48,000 flat into calls at the $520 strike price.
So pretty much the entire account.
Stock opened in the red at about $515 a share, and of course, if things didn't take off soon, Rob's money would be gone forever. With some sort of financial wizard spell, QQQ hit his strike price in just about half an hour. His $56,000 portfolio jumped to $98,000. If you think a 75% gain is enough for him, then you must be out of your mind. Rob was fully dedicated to striking it rich, kinda like Elon I love you. He says he's currently using his paychecks to YOLO his way back into the green after going negative on margin and taking a break. He made it clear that 1 million was the number that he was going for. He also let us in on his secret trading strategy. You might think that these are all jokes, but Rob is dead serious. He took a 4-day break from posting, but not from trading, and broke into 6 figures. It was May 23rd, and Rob immediately threw $28,000 into 0 DTE QQQ calls, and was initially in the green by a few thousand, but by lunchtime, he was down almost 20K. Rob averaged down not 1, not 2, but 3 times, tying up a total of $105,000.
Nice.
He only had $500 in buying power left, so if these trades didn't pan out the way he wanted them to, he'd be flipping burgers forever. Luckily though, QQQ's dip was short-lived, and he sold for a $70,000 gain. Rob went from 25 to 190K, and we've seen a situation like this 1,000 times. Rob was not going to give up just yet. Rob says that instead of setting stop losses, he just, watches the stock and prays. The weekend came along and gave Rob some time to reflect on his actions. And after reflecting long and hard, he was back to business. That morning, he YOLO'd into, once again, QQQ calls and SharpLink gaming stock as it started rocketing. SharpLink actually 5x that day, and QQQ was also very strong. He posted another win for Monday market. The only issue was that it wasn't Monday. Apparently, Rob was partying a little too hard over the weekend and just skipped over Monday. Anyway, days of the week didn't really matter all that much because he may not have known it yet, but the following day would be one that would go down in history books. He threw everything into QQQ and Nvidia calls that expired 0 and 2 days later, respectively. Well, the first half of Rob's day was very volatile. No joke, every half an hour he went from being up 20,000 to down 20,000. Rob could have sold to be about break even for the day, but Rob is not a chicken. But sometimes it seems like chickens are the real winners because he quickly started losing tens of thousands of dollars a minute. But then, in the blink of an eye, he was back in the green by 37K. Phew! That $267 he had on the sidelines was definitely not going to hold him over. Rob now had almost $300,000 in his portfolio. He could easily just invest in an index fund and make some pretty solid
$300 of buying.
But Rob was not dumb. He wanted to YOLO his whole portfolio every
today. You all know Johnny. He came all the way from Italy, the beautiful country of Italy, to be with us. And he just got off the plane, and he's a hardworking guy. Does a phenomenal job with FIFA. Nobody like him. I'm delighted to welcome FIFA President Johnny Infantino back to the White House for me.
I swear to God, if this is just about soccer and the FIFA Cup, I'm going to fucking lose my mind.
2026, and this is a big deal, I'll tell you. I was so happy to get it. The 2026 FIFA World Cup. That's going to be the World Cup as we know it. It's the biggest, probably the biggest event in sports, I guess, Johnny, right?
Yeah.
On December 5th of this year, the 2026 FIFA World Cup draw will take place at the Kennedy Center. Some people refer to it as the Trump Kennedy Center, but we're not prepared to do that quite yet, maybe in a week or so. But right here in Washington, D.C., it's a tremendous honor to bring the global event and this incredible group of people and these unbelievable athletes, the best athletes in the world, to the cultural center of our nation's capital.
Trump was right about
just left the Kennedy Center. We're spending a lot of money wisely on making it really beautiful. It's going to be beautiful again. It's like Washington, D.C. We had, by the way, in Washington, D.C., we have the lowest crime numbers they've had in years. 0, it sounds like it's a horrible thing to say, but I might as well say it. 0 murders in the last week since we've done this. That's the first time in memory that that's happened, if you can believe it, how pathetic that is to have to even say it. And I'm tired of listening to these people say how safe it was before we got here. It was unsafe. It was horrible. And Mayor Bowser better get her act straight or she won't be mayor very long because we'll take it over with the federal government, run it like it's supposed to be run. The numbers were horrible. It was a crime-infested rat hole. And they do have a lot of rats. We're getting rid of them, too. And we've made a lot of progress. And it was extremely unsafe, and now it's extremely safe. We had virtually no crime. The number was down 87%, and I'm trying to figure out where was the 13% because I don't think it existed. The National Guard has been unbelievable, and they're working with the police. And they have some very good people in there. They have some people that shouldn't be police, actually, but they have some great people there. And the Washington, D.C. is a whole different place. And Johnny, I'm sure you'll be happy to hear that too, actually.
Oh, yes.
But it's a whole different place. People are excited again. They're going out to restaurants again. That was the other thing I saw numbers. That restaurant business is down in the last week. No. Restaurant business, you can't get into a restaurant. Just really lying people. And that's why people don't understand how bad and how dishonest the press is. I saw one poll that had us at 19% favorable on what we're doing with Washington. And then I saw another one that has us 94% favorable. And I can tell you the 94% is correct. The others are fake, just fake news. They got to get their act together. So bad for our country, so sick, actually. So Washington, D.C. is really doing unbelievably well. And the Kennedy Center that we're fixing, I was just there all morning with contractors. We're making it unbelievable. It's going to be unbelievable. It's got great bones, but it needs a lot of work.
Great bones.
The World Cup draw will set up the group stage of competition. 48 teams will play in 104 games across 16 North American cities, from Seattle to Vancouver to Atlanta to Miami. It's going to be so exciting for our country. The 2026 FIFA World Cup will be one of the largest and most complex events. This will be one of the greatest events, one of the largest. In a way, it's like Johnny said it better. It's like having many Super Bowls in a short period of time. Because each one of these games essentially is a Super Bowl. Some of them are bigger than Super Bowls, actually. But they're essentially, each one of these games is like a Super Bowl. The 2026 FIFA World Cup will be the largest, most complex set of events in sports history.
Trend switch.
And the Kennedy
Look
Center
for that
will
higher low and
give
then
it
the
a
pump
phenomenal
up.
kickoff, and we'll be involved, and they'll be working over there for quite a bit of time. We have it all set that they can stay there for the big events, the big press conferences and everything else. And they'll be in a very safe capital. That will be nice. You don't have to worry about walking down the street, Johnny, okay?
Thank you.
But you could handle yourself.
I could.
Okay. Already, FIFA is projecting 6 million loyal fans will attend the World Cup events next year, and 6 billion more are going to be watching back home, and they think the $6 billion number is going to be actually a low number. And this will drive more than $30 billion into the U.S. economy and create 185,000 American jobs in a short period of time, too. No sporting event attracts more attention, more fans, more viewers, or more revenue than the FIFA World Cup. And again, I'll just say it's the World Cup, and it's the biggest thing there is in sports, and we have it. And I got it in my first administration, and I was really somewhat devastated, as devastated as I can be. I don't have time to get too devastated. I was very happy that today, as you saw, the group that does this, a government group, radical left group, announced that Trump was right. Took in $4 trillion worth of tariffs, that the $4 trillion are going to reduce the deficit by numbers far greater than they ever expected or heard of. And by the way, the stock market went up 1,000 points. That was as of 10 minutes ago. I can't tell you what happened. A lot of things happened. But the stock market's up almost 1,000 points. And it's basically on the news that the release that just came out from government that the tariffs that everybody was talking about, that the whole world respects us for because of what we did. The tariffs are going to be at $4 trillion. They're going to reduce the deficit by $4 trillion, Mr. Vice President. What do you think?
Sir.
Too bad it's not 5, right?
That's right.
It's had a huge impact, and the stock market is way up. But this will drive more than $30 billion in U.S. economy and create 185,000 American jobs. No sporting event attracts more attention or more fans or anything else. And I just look forward to the draw. So we're going to have the draw, essentially, Johnny, at the Kennedy Center. Yep. And by that time, it'll be in even better shape. We're working on it. It's about a year project to make it. It'll be great. It'll be fantastic. You see the way this is looking? Look, nice. I can't tell you how much that gold costs. A lot of money. There's nothing like gold, and there's nothing like solid gold. But this beautiful office needed it. It had to be representative. When we took it over, it was dirty, not clean. I immediately changed the chair and had this beautiful desk renovated and brought out by the White House. People that do this, they did a great job. We sent it out. We have a craftsman who's great. But this was not appropriate for the Oval Office when I took over. And now you look at all those paintings you're allowed to turn back. All of these are great presidents, and they were all in the vaults They were in vaults for some cases much more than 100 years, and now they're proudly hanging on the Oval Office walls. And I can't imagine anybody changing it. But they were buried in vaults for over 100 years, many of them. So it's very exciting. People come in, they really love it. They love what we're doing here. They love what we're doing in D.C., and they love what we're doing, most importantly, in the country and the world. I'd like to ask Johnny to say a few words. He's the head of the whole thing. He's been
Is
there
this
for
all we're talking
a long
about?
time. Probably the most respected man in sports. He's amazing, actually. Works very hard, and he's got the biggest event in the world coming right here to the United States. And a little, we did a little for Canada. We did a little for Mexico. We thought, see, I'm a good citizen. I said, let them have a little piece. So we gave a little to Canada. See how nice I am? And we gave a little bit to Mexico. And Johnny, please say a few words.
Thank you, President.
Big dog.
Great honor for me to be here with you today, President, Vice President, Excellencies. Fantastic to announce what you said, which is the final draw of the FIFA World Cup on the 5th of December here in the capital, in the Kennedy Center in Washington.
Deltas are
DC
starting
at
to
12
pick up.
noon sharp. It will be broadcast live all over the world. 1 billion
Big
viewers
guys keep buying.
will watch it, and it will determine, of course, the match schedule. Which 48 participating teams will play. You said it, 104 matches in 1 month, 104 Super Bowls. This is not just the biggest, the greatest event, not just a sports event, it's a social event as well, with a lot of emotion. We are uniting the world, Mr. President, uniting the world here in America, and we are very proud of that. And those teams, those national teams who will come here to participate in this draw with their coaches, with their presidents, they will all be proud to be part of writing this history. And that's why we brought as well this, which is the winner's trophy. It is the trophy that the winner of the FIFA World Cup wins. Only the FIFA president, presidents of countries, and then those who win can touch it, because it's for winners only. Since you are a winner, of course, you can as well touch it. It's pretty heavy.
Yeah.
It's the winner trophy. The last one who lifted that is Lionel Messi of Argentina. And here it is in the Oval Office in the White House.
Can I keep it?
For you. Well, you can keep
We're not
it
giving
until the
it
World
back.
Cup.
We're not giving it back. That's serious.
It fits well.
That
here.
goes very well on the wall right over there. We'll put it right below the angels.
It fits well here.
That's
I think.
beautiful. Yeah.
You can
That's,
keep it until we have to give it to the next winner.
That's fine. That's a beautiful piece of gold, I will say.
Absolutely.
That's beautiful.
Yeah. So 6 billion viewers for the World Cup, 6 million coming to the matches, 30 billion economic impact, 185,000 jobs. This will be absolutely fantastic. The biggest event ever, and everything will start here in Washington, D.C. at the Kennedy Center, or the Trump Kennedy Center. We'll see that how it will be called on the 5th of September at noon sharp. 5th of December, noon sharp. Then, if I may,
Will they
Mr.
be
President,
doing most of the draws, all of the draws at the Kennedy? How are you going to do that?
Yes, we'll do that at the Kennedy Center. We'll do all the other meetings around it with the coaches, with the broadcasters, with the sponsors, everything at the Kennedy Center. The whole World Cup starts, and everyone will be happy because everyone has qualified for the World Cup, and they didn't yet play a game, so they didn't lose yet a game. So they all think they can become world champion, right?
They'll all be happy.
Exactly. Now,
by the way, an example, supposing we had a week ago when everybody was being killed and mugged and everything else, despite the phony numbers that were given out, that it was getting better. Brian, do you believe it was getting better or getting worse?
Oh, the crime was getting worse. I mean, I was robbed. It was getting
They
way
went
worse.
after you. How did the other guy come out?
Well, he came out with my briefcase.
Unfortunately.
Yeah. So, Robert 1, Brian 0.
No, but can you imagine you do this and then you start hearing that they had a 20-year reduction of crime. It's worse. It was worse during the Biden administration than anybody's ever imagined possible. And I guarantee you he wouldn't be here if those numbers continued. But now we have total safety. We have total security. And for the border, in 3 months, 0 people. These are done by liberal people that do these charts. 0 people came through our border in the last 90 days. Can you believe it? 0. Last year we had millions of people coming in. And they came in from the wrong locations. They came in a lot of people that shouldn't be here. So now when we have this event in December, it's going to be very safe. Johnny, you can walk down the street with your beautiful wife.
Yeah.
You can take her to dinner if you can get a reservation, which I doubt.
They're all full, the restaurants.
I know. They're all full. I heard that too. The restaurants aren't. The restaurants, since we are doing this, are doing great. And many new restaurants are going to open because, as you know, many closed. Many restaurants closed because the crime was so bad. This will be one of the safest places anywhere on earth. So, you know, I really am honored that the National Guard has done such an incredible job working with the police. And we haven't had to bring in the regular military, which we're willing to do if we have to. And after we do this, we'll go to another location and we'll make it safe also. We're going to make our country very safe. We're going to make our cities very, very safe. Chicago's a mess. You have an incompetent mayor, grossly incompetent. And we'll straighten that one out probably next. That'll be our next one after this. And it won't even be tough. And the people in Chicago, Mr. Vice President, are screaming for us to come. They're wearing red hats, just like this one. But they're wearing red hats. African-American ladies, beautiful ladies, are saying, please, President Trump, come to Chicago. Please. I did great with the black vote, as you know, and they want something to happen. So I think Chicago will be our next, and then we'll help with New York. We're going to help with, and I think a lot of these people that you see on television, they're including the people in this audience. They'll say bad things about me, and then they'll say, "Thank God he's here," because half of them got mugged, and they don't want to get mugged again. But they work for they work for stupid people that are radical left. And they're made to do things and say things that they don't want to be saying. But the people right here are all happy because you're not going to be mugged in Washington, D.C. anymore. I just want to say Johnny's been my friend for a long time. He's an incredible guy. And we will lay out the red carpet. Andrew, you're going to be fantastic. Rick is going to be everything Rick ever touched has always worked out. And he's working with me on the Kennedy Center. And his very good friend was an actor on Broadway for 5 years, right? And
wow.
I assume he's helping us a little bit, right?
Yes.
And Andrew, you're all excited about it?
Absolutely.
Would you like to say something?
This is a great opportunity, Mr. President, to show off the first 250 years of the United States of America, the greatness and then the hope and promise of the next 250 years. When you think this World Cup is going to be over our 250th birthday, Mr. President, your leadership, obviously, with FIFA leading the way, this is the largest sporting event in the history of the world under the Trump administration. So very excited.
I just want to say one thing. Andrew Giuliani, so his father is Rudy, the greatest mayor in the history of New York, I think by far. He took a ravaged city, a city that was really under siege. Probably most people thought it was going to survive. He turned it around. He was a great, great mayor. And then they treated him very, very unfairly. You go back and tell your father all of the things that have come out over the last couple of months through Tulsi and through all of the people, Cash, everybody. They've proven your father 100% correct. His father was treated so unfairly. Your father has been 100% correct. And tell him we all love him, okay?
Thank you, Mr. President.
He's been amazing. What he had to go through was very, very unfair. Nasty. These are bad people. Mr. Vice President, would you like to say something?
Well, sure, Mr. President. Thank you, and thanks to Johnny for being here. We're very thrilled about the World Cup. Just to echo something the President said about crime in Washington, D.C., this is the national capital of the greatest nation in the world, and we had murder rates just a few weeks ago that rivaled some of the worst third world cities anywhere, even in very, very poor regions of the world. Why did we accept that? Why did we allow it to happen? We allowed it to happen because we had broken leadership in Washington, D.C., and unfortunately sitting behind the Resolute desk. What we have shown in just under 2 weeks of taking law enforcement seriously is that the American people can have their streets back if their leadership is willing to put in the time and the resources. Mr. President, you've shown in Washington, D.C. that we can have safe streets again. We've just got to have the political willpower to focus on the bad guys and to give the American people back their communities. We are focused on doing that thanks to the President's leadership.
Thank you. And that's a really very small percentage. It's 2%, 3%, but that 2% and 3% wreaks just havoc throughout a community. People are petrified, and I notice a couple of the women in the back are shaking their head, yes, yes, yes. I won't report who you are because you'll end up losing your jobs, but it's true. It's amazing, and the police, and you look at the D.C. National Guard. I saw pictures of them last night getting off vans and all, and I saw some bad ones running, but they're not running so much anymore. They're not there. They're just not even. They're not even trying. You're totally safe. Now, there'll be something happening sometime. I don't know. Maybe it won't be for a long time. But this was every night would get reports of people being mugged and killed. There's one woman on television last night. She had a badly busted up nose. And she said, well, I like our streets the way they used to be. And she thinks it's going to happen like by doing nothing. And they say, what happened to your nose? She got slugged by a guy walking down the street. Slugged. Her nose will never be the same, I guarantee you, unless it takes a pretty good turn. She wasn't really for us. But she sort of said, well, maybe something has to happen before this happened to me. She got whacked. And I don't think she'll ever be the same. She almost became, she was a half a Trump fan, a woman that would have never been a Trump fan, but she was hit hard. It's not going to happen anymore. Not going to happen anymore. But then we're going to beautify the city, too. That's where I was today at Kennedy Center. And we're going to beautify the city like it has it. And we're working with Clark Construction, the biggest construction company in Chicago, and in Washington. And the head of Clark is great. He's all over the world, actually. But Washington, I would say, is their home. That's where they do the best work, the biggest work. And they're they've been doing a fantastic job. So you're going to have a fantastic, clean, beautiful place. It's going to be better than it ever was before. Literally better than it ever was before. We'll get it done very quickly. And I want to thank Clark because they're doing a lot of work in a lot of different locations, but they've been fantastic for getting us the right contractors and the people that can really do the job right. And Johnny, did you want to say something?
Yes, I have one more thing, because as you rightly say, you know, with security and beautifying cities and the whole country, we want people to come and enjoy and have fun. And that's why this is not just the most iconic trophy in the world of sport, but we start on the 10th of September the sale of tickets for the FIFA World Cup. And we have the first ticket here for the final.
Good. Wow.
For you.
Oh, good. Wow.
It's, of course, row 1, seed 1. It's ticket number 4547. And it's for the final in New York, New Jersey.
That's great.
And so you have your ticket already for the final. All the others, 10th of September, start getting your tickets.
That's beautiful, yeah.
6.5, 7 million tickets. Fans will enjoy the security here. Will be fantastic.
You're going to do record business, I think.
100%.
Christy, would you like to say something?
Yeah, Mr. President, millions of people will come to this country, and we'll make sure they get their travel documents, their visas, that they want to come here and spend their money and enjoy this sporting event. It'll be the largest event in the world. And sir, you're reminding me of something that my dad used to say all the time when I was growing up. He would say, Christy, you kids need to look like you respect yourself before anybody's going to respect you. And in this country, when people look at our streets, when they look at our capital, you're bringing respect back to this city. And people will respect our country more because it's safe, it's clean, it's beautiful. And what you're doing is transforming this nation by making sure that our laws are upheld. And millions of people are going to come and be able to enjoy it next year, and I'm excited about that. Thank you for doing that.
Well, our country is respected again. And a year ago, we had a dead country. I'm telling you, it was a dead country. It was a country that had lost its way. It was a country that was going to fail. Look, even today, where they say $4 trillion in reductions of deficits, and this was totally unexpected. They didn't expect it. I mean, I don't know where they've been, the people that do this stuff, but it's terrible. I want to thank Christy for another reason. I said to her 2 weeks ago, I said, Christy, do me a favor. I built hundreds of miles of wall I built the same wall that the Border Patrol asked me to build. It wasn't my first choice. I wanted to do concrete plank and everything nice, but you wouldn't have been able to see through it. So I had Border Patrol in, and they tested everything else. And we gave them steel wall, high-grade steel, very hard to cut. Then we gave inside that is 9,000-pound concrete, which is a very tough concrete. Inside that is rebar, a big, fat piece of rebar. So you have all different materials that are very hard to cut, and you need different instruments to cut each one. And I said, Kristen, we got to get a coat of paint on it. And I didn't know she was listening, but I said, we got to get a coat of paint, and it should be black, because black makes the steel very hot. It's untouchable. You could fry an egg on it. And if you got a good black, flat paint, it would look beautiful. It will preserve it from rust. And that was it. And I gave it to her along with 30 other things, and she's done such a good job on the border with Tom Holman and the group. Tom Holman's a fantastic guy, what the job he does and the way they work together. So I turned on last night and I see Christie's painting the wall. And it looked beautiful, by the way, when that paint went over there.
And it's hot.
It's hot.
Yes, it is.
It's hot. If it's white, it's not hot. If it's black, it's going to be very hard to climb that sucker. It's not going to be easy. But it's black and a high-quality black. You know, it really looked good.
Yeah, we got
Is
the
that going
paint
to be
you
a
told us
two-coat
to.
job or a one
No,
coat?
just one coat.
One coat.
We
Good.
used the paint you told me to buy.
Yep. The two-coat will take
One
place
coat.
in 3 years from now.
Write that down.
We'll do the second coat. But it looks beautiful.
We'll be
But
on the
thank you very
midterm.
much. I didn't know you were listening to that, because we talked about 7 different subjects, and all of a sudden I see her out there painting with a lot of painters and everything else. But it was a beautiful thing to say. Would you like to say something? You've been such a big part of this. Please.
Well, just, Mr. President, we're delighted to be here today for this announcement, but we're also looking forward to having you at the final.
Oh, yes.
On July
Oh, yes.
19th
No, we'll be
in New
there.
York, New Jersey.
We're going to be there. A lot of people are going to be there.
A lot of people.
I'd like to thank you all. Do you have any questions on FIFA, first of all?
It's going to be a big event at the Kennedy Center. Do you intend to take part in it? Will you have a part to play on December 5th?
I may play. I mean, I see the money that these soccer players, we call it soccer, but I see the money that these soccer players are making. I may try and play. I'm a very good athlete. My son is a very good athlete, and he's a good soccer player. He's on the tall side for soccer. Yeah. He's 6'9". That's pretty tall.
That's pretty tall.
It's on the tall side.
He's good.
It's on the tall side, but he's good. But no, I may put on shorts. I look extremely good in shorts and join the play. No, it's going to be a lot of fun. It's going to be good.
Many foreigners who want to come to attend the event are concerned about the visa situation. Can you reassure them?
Yeah, and they're going to have a very easy time getting in. Certain countries are going to be very, very easy, and other countries are going to be obviously a little bit more difficult. Would you like to explain that, Kristen?
Yeah, absolutely. We have a process set up that we'll be implementing on getting visas approved. Everybody will be thoroughly vetted, but they'll be welcome to this country. It'll happen quickly, and we're excited for them to come. So I would hope that around the world people know that the United States is excited to bring their family here to enjoy this event.
America welcomes the world.
Yes.
And I can really, from the collaboration that we have, testify for that, absolutely.
And I just sent a picture from somebody that wants to be there very badly. He's been very respectful of me and of our country, but not so respectful of others. But I'm going to sign this for him, but I was sent one, and I thought you'd all like to see it. That's a man named Vladimir Putin, who I believe will be coming, depending on what happens. He may be coming, and he may not, depending on what happens. We have a lot of things happening over the next couple of weeks. So, but I thought it was a nice picture of him. Okay of me, but nice of him. So that was very nice that it was sent to me. Okay?
Mr. President, on that subject, have you talked to Vladimir Putin about the fact that yesterday a big U.S. factory was hit in a Russian airstrike in Ukraine? What's your reaction to
I
that?
told him I'm not happy about it, and I'm not happy about anything having to do with that war. I settled 7 wars, and actually, if you think about pre-wars, add 3 more, so it would be 10. I thought this would be in the middle of the pack in terms of difficulty.
That made it worth it.
I'm not happy about anything about that war.
That made it worth it.
Not happy at all.
That,
See what
I'm
happens.
happy we waited.
I think over the next 2 weeks we're going to find out which way it's going to go, and I better be very happy.
How long are you willing to wait, Mr.
A very good
President?
call with Prime Minister Carney of Canada yesterday morning.
Yes.
Actually, Canada is taking away some retaliatory tariffs.
He's
so-
removing his tariffs, yeah.
Exactly.
He's removing his retaliatory tariffs, which I thought was nice. And we're going to have another call soon.
Okay.
Yeah, we had a very good call.
You're getting closer towards an
Well, I
agreement
like 'em.
country?
I like them. You know, look, I'm fighting for the United States. Canada and Mexico have taken a lot of our business over the years, over 25, 30 years, especially during the Biden years. They took a lot of our business, and it's basically all coming back into the United States now. We're hot as a pistol, and it's coming back in. Because of tariffs and the incentives we give, it's coming back. And it's impossible, I think, for another country to stop it. And we are working on something. We want to be very good to Canada. I like Carney a lot. I think he's a good person. And we had a very good talk yesterday. So I think it'll be good.
Mr. President, I have a question about the search of Ambassador Bolton's home. The Vice President recently just did an interview saying that it's about classified documents, but that there's also broad concern about him. What are the concerns that you
I haven't
have?
spoken to Pam in the group yet, but I will be. I saw that just like everybody else. I try and stay out of that stuff. I'm allowed to be, and I'm chief law enforcement officer, believe it or not. You know, I don't like to go around saying that, but I am. That's the position. But I purposely don't want to really get involved in it. I'm not a fan of John Bolton. I thought he was a sleazebag, actually. And he suffers major Trump derangement syndrome, but so do a lot of people, and they're not being affected by anything we do. I don't know anything about it. I just saw that. I'll find out about it. But if you believe the news, which I do, I guess his house was raided today. But my house was raided also, called Mar-a-Lago. They went through everything they could, including my young son's room and my wife's area. They went through her drawers, as the expression goes. They went through everything you can imagine. And when she came back, she said, she's very neat, you know, she's meticulous. And she looked and she said, whoa, this wasn't the way that she had it. So, you know, so I know the feeling. It's not a good feeling. Thank you.
Mr. President, on Ukraine, how long will you give Putin?
A couple of weeks. We're going to figure it out. We'll find it.
Do you think you'll have to intervene at some point?
Look, it takes two to tango. You understand that. I wanted to have a meeting with those two. I could have been at the meeting, but a lot of people think that nothing's going to come out of that meeting. You have to be there. Maybe that's true. Maybe it's not. But we're going to see. In the meantime, people continue to die. But I've solved 7 of them where they were in wars for 31, 35, and 37 years. We had 3 of them that were for more than 30 years, Johnny, and I got them solved. And we solved one that could have been a nuclear war with India and Pakistan. That was getting ready to be a nuclear war. I solved them all. And this one, I thought we would have had it done by now, but it's more different. There's a lot of anger, a lot of hatred. There's a tremendous amount of hatred there. So. But we'll see what happens. I think in 2 weeks we'll know which way I'm going. Because I'm going to go one way or the other. And they'll learn which way I'm going.
Mr. President.
If I got 2 questions for you, one on FIFA, the other one on DC. Can you talk about the economic impact that FIFA will have in these cities, and what's your message to the mayors to get their cities prepared, not only the beautification process, but also the safety aspect?
Well, Los Angeles is an example. You know, it's poorly run. We have a mayor there that can't even get permits to the people that lost their houses. Lee Zeldin got every permit. The hardest permit is the federal permit. Within 20 days, every single permit was there for the people to build their houses. But people are writing us and they're saying they won't give us. The mayor is incompetent. The governor is incompetent. You know, Gavin. I know Gavin very well. He's an incompetent guy with a good line of bullshit. And he doesn't get the job done. And frankly, those people want to build their houses. It's terrible. They could have been built. Some of them could have been built already. But think of it, the federal government that has the most complex part, it's the most complex environmental thing to do. We got it, everybody had it within 30 days. And they're not even close to getting their permits. And now they're talking about taking some of those sites and building low-income housing on them. These are high-end neighborhoods. And I'm all for low-income housing. I built a lot of low-income housing. I know all about 236. I know every program that there is in the government. I used every one of them. I know more about low-income housing than probably almost anybody. and it's great. It's fine.
The Lord of Low
You don't build it
Income
in,
Housing.
Pacific Palisades. You don't build it there, and you don't build it in the other areas that burn down. So they're talking about putting up low-income housing. And you talk about riots. They're going to have riots if that happens because you're taking the people's property away. They want to build their houses, and they're unable to get permits from the mayor and from the governor. And that's a terrible thing. But, and let me tell you, if I didn't send in the troops in Los Angeles, Johnny wouldn't be in Los Angeles. You wouldn't be having your World Cup there. I sent in the troops, and we kept it. And even the police commissioner, the sheriff and the police commissioner, they all said the same thing. They said, we could have never handled what was happening. You saw that, you were there. He said, we could have never handled what was happening. And then you hear Gavin Newsom, after it's all quelled, you hear Newsom get up and said, we could have done this for ourselves. No, they couldn't have. And if they could have, I wouldn't have taken the chance.
Does anyone know what the fuck's going on right now?
Is on crime prevention. Would you be open to expanding the national concealed carry to apply to D.C. like it does in other states like Texas?
Does anyone know what's going on?
Well, they have it in some states, and they feel strongly about it. As you know, I'm in favor of it. People have to protect themselves. I'm a Second Amendment person, very simply. People have to be able to protect themselves. Especially like in Washington, you walk down the street, a guy comes up and slugs you. He's got a pistol in his hand. You can be tough. You can be in great shape. You can be a powerful person. Or you can be a guy that weighs 100 pounds with a gun in your hand.
Right.
And I'll bet on the guy with a gun 100% of the time, right? And so you need protection. So I'm a Second Amendment person all the way. Yeah, please.
President Trump, you said this morning that you were working with Congress to get $2 billion to help clean up D.C. Have you had any conversations with Mike Johnson and John Thune about where they're going to get that money from?
Which money?
You said this morning that you're going to get $2 billion from Congress to help clean up
Yeah,
D.C.
I've spoken to Mike Johnson. I've spoken to John Thune, the Senate, the House. And I think it's going to be very easy to get. It's going to be not a lot of money. I wouldn't even know where to spend the number that you mentioned, but it's going to be money to beautify the city. Yeah, they're ready. Everybody wants to save D.C. In one way, it's the easiest. The violence was more than any other city in the country, actually, by far. It may have been more than any other city in the world, if you could think. We looked at some of the worst cities in the world. It was worse, and that's why it angers me to see the mayor saying about how they have it on the slide. Not on the slide. It was worse than ever. We have no problem getting that money. That money will come out of Congress. I think it'll be even bipartisan.
And is the plan
I would imagine Democrats would vote for that one.
Is the plan to get it before the September 30 spending deadline on the Hill?
Well, I don't know if there is a deadline, because if I declare a national emergency, which this was, that ends the deadline. So, I keep seeing about a 30-day deadline, of which we have 22 days left or something. But if I think we're in great shape here, that's one thing. But if I don't, I'm going to just say it's a national emergency. And if I have a national emergency, I can keep the troops there as long as I want. If people are not going to want to have the troops. And 30 days, it's one thing to get them out. It's another thing to keep them out for a long period of time. You've got to train people. You can't do this. You can't bop people over the head. And a lot of those people are in courts right now, going to court. They're going to go to jail for a long time. So that's going to take more than 30 days. But if I have to, I'll declare a national emergency, which I don't think I have to do. Yeah.
Mr. President, Ukraine and Russia, you said in 2 weeks you'll know whether you go.
Yeah, I think I'll know. I think I'll know the attitude of Russia and, frankly, of Ukraine. It takes two.
What are the 2 ways you can go at the end of 2 weeks then?
Well, then I'm going to make a decision as to what we do. And it's going to be a very important decision. And that's whether or not it's massive sanctions or massive tariffs or both. Or do we do nothing and say it's your fight? Look, I would have never been in this war if I were president. You wouldn't have had this war. It was never going to happen. This was caused by stupid people that fought. And people say, well, how do we know? Because for 4 years, it was never even a subject. And Vladimir knew, and you see his picture right here. It was nice that he sent, but Vladimir knew very strongly we wouldn't have stood for it. It wouldn't have happened. 100% wouldn't have happened, but it did happen. And now they're losing from 5 to 7 young kids. Think of it, you're a parent and your son is leaving. He's Russian or he's Ukrainian. And he's leaving and they're waving goodbye. Nice, beautiful kid. Nice crew cut, all set. He wants to be a soldier. And He goes there the first week, he has his head blown off. And he's no different than you people, me. And it doesn't matter where. I mean, I solved a problem in the Congo that was vicious. Rwanda and the Congo, the Republic of the Congo. And they were fighting for 31 years, and it was machetes. People were getting their heads chopped off. That was going on for 31 years. I got it solved. You saw it. They came to the White House. We signed an agreement. It was amazing. People can't believe we got it done. I'd love to stop killing. I really do. People thought it would be just the opposite. Hillary Clinton said, "Oh, he'll get us into a war." No, I'm getting everybody else out of wars.
Are you saying there's a real possibility then that you do nothing if Putin doesn't come to the table for a ceasefire?
I'll see whose fault it is. If there are reasons why, I'll understand that. I know exactly what I'm doing. We're going to see whether or not they have a meeting. That'll be interesting to see. And if they don't, why didn't they have a meeting? Because I told them to have a meeting. But I'll know in 2 weeks what I'm going to do. I have pretty good ideas.
Your Justice Department is also sending some of the Epstein files over to the House Oversight Committee today. Are you in support of them releasing all of them?
I'm in support of keeping it open.
If they want
Innocent people shouldn't be hurt, but I'm in support of keeping it totally open. I couldn't care less. You got a lot of people that it could be mentioned in those files that don't deserve to be. People, because he knew everybody in Palm Beach. I don't know anything about that, but I have said to Pam and everybody else, give them everything you can give them, because it's a Democrat hoax. It's just a hoax. The whole Epstein thing is a Democrat hoax. So we had the greatest 6 months, 7 months in the history of the presidency, and the Democrats don't know what to do, so they keep bringing up that stuff. But it affected them. Bill Clinton was on his plane and went to the island supposedly 28 times. I don't want to bring that up, frankly. You have Larry, whatever his name is, Summers, the head of Harvard, who was Jeffrey Epstein's best friend. Nobody ever talks about that. But I don't want to hurt Larry Summers, but he was best friends with Jeffrey Epstein. No, this is a Democratic hoax to try and get the significance of what we've done over the past 7 months. Nobody's ever seen anything like it. They say it's #1 in history. What we've done, including stopping 7 wars. I mean, just include that. And now you look at the stock market today. It's way up to start off with from where I took it. And this market was going to crash. If Joe Biden or Kamala were president, this market we would have had a crash like in 1929. You're not going to have that. It's only a question of how high is it going to go. You know, I had the strongest economy in the history of our country. And despite COVID, we had the strongest economy in the history of our country. And we're going to blow it away this time. I was always good at making a lot of money. And whether it was for myself or whether it was, I like doing it this way better. I mean, I like making it for the country. Our country's been ripped off by friend and foe, nations all over the world ripped off. And the friends have been much worse than the foes for the most part. And they're not ripping us off. We just signed a deal with the European Union. They're paying us essentially $950 billion, like a signing fee. They're going to buy $750 billion worth of energy. They weren't buying much of our energy there. And they're very smart in doing it. And as you know, Ursula was here a couple of days ago having to do with the people, the leaders that we had a great, people said they've never seen anything like it, where we had the leaders of Europe right here in the Oval Office. And she's so happy that she has an agreement. But people aren't ripping us anymore. We're run by, this country is run by smart people now.
Mr. President, in Israel...
Two questions. One is that Intel. There have been reports that you're considering taking a stake in Intel. Can you tell us about
the 10%?
About the 10%.
Yeah, I met a man. He was a very nice man, and I called for his removal because I saw something by a man named Tom Cotton, a senator from Arkansas. He's a great guy, friend of mine, supporter of mine, big supporter. I'm a supporter of his too. And he wrote a pretty nasty story about the head of Intel. And I said, well, if that's right, he should resign. And he came in, he saw me, we talked for a while. I liked him a lot. I thought he was very good. I thought he was somewhat a victim, but you know, nobody's a total victim, I guess. And I said, you know what? I think the United States should be given 10% of Intel.
Order submitted.
I would consider that. I said, well, I'd like you to do that because Intel has been left behind, as you know, compared to Jensen and some of our friends, NVIDIA, some of the people, and the people in, because Intel should have never been. Intel was the biggest most powerful chip company in the world. And then they started leaving. And they started going to foreign countries, in particular Taiwan. And if we had a president that would have said, okay, you can go to Taiwan, but we're going to put a 100% tariff or a 200 or 300 or a 500% tariff, anybody that sells into the United States has to pay. They wouldn't have left. They would have never left, and we wouldn't have. So in the meantime, we had people that were, in some cases, good politicians that weren't good on trade. I loved that man, but he was not good on trade. I totally disagreed. He allowed the car industry to be taken out of this country. We lost 50% of our car industry. But that's all coming back. It's all coming back. But if somebody would have said that with Intel, would be a giant right now. Now, with that, they've had some bad management over the years, and they got lost. And I said, I think you should pay us 10% of your company. And they said, yes. That's about $10 billion. I don't get it. This comes to the United States of America. And I said, I think it would be good having the United States as your partner. He agreed. And they've agreed to do it. And I think it's a great deal for them. And I think it's a great deal. He walked in wanting to keep his job, and he ended up giving us $10 billion for the United States. So we picked up $10 billion. And we do a lot of deals like that. I'll do more of them. If somebody has, like we have restrictive covenants with Jensen. We have, it's NVIDIA. And to unrestrict the covenant, nothing to do with losing our powers or military or anything, because that I wouldn't do. But there are things you can do that don't affect us, that actually help us. And if we're going to give somebody a free out, a restricted covenant, we have a strong restrictive covenant on certain industries. And I will absolutely give somebody a opening on a restrict to do a lot of business, which is good for us, as long as it doesn't hurt us in a security or military way. And if I do that, I think the country should be paid, because anybody else, I have it in real estate where I'll have a deal with somebody and I'll have them restrictive covenant. Then they'll come back and they'll say, I'd love to be able to build over here, but I'm not allowed to because you have me covered, you have me restricted. I say, I'll let you build over there, but pay me a lot of money. No different. But the country never did it because the country was run by foolish people.
Mr. President, on DC crime, you said Chicago might be next.
Chicago might be next.
Are you making, have there been concrete steps that the administration is taking
No,
to do that?
I
Or what are
haven't
other
spoken.
cities as well?
I haven't spoken to the mayor. He's grossly incompetent. I haven't spoken to the mayor. No, when we're ready, we'll go in and we'll straighten out Chicago, just like we did D.C. Chicago is very dangerous, great place. I built great stuff there. I have the most beautiful building in Chicago, I think. But I hate to see what's happened to Chicago. Chicago is our greatest city, actually. Bob Tisch, a great friend of mine, passed away. He used to own the Giants and very successful Lowe's. He said Chicago, I think they had their main office in Chicago. He said Chicago and San Francisco are the two greatest cities in the world. Now you look at what the Democrats have done to San Francisco. They've destroyed it. I own a big chunk of the Bank of America building in San Francisco. And, you know, it's just different. We can clean that up too. We'll clean that one up too. Now, if everything works out, and we've already had calls from other cities, quiet calls from Democrats. We'd love you to come here, because they've lost control of their cities. I'm not going to say because I don't want them to lose their elections. But we've had calls from Democrats and calls from people generally. We'd love you to come here, because we'll straighten out the problem.
Mr. President, in Israel, the families of hostages are opposed to the reoccupying of Gaza. Why is the U.S. still
Well, not
supporting
all of them. And you have to understand, I'm the one that got all of the hostages out. You got a lot of people out. If it wasn't for me, they wouldn't be out. I worked with Bibi and I worked with Steve Witkoff. But if it wasn't for me, you would have all these hostages would most likely be dead right now, every one of them. So they all come up here. They come in groups of 10, 12, 13, and many of them, and I've gotten to know a lot of them. They're great people. What they had to go through is incredible. But so now they have 20, but the 20 is actually probably not 20 because a couple maybe aren't around any longer. It's a terrible thing. No, I don't like anymore. I said, you know, when you get down to 20, they're not going to make deals anymore. And they didn't. And then I put out a statement, as you know, there was a tough statement, go in and get them. And they said, we'll give you 10, we'll give you 10. I don't know what Israel's doing, but they were willing now immediately to give us another 10. The situation has to end. It's extortion and it has to end. and we'll see what happens. I actually think they're safer in many ways if you went in and you really went in fast and you did it. And people can't forget October 7th, remember that. I'm friendly with all groups. I won the Arab vote in Michigan. I did so great with the Arab vote, remember? I started off at 0, I ended up winning. I wouldn't say the candidate was the greatest, but I would have won against anybody. They're great people. But we have to do things properly. And I'm very proud to say I got the hostages out. You have hundreds of people that are living now because of me. And now we have that final little group of people. And Hamas knows that if they give them, that's probably the end of their lives. So it's not easy to get. And I know if you're a parent, you just don't care. I want my baby back. They want their babies back. They want their kids back. And I understand it. But I got them out and did a good job. And we're doing everything we can to get the hostages out. Thank you all very much. Yes?
So Jackson Hole, J-Pow today said, he suggested that they might cut interest rates, but they have to proceed.
Well, we call him too late for a reason. He should have cut him a year ago. He's too late. We have a stock market that's up 1,000 points today. I better be careful because I go out there and I'll see it's down 1,000, right? But it's up 1,000 points when I came in here. We have a country that the market's the hottest it's ever been. The country is better than it's ever been. We have a military that I rebuilt largely in my first term. We had a great, successful first term, but this is going to be even better. But we rebuilt it. We gave a lot of it away to Afghanistan, but relatively small compared to the overall. But I think it was the most embarrassing day and period in the history of our country that they allowed those 13 wonderful people, but it's really hundreds of people were killed. And they don't talk about the 48 that were so severely wounded with no legs, no arms, nobody ever mentions them except me. But that was the worst day, it just showed how incompetent. Frankly, if that didn't happen, I really believe that you might not have had the problem with Russia. I think Putin was sitting there watching these stupid people running our country and said, this is a time to invade. This is a time. And then Biden made the statement, well, he can do a small incursion. When he said that, it was off to the races, right? When he said he can do a small incursion, remember that? I was surprised he knew the word incursion. I didn't think he had that good of a vocabulary. I want to thank everybody. It's very important to me and to everybody up here, the World Cup. And Johnny has been so incredible. I mean, he's really a great leader. I mean, to think, I said, Johnny, do it by phone. You don't have to come. No, he said, I'll come. And he flew all night long to be here and listen to this about how great we're doing in D.C. But he's a fantastic leader. And this will be your most successful World Cup ever. Thank you, John.
Thank you so much. America will win. Yeah, can we win it, Mr. President?
I don't know. I watch some of those teams go around. They go down that field. I don't know. But let me ask you: what chance does America have of winning?
Well, the home team always has a good chance to win. It depends
See,
how
he's
it
a good
starts. No, but it has some good
we have a
players.
shot. We have
of course. Of course, you have a chance.
Will Barrett be going to any of the games, Mr. President?
I'd love to have him. He'd love to. He's very tall. Maybe we can make him a goalie. Right? The goalies are very tall now, right?
Yeah, goalies are very tall.
The goalies, well, he'd be a perfect goalie.
100%.
At his height, he'll be a great goalie.
Exactly.
So we'll put him on the American team.
Yeah.
No, but do the Americans have a chance of getting into the quarterfinals?
Yes,
right?
definitely. No, the quarterfinal definitely, but then
Imagine he's like, nah, they fucking
with the
suck,
250
dude.
years of
Hey,
United States.
I'm about
So
to
for
make
them,
money.
They will all feel energized about that.
It's amazing. The talent is really great when you watch these things. I went to the game 2 weeks ago, and it was a big upset. But you look at these people; the way they pass it. It's amazing, really amazing. It's a great art, right? It's a great talent.
It is incredible.
You know the expression. Just a what?
When you draw the names, the matches,
I don't know. That's
an
he's the boss.
That's an interesting proposal.
He's the boss.
We'll discuss that.
It's going to be great, and I think the American team is going to do well. I mean, I hear it's a very good team. Good luck, everybody. Thank you very much.
Thank you.
Thank you so much.
Thank you guys.
Thank you.
You keep a lot of those photos. Thank you.
No, I just got one.
Thank you. Thank you guys for
Well, fuck. Dude, I'm so fucking mentally fried. I don't know. I made a lot of money and now I'm just fucking tired. Shout out to Vanquish, shout out to Apex. Use that code Goonie to get yourself a fat discount. And other than that, enjoy the rest of your Friday. I hope you make metric fuckloads of money. I would assume by the end of the day, we'll probably tag an all-time high. ETH already hit an all-time high. The SPY is very close. NASDAQ not that far away. Bitcoin has a nice recovery. And a lot of our favorite individual equities, they're looking pretty freaking green right now. I have a couple runners left on, but you saw where I'm trying to scale out. I'm not trying to really do anything too fancy with them. So hopefully they lock in. And then we just enjoy the weekend. I will be hitting you guys up on Sunday with an update video. And then we'll be streaming once again on Monday. And other than that, I'll catch you guys in the Discord. I appreciate all the good vibes. Have a good one. Peace.